Hello, everybody. Thanks for coming. My name is Jeff Gibby. It's good to see you on day 5 of the MetaStock conference. And thanks for being here. We have a good lineup today. We've got Buff Dormeier who's going to kick us off. We've got Oscar Carboni. I'm speaking. We have Kevin Nelson and then Ken Calhoun. Really good lineup today. So I'm glad you're here. Also a little bit of a shorter day. You know, it's been a bit of a long week. Yeah, but we still have some really good sessions to go. Let me go ahead and kick things off. Today's demonstration is. Ooh, hold on.
But this CRM sucks.
Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So I hope you enjoyed that. Again, my goal here is I hope you learn about the markets. I hope you learn about different technical analysis techniques. I hope you get some ideas that maybe you didn't have. We've talked a lot about the broad markets, and I hope it's helpful for you. The biggest goal that I have is that you come away with learning at least something. So I want to shout out, thank you to CMT Association, cmtassociation.org. If you're looking to get an accreditation behind your name, the CMT designation, that could help you if you want to work for a bank. If you work for a bank already and want to get more assets under management, if you want more responsibilities. And actually, we're going to have CMT come in and talk about how that can be beneficial tomorrow during our Saturday session. If you want to find out more, in the meantime, go to cmtassociation.org. Okay. Also want to say thanks to Technical Analysis of Stocks and Commodities magazine. They've been making magazines since 1982. They've got 17,000 articles that you have access to as a subscriber. If you want to subscribe, the cost is actually relatively inexpensive. Like I think a year is about $100. You can go to www.traders.com. I want to say thank you to Stocks and Commodities for sponsoring the event. Also want to invite you to join the Traders Forum online trading community. It's free. With there, you can market chat with other traders. You can get ideas. We talk about technical analysis, technical indicators. We have special guests. We do interviews. It's a lot of fun. There's a lot of stuff to learn about. It's designed to be a community of traders to help other traders. And we've been working on it for a little bit now. We're almost up to 1,000 members, and I'd like to invite you to be one of them. TheTradersForum.com. We are, of course, MetaStock. MetaStock we'll be talking about today. It's been rated number 132 years in a row by the readers of Stocks and Commodities. You can get a special trial where if you buy a month, you get the second and third month for free. MetaStock.com/conf promo. So I think that gets the business out of the way, gets the legal out of the way. Let's go ahead and get to the stuff you came here for. Buff Dormeier is our first speaker. Buff is a CMT, Chartered Market Technician. I just talked a little bit about those guys. He won a Dow Award, which is a pretty prestigious award given by the CMT Association. His work in volume has been pretty, I'm looking for a good adjective there. It's been great. He's just done some really good work around volume, looking at volume, analyzing volume. He's got a volume-weighted MACD and a lot of other stuff that he's going to talk about right now. Buff, let's go ahead and get you started. If you have questions as we go, I want you to feel free to ask them in the questions box and go to webinar or in YouTube. And let me go ahead and I'm going to send you a webcam request, Buff, and I'm also going to send you a screen share. But I'm going to wait for the webcam to turn on so that you're not getting too many pop-ups at the same time. Can you hear me, Buff?
I can hear you, Jeff. Thank you.
Oh, right on. Okay. I'm like, this was working just a second ago. All right, let me go ahead and turn this on for you too. Let me make you the presenter. It should ask if you want to share your screen. How do I do for the intro?
Oh, you did fantastic.
All right, good enough. I was going for good. All right. I can see you. I can hear you. You sound great. You look good. Appreciate the suit jacket. You look really well put together. I'm gonna get out of the way. It's your turn.
All right. Well, thanks for all that, Jeff.
Yeah,
And
you bet.
it's a pleasure to join you and your audience today. So as Jeff mentioned, I'm Buff Dormeier. I consider myself a volume evangelist. So today we're not going to turn you instantly into a market guru, um, um, or reveal the holy grail of investments. You might be able to find those offers in your junk mail. Rather, today, what we're going to try to do is to introduce you some new tools, some new applications, teach you some principles that allow you to interpret the charts and improve as a trader and an investor. So if you've been investing long, you know the markets, they're extremely efficient. And think about it this way. Here you have the people with the most money, the most well-capitalized institutions. And what do? They invest. They invest by hiring the smartest minds and giving them top-grade resources like MetaStock. And so going up against them can be a difficult game. But what I'm going to show you here today are some tools that are ahead of the game, most likely way ahead of what the professionals are using. And what it's going to allow you to do, it's going to allow you to follow the money, follow the path of money and what that smart money is blazing. We're going to go to our next slide. Okay, so to give you a little backdrop, Buff Dormeier, I'm the Chief Technical Analyst of Kingsview Investment Management. I'm a professional manager. I manage two ETFs. The Volume Factor Tactical Monarch ETFs employ some of these very principles that we're going to talk about today. Okay, so why is this important to you? Okay, so I said I was an evangelist, so I can't give a talk without giving you a 4-point sermon that all starts with the same letter. And today's letter is going to be the letter R. So the first R is responsiveness. Volume leads price. Okay, so volume gives quicker information than what you can find in price alone. Okay, so changes in volume often occur significantly before big price movements. Okay, so if you think about this, one of the easiest ways to look at volume is when you're looking at the chart, you have price on top and you have volume on the bottom. Just look for the standouts. Often we'll use like green for an up day, red for a down day on that volume. Look for those days that are a big green bar, and look what happens after the chart. Look for a big red bar that stands out, and look what happens after the chart. Volume often leads price. The next R is reliability. Not only does volume lead price, it also confirms price. So think about it this way. If price is the market's testimony, then volume is its polygraph. Okay, because volume validates and substantiates price. Okay, so not only does volume help you identify an opportunity quicker, it simultaneously gives you a higher probability of being on the right side of the trade. So if you can accomplish those two things, then you can decrease your risk because you can identify what is a legitimate trend to one that is likely to fail. And if you can do all three of these things, get in sooner, have a higher probability of being correct, reduce your risk, then you can finally get our fourth R, which is earn a higher return. Okay, so we're going to start with the basics, and it just doesn't get any more basic than price. Okay, but think about this. What is price? So if I buy a security today, what's my opinion? If I buy it, I'm bullish. There's really no other reason why to purchase, right? But in order for me to take ownership, there has to be somebody on their side. And what's that person's opinion? Well, if they're willing to sell it to me, then they must have the opposite opinion. Okay, so in this context, price is the agreement to disagree. One person thinks it's going to go up, the other person thinks it's going to go down, and their agreement we call price. Okay, now think about it this way: price is truth. Price is the market's testimony. It doesn't matter what the talking heads are saying on TV, what that analyst price target is, what a fundamentalist analyst view of intrinsic value may be. A stock is worth what it trades for, and that's it. Okay, price is truth. Okay, now volume, on the other hand, I like to think of it as synonymous with force. Okay, and so if we were to look up force in the dictionary, here's what we would find. Force is a power made operative against support and resistance. Okay, so technical analysis 101. What is support? Support is an area where the buyers reside. The stock goes down. Perhaps some people missed the earlier run and they want to get back in, or maybe there's some fundamentalist people thinking this is where the value is at. But when the stock gets down to support, the buyers come in and push the stock back up. So they're unwittingly supporting the price. So we call that support. Okay. On the other side of that is we have resistance. Okay. Resistance is where the sellers reside. So the stock gets up there. That's where you bought it before. It gets back up to where you bought it. Now you want to break even, so you sell it at resistance. Resistance is an area where sellers reside. Okay, but it often isn't that just that black and white linear. Okay, so what is an uptrend? An uptrend is a rising support line. Okay, and what about a downtrend? A downtrend is a falling resistance line. Okay, now if we move into advanced technical analysis, you come to understand that volume is that force required to sustain those trends. Okay, now if we were to switch dictionaries and we would move into the physics dictionary, and I love physics and its application to technical analysis, but specifically to the area of volume. And so if we looked up in the physics dictionary, here's what we might find. Force is a vector quantity that tends to produce an acceleration. Okay, that confirms what we talked about earlier, that volume precedes price. So, all right, so think about it this way. Okay, remember the Star Wars movie? There was a guy named Yoda, and before the Jedi's went out on their mission, what did he say? He said, "May the Force be with you." Okay, my friends, volume is that force in the exchange market. You take one thing out of my presentation today, remember, volume is that force, and you want to make sure you're going to be on the right side of it. Okay, here's a quick little formula. B equals S equals T. Okay, the buy volume always equals the sell volume, which is the total volume. So the number of shares purchased is always the same as the number of shares sold, which is the total volume. So let's say that you purchase one of the new MetaStock add-ons, all right, and we get a strong signal. Everything's in a line. So what do? We put an order in to buy 1,000 shares of the stock. But unbeknownst to us, there's an institution on that other side, and they're going to sell 100,000 shares. Okay, I'm putting my order in at market because we got that signal. I got to have it right now. But on the other side, the seller's being more complacent. It just hit their intrinsic value, and they want to make sure they get absolutely that price and nothing less. So they put a limit order in. Now here's the question I ask you: who's in control? Me, the buyer with 1,000 shares, or the institution with 100 times as many shares, maybe 100,000 shares, but with a limit order? Okay. Who's in control? The market order or the limit order, the small trade or the big trade? Okay. And the answer is that we really don't know. There's lots of dynamics that are going on. But one thing we do know is if that order is executed and it goes through on an uptick, that demand's in control. And if that order goes through on and it hits on a downtick, then supply is greater than demand. And so this is what we have going on with the stock market: is all these interactions over time, all these ticks, and then what we do is we follow the trend of what those ticks are doing, and that tells us, is the demand in control or is supply in control? And what we're going to do is we're going to take that level analysis deeper, okay, and we're going to look inside what's happening intrinsically with volume to better understand that relationship of supply and demand. So we said that we're going to talk a little bit about physics, and so we're going to cover some Newtonian physics today. And what was Newton's first law of motion? Okay, an object at rest remains at rest. An object in motion remains in motion at a constant speed and a straight line, unless acted upon by what? An unbalanced force. Unbalanced force. Now, think about it this way. Most momentum analysis neglects force or volume. Okay, think about the edge you could have if you were to look at momentum and looked at the force behind this. So we could kind of paraphrase this law of motion and say that volume is the unbalanced force causing price change. Volume is the cause, price is just its effect. Yet most traders and investors are solely focused on the effects and they ignore its cause. Okay, you might consider revising that with some of the information that we share today. So let's take a look at our next we're going to share some slides that introduce the infusion of volume into our indicators. And the first one, Stocks and Commodities magazine. This was my first article I wrote with Stocks and Commodities magazine, and we introduced volume weighted moving averages. Okay, back in this article we called them buff averages. This was sometime I think in the mid 90s. And so what are volume weighted moving averages? Well, the way to kind of explain it is if you were to calculate a 2-day moving average and say the first day the price is 10, the next day the price is 12, the average price is 11. Okay, so if you're calculating a simple moving average, it's 11. Okay, however, there's some information that was neglected. Okay, and we're going to incorporate that when we look at the volume of how many shares are traded each day with the volume weighted moving average. So on day 1, the price again is 10 and 100,000 shares traded. Day 2, the price again is 12 and 300,000 shares traded. So now we know that 3/4 of the volume was on day 2 and only 1/4 of the volume was on day 1. So the average price, what people actually participated, wasn't 11, it was 11.5. Okay, so here you can see in my chart is that we have the red line, which is the volume weighted moving average, and this below is the simple moving average. Here's the candlestick chart. But notice when the volume spikes, how much more responsive the volume weighted moving average becomes. Okay, why we want to do this? Because adding volume to our moving average accomplishes our 4 R's. And we're going to go through this. This is not a blank statement. This was tested. Okay, so we did a test using the scientific method to determine if volume led price. Okay, and what we found out was it led by a lot. 93% of the times in a trading system, the volume weighted moving averages triggered before the simple moving averages, creating more trades. Okay, so not only did we get in quicker, were the signals more reliable. 60% of the time, not only do we get quicker, they were more reliable than the simple moving average, which was only more reliable 28% of the time. Okay, and so did we identify the trend correctly and reduce risk? And about 70% of the time, we had lower drawdowns when using volume weighted moving averages than simple moving averages. And then what we did is we just didn't pick out. We studied 60 stocks, but we just didn't pull them out of our butt. What we did was we picked these stocks based on their characteristics. Okay, so we looked at 4 characteristics. We wanted to look at stocks that had the highest volume, stocks that had the highest volatility, stocks that had the lowest volume, and stocks with the lowest volatility. So we looked at these 4 factors, and we looked at the extremes in each category. Okay, and all that, whether it was low volatility, high volume, or low volume, all categories made more money when infused with volume. And then we also looked at the size of stocks. We looked at large caps, mid caps, and small caps, and all 3 groups produced more money. When we take the 4 types of styles or factors and combine them with the 3 sizes, we get 12 groups. And so 11 out of the 12 produced more profits with volume. So with that, let's move on to Newton's second law of motion. And that's what that says is an acceleration of an object depends on the mass of the object and the amount of force applied. So what this is about, it's understanding the amount of volume, force, or fuel required to move a object, or in this case, a security, a given distance at a particular speed. So understanding the amount of force required to move a security, a given price change at a particular momentum. Okay, so we can kind of summarize this as this: price acceleration or momentum is powered through volume. You got that? Okay, so let's take a look at this study here. This is done by the Wharton School, and sometimes they say, academia and technical analysis they don't blend. Sometimes the fundamentalists don't agree with the technicians. I'm seeing less and less and less of that, particularly on the fundamentalist side, and the academia are coming around too. But volume is an area that I think there's considerably more agreement. Okay, and this is an example here. This is a study again by the Wharton School, And what they did is they looked over multiple decades and they looked at the market, and here's what their final conclusion was: is that and this is the thesis of the paper was the high volume return premium, and this is their concluding statement, that we find that stocks whose trading activity is unusually large over periods of a day or week, as measured by trading volume, during those periods tend to experience large subsequent returns. Kind of what I said in the very beginning. You look at those big green bars, you see the big green bar. Generally, the stock is going to go up. You see a big red bar, generally it's going to continue down. So so academia has done some studies and they agree with our thesis. Okay, but again, it's technical analysis, and academia kind of frowns at that at sometimes. So the University of Texas, they said, yeah, what are these guys at Wharton smoking? What all you got to do is look at the volume to get better signals, to know, to position yourself better. And so what they did is they went out and did their own study, and they studied markets all over the globe to see if this was indeed true. And here is their concluding statement from their thesis statement. So University of Texas here, we studied the existence and the magnitude of the high volume return premium across equity markets in 41 different countries, and we find that the premium, what is it? It's a strikingly pervasive global phenomenon. Okay, so that premium was significant in almost all developed markets and a number of emerging markets as well. So here we have again support from the academia that volume may be something we should consider. Newton's third law of motion. Okay, now just going to give you the heads up right now. This is the piece. This is the missing piece that almost no one knows about or understands, and therefore is not being applied. But this is by far the strongest factor and the key to volume analysis. Okay, Newton's third law: for every action, there is an equal and opposite reaction. Okay, most people don't use volume, especially in momentum. But those that do stop there. But this, again, is the most significant law that generally everyone misses. Okay, and so what are we talking about? We're talking about a delta. Okay, the delta or a symmetry between momentum and volume, and that delta exposes the extent of the force. Okay, so the analogy here is the difference between trend and a volume adjusted trend exposes an asymmetry between price momentum and its volume. Demand pushes, supply pushes back. Okay, we want to see that interaction and study the extent of that force. Okay, that's the key. Okay, so here's a picture of how we might do it with trends. So here we have the red line, the volume weighted moving average versus the simple moving average. What we know that volume weighted moving averages produces our 4 R's. Okay, but how do we find issues that have that volume trait? Okay, the volume confirmation. Okay, and this delta between the two, when it's positive, it says, yeah, volume is confirming. And when if this were the opposite, it was negative, we'd say volume is contradicting. Okay, so here we have a price chart, candlestick chart. Here we're going to use, this is one of the indicators that is in the in the MetaStock toolbox, my MetaStock toolbox, the volume price confirmation indicator. By the way, Jeff mentioned the Dow Award. This is the research that the Dow Award was run on. And notice here that at 0.1, the stock breaks out before, the indicator hits a low before the stock hits a low at 0.3. 0.2, we have a crossover. well before the moving averages cross over at 0.4. So you can see here, the volume is leading price. Okay, so here's how to use this analysis. Okay, so first, some definitions. If the trend is up, okay, think about an uptrend as being greed. Greed is needed. It always wants more and more and more. When you see a downtrend, that's driven by the emotion of fear. Okay, fear says, "Let's get out. We'll get me out now. We'll figure it out later." Okay, it's these emotions that from Genesis 3 that is still driving trading today. Greed and fear. So then there's up volume. What do we say up volume was? Up volume is force being applied or energy. What about falling volume? How does falling volume work? It operates under the laws of entropy. So I'm going to quickly go through this chart, but this is something to take note of here. If you have a trend and the volume's rising, this is greed with energy or invigorated greed. This issue or market is under strong demand. The uptrend is being confirmed by more and more people willing to participate at ever higher prices. The outlook's bullish. Okay, next we have a trend that's up, but the volume's contracting. This is greed, not with energy, but with entropy. This stock is under complacency or weak demand. The uptrend's being contradicted by fewer people willing to participate. The outlook's bearish. Trend is down, more people willing to sell at ever increasing prices. This is issues under strong supply. The downtrend is being confirmed by more and more people willing to sell at ever depressed prices. The outlook's bearish. And finally, we have a trend that's down, but the volume is falling. Fear with entropy. This stock is under a state of apathy or weak supply. The downtrend is being contradicted by fewer and fewer people willing to sell at ever depressed prices. And the outlook for this stock is bullish. Okay, so here's some signals. We want to look and see if the VPCI is rising or falling. If there's a crossover, which indicates momentum, where is VPCI above or below the zero line? And this one's not added in here, but we're also going to look for a pattern. There's one pattern that happens over and over again. That's a V bottom. When you see a V bottom, that's a capitulation sign. So let's take a chart here that shows all this happening. So here we have the stock. What's the trend? It's down. The VPCI is down, but here we get a bullish crossover. And what happens? VPCI crosses zero and the stock goes up. VPCI is going up. The uptrend is being confirmed by the VPCI. But notice here at point 2, we get a cross under. But the stock keeps on moving up. This uptrend is being contradicted by the indicator until it gets to about the zero line, goes underneath, and then the stock tops out and heads down. And okay, the VPCI is going down. It's confirming the downtrend until we get our letter here. What letter is that? The letter V. V stands for capitulation. Okay, market capitulates, and then VPCI starts to move up. Downtrend's contradicted, then the stock goes up, and the VPCI confirms it again. That's how we use the tool. Okay, so VPCI is not meant to be a standalone indicator. It's supposed to be used with trends and trending indicators. But here, what we did is we said, what if we just bought the stocks with the highest VPCI in the S&P 500? So here we bought the top 10% of the stocks in the S&P versus the S&P. So, so here we had the top 50 stocks ranked quarterly by the VPCI. The stocks with the highest VPCI we bought in the red line, and the rest of the market's the blue line. You can see that we beat the market by about 3% annualized per year when we just owned the high VPCI stocks. Okay. Now, what I say about the other thing is V bottom. Okay, so this is when you see the indicator take a deep nosedive and then cross underneath its Bollinger Band. This is a good signal that the market's capitulating. Okay, this is one of my best trades ever. March 9th, 2009. We got in the very low, and what got us in was a VPCI V bottom. Okay, more recently, 2000 VPCI V bottom, happened 2 days before the actual bottom on the 19th here. I also put a letter. You can go if you'd like. You can go to my website, buffdormeier.com, and you can sign up for the weekly letter. That's, I point that out because this was pointed out in that letter. As was this signal here. This is what we call W bottom. W bottom doesn't have to go as low, but when it happens twice in a row, when it's not below this -4, if it happens 2 times on a shallow bottom, then we call that a W. This was also called out in my market letter. This happened September 30th, 2022, which was again the low close. It opened on the 3rd lower, but closed higher, significantly higher on October 3rd. So we got that one on the very day. Okay, so what we're going to do next is we're going to put this into a system. Okay, so what we're going to do is we're going to we're going to combine the BPCI into a system, and we're going to combine it with 2 other indicators. One is we need an indicator that tells us is the market trending. Okay, that indicator is the ADX. So if the ADX is greater than 30, it means the market's trending. Okay, so then we said we need to know what direction, and we used the MACD to do this, and we tested the SPY. And over this period of time, this was let me see, I think it was 93 to 2006. The S&P made about 10%. But if we traded the MACD and the ADX, as opposed to making money, we lost 4. Okay, then we added the on-balance volume to this system, and we cut the losses significantly, only down 1.5. Now what we're going to do, we're going to keep the MACD, we're going to keep the ADX, we're going to drop the OBV and substitute it with the BPCI. And what does it do? It takes a system that lost 4 and we make 8. Okay, that may not seem great, but it's in a bad system. But look, it's only invested 35% of the time. Okay, it has significantly low risk. Okay, and a very strong profit factor, despite being paired with this poor strategy. And by the way, what if you were to back then put the money that's 65% of the time you're in cash in T-bills? Well, you would actually beat the buy hold, even though you were paired with this poor system. This is the annualized returns. Notice there were only 2 years, 2000 and 2002, it had a down year. Again, if you would have put money in cash when it wasn't invested, you would have wiped out those losses and signed profitable years. Okay, now, next thing we're going to do is, if it works this way.
Hey, Buff, I don't know if you can hear me, but I've lost your audio.
Yeah, I also lost it.
I think he can hear me, though, because
I think he can too. Yeah, but
I'm wondering if it lost connection or something.
it's showing that his microphone is still connected. So I don't know what's happened. Perhaps, Buff, if you unplug your microphone and plug it back in, that happens to me sometimes. That seems to fix it.
It's the best.
Can you hear me now?
Yep.
There you go.
You did it.
Can you hear me now?
We can hear you.
We can hear you now. And
apparently he can't hear us though now.
Oh.
Buff, can you hear?
Can you hear me now?
We
Yes.
can hear you. Can you hear us?
Can you hear me?
This sounds like a T-Mobile commercial. Yes,
Yeah,
we can hear you.
We can't. I'm trying to text him.
Can you hear me?
Yes. Mm-hmm. Yeah, we can hear you. You can't hear us.
Well,
I can't hear you.
Okay, I'm gonna go ahead and just we can hear you.
I don't think that's not international for we can hear.
Can you hear me?
Yes, we can hear you. This is funny. Let's see. Do you think he knows how to see the chat?
Can you hear me?
I don't
We can
know.
hear you, but We can hear you.
Yes.
Okay.
Shake your head or nod your head yes that we can hear you.
I can
Okay.
hear you.
Or I'll
We
tell
can hear
what,
you. You can hear us. You can almost pick up where you left off because we caught you pretty quick when you went out.
Okay. Did you hear the part about this is where you can get the system inside of MetaStock in the toolbox?
I don't think I heard
Okay,
that part.
so this is a system. This is
Yeah,
actually a system that you can incorporate in your toolbox. The volume. What do we call that, Jeff? It's the something volume analysis toolbox, or
We call it the Buff Dormeier's Volume Analysis Toolkit.
all right. This is one of the systems that you can actually use. Okay, so how do we take that poor system and make it into a better system? So if we pair it with a good system as opposed to a bad system, think about the damage we can cause, and that's what we did here. And so what we did here, how did we change the system? As opposed to using the spider, we use the S&P 500, its components. And why is that? It's because the S&P doesn't tend to trend much because it's an index. It's made up of 500 stocks with 11 different sectors. Some of them are growth, some of them are value. So, it doesn't have trending properties, but individual stocks don't have that problem. So what we did is, as opposed to using the spider, we used the S&P 500 components. And when we did that, this is the blue line, how much money we made versus the red line of being in the S&P. And when you see the yellow, it just means we couldn't find stocks that met those criteria. Again, MACD, rising, VPCI, and an ADX, okay? So as opposed to making 9.6% return, the strategy returned 17.5%. So with that, we're going to introduce yet another indicator. Okay, this is also in the toolbox, the trend thrust indicator. Okay, what it's going to do is it's going to turn the MACD into a volume-weighted MACD, but with some very special adaptations. Okay, which allow the indicator to be adaptive, to adjust based on what's happening with volume. So it's not only going to be weighted, but it's internally the settings that you put in are going to change. You're not going to see those changes. It happens in the foreground, but you put in the settings. These settings change based on what's happening with the volume. Okay, so give me an example here. Here we got a stock, and then this is the MACD. This would be the volume weighted MACD, and this is our TTI, our trend thrust indicator. Okay, so if you just use the MACD, it works about a third of the time. Okay, 34% of the time the trades were profitable. Okay, that's, if you are a trader, you should know that is to be expected. Okay, if you're in a trend system, stocks trend about a third of the time. It should work about a third of the time. Okay, but what if we could take that and move it higher? And that's what the TTI does. Okay, the TTI moves the needle from 30 to a third to over a half. Okay, so half of the trades in the TTI were profitable compared to just a third in the MACD. Okay, here we looked at those groups again, and you can see that again, almost all the groups that we tested was their low volume, small cap, large cap. Almost all of them made about 50%, and almost all the MACD made about a third. Okay, and all of them, if we're getting trades that are more accurate, quicker, they all made more money. Okay, so the natural question is why would we use the MACD? We just take the MACD out and we'll put in the TTI. So again, the S&P makes $1 million. Now we boost up our return by adding the TTI up to 23%. Okay, now there's one other thing that we're going to do here. If the S&P stocks trend better than the S&P, is there any other index or index components that would trend even better than the S&P? And I think that you know the answer there is the NASDAQ. So now we're going to swap out the S&P and we're going to use the NASDAQ instead. Okay, and look at these numbers here. Huge. I mean, NASDAQ makes 16.5%, and we're up here. Look, 4 million compared to 107 over, so it's 93 to 2023. Okay. Now, with that said, given what's happening with the markets, I thought I'd give you a quick update on the stock market. And one of the things that I look at is how much money is moving in and out of the stock market. Okay, so back here on March 9th, excuse me, that was March 11th, our volume weighted moving average crossed underneath trend. So this is capital moving out of the market. Okay, and so this is the sell signal. This isn't up to date. Last week, this actually went above trend again. Okay, but if we were using the VPCI, which we were able to get back in, and we actually got in on April 11th. Okay, that is actually like the worst signal we ever got, because on the 9th we had a 10% move. So we generally we get in the same day or earlier, and this one was 2 days late. And even if it's 2 days late, it's generally not that much of a move. But this case, it's it was a mega move. Good news though is that the market is significantly higher since April 11th now. So VPC bottom April 11th. Again, if you just get my free newsletter at buffdormeier.com, you could have got that. Let's I'm going to take this off, and how about we look at some stocks? Okay, so we talked about there's several different screens that you have available at through the through the toolbox. Okay. Oops, what happened to it here? Let's see if I can shut this down. All right, and so here are 3 of them, and what we can do is we can just go through here and look and see these stocks for these various screens. Hit the buy, and the ones that have a 1 are the ones that cleared yesterday's screen. I just ran this yesterday. Haven't even had a chance to study these. But let's do that now. What I'm going to do is I'm going to pull these up, and we can just kind of see what's hitting on the screen.
Hello.
Oh, lost it. All right, so our first one here is TRA, okay? And so, this stock just signaled today. Notice we got a really nice base here on the stock, and then a breakout, and now it's come back down, okay? And it's come back down, and the TTI here, look, it's going up nicely, and the VPCI just crossed over. So these are indications that even though the stocks had this nasty breakdown here, kind of washed some people out, it went up and made a new high, and the volume is suggesting that, hey, maybe this is something we might want to look at. Okay, here's Garrett. Okay, look at the price action itself kind of made a V bottom here. The VPCI broke out. The TTI is heading up north. This is all really good signals. This may be a little bit extended though. Look, the VPCI, the red line starting to turn down a little bit. You might want to buy this. This one might look better as opposed to buying now, but on a pullback, maybe to between 10, 10.5 if you can get it. Okay, here's another one. you got a nice move on TTI, but this crossover here, I want to see a little bit more confirmation before I got into this. But otherwise, you got a base here, breakout of resistance. But this is one to watch. We didn't even talk about this indicator right here, but we got a whole presentation on this one. This thing is this one here is really powerful. That's the volume BMI, volume momentum indicator. All right. Oh wow, this one broke out big time. Look at this super long base, and pow, when it broke through, it just went. Okay, this one's actually we got a signal here on this ETF, and look, this looks pretty good here. The TTI is moving up nicely. VPCI is moving up. A little concerned about that, and the VMI going down. But nice breakout here. And you see, when you see this green arrow, that means we got a buy signal. API group. Okay, again, another one that has really made a big move, and it's maybe a little too extended to buy right now. But you can see we got this signal right here. Wow, that was a good one. Anytime you see these red arrows, it means, hey, this is sold. And then every time you see the green and then this exit, means it's time to sell. Okay. Let's see if what other ones we can find. I think this is another. Here we go. Here's another ETF. Oh boy, I wouldn't. That looks a little crazy. This looks like this one might be an ETF too. Okay. All right, you can see that this one here, we got a buy signal way up here. And the indicators are all still up, but it looks like that's kind of made us move. All right, and then wow, another one here with a big pop. Okay, now look at this, is kind of interesting here. I'm gonna change the apply a different template so that we can. This is the one we want right here. Okay, so oops, is. All right, so now we got the TTI on here. You see we got a positive TTI crossover here. VPCI has crossed over the 0 line. And this is stocks have a nice base here. This could be something to look at. I think we already looked at that one. Some of these stocks pull up the same stock. Okay, again, TTI crossover here. VPCI crosses the 0 and is surging up. Looks like a nice rounding bottom. This is maybe one to take a look at right here. That is VSE Corp. If anybody wants to put something in the chat to look at, we can look at those too. Okay, wow, this one really broke out. Look, we got TTI crossover way down here. VPCI came up. VMI is also rolling up, and boom, that thing really really took off. Again, it's extended. If you can get it back here, if it pulls back down to that base, that might be something to keep an eye on. All right, Jeff, are we getting any others? Any others from the chat? Anybody want to look at?
I'm not seeing a lot of symbols coming through, but we are kind of running up on the top of the hour, and I wanted to talk about how people can get the toolkit, if that's okay.
Absolutely. You take it from here.
All right. Buff, I want to say thank you for coming here. Appreciate it. And I'll see you again real soon.
All right. You take care. Thank you.
All right. You bet. Let me do this. Let me go ahead and make me the presenter real quick. I'm going to show my screen. And we will do this. Okay. That should be it. Okay. Here we go. All right. So as Buff said, all of the studies are available in MetaStock. The indicator itself, the one that won the Dow Awards from the CMT Association, is also in there, and it's a really complete package. He showed you how you can go in and run through scans and kind of take a look at stocks who are breaking out. Did a really good job of talking. I do want to actually kind of just talk about everything that's included, because it does have 19 different indicators, including like the stop loss short, the spread, ease of movement, effective volume, all of the indicators that he likes to use in terms of looking at the markets. And of course, they're put in together as a toolkit. So you have the Buff Dormeier volume, trend, momentum, and thrust as systems that are in there. With those systems, you can go in, you can scan against them, you can get expert advice and expert commentaries, a full integration into MetaStock, an expert advisor that helps you understand everything. Really cool system. Normally, the Buff Dormeier's toolkit is $149 a month. If you sign up here at the event, you can get it for $99 a month. And we're also going to give you 3 months for that. So it'll be about $33 a month to try it. You'll pay $99, but you'll get it for 3 months. It'll pair well with the extended trial if you still need to set that up for MetaStock. You can give us a call, 800-882-3040. You can go to metastock.com/conf promo, or you can go to metastock.com/saleschat. All of the offers, the extended trials, everything is available through the link. So big thank you to Buff Dormeier for doing that. This slide's a little bit out of order. Before we go to the next presenter, which is Oscar, I do want to say thank you to the CMT Association for sponsoring the events. They do a great job. You can find out more about the CMT Association at the cmtassociation.org. And Greg, if you're available for a quick minute, I'd love to give away a prize.
I am. I'm right here.
Okay. Okay. Let me think about what we're doing right now. The next prize we're going to give away is from Larry McMillan. Larry McMillan wrote Options as a Strategic Investment, what's considered to be by many one of the best books on trading, particularly with options. He came in and talked earlier. He has a long-running suite of investment newsletters that you can subscribe to, and we're going to give a 3-month subscription to his option strategies newsletter, which is normally a value of about $129. His newsletters don't cost a lot. They're fairly inexpensive to get, and that's what we're going to do. Greg,
when Larry talks, I think you want to. Oh, sorry.
I have a brand new list of people to poll. Just for if you're watching on YouTube, what you'll want to do so that you can be on the prize list is hopefully there's a pinned link up in the comments.
There absolutely is, but I'll put it here in chat again.
Just go to metastock.com/traders-conference or click on the link if you haven't already, and just register for the event. That'll allow you to get all of the door prizes, and we're going to give away door prizes all day today, all day tomorrow. And the even cooler thing is, for most of the door prizes, you don't even have to be present to win. As long as you've been registered, you're going to get them. So without further ado, Mr. Lewis, I need a number, and that number can be anywhere between 1 and 6480.
6480. I think you mean to say 2, but that's fine. Okay,
2.
According to the Google random number generator, oh, it went on the high side, 5358, 5358. What a great price. When Larry McMillan talks, people definitely lean in. He speaks with great authority.
This is Lindsay T. In the USA. Just won that prize. Lindsay T. So congratulations, Lindsay. I'll make a note of that. I'm going to send your information over to Larry's team, and they will send you information on your free newsletter next week. Because it's going to, as we sweep up, we'll go through the prize winners. We'll send them to where they need to be. It's a whole process. It takes me at least a day to get done with these things after we're done with it. Greg, I want to say thank you for helping.
Thank you.
Help.
Carry
Do
on.
you want to, as you know, we have, well, I guess I will. I was going to ask you if you wanted to introduce Oscar.
Oh,
but,
I would love to introduce Oscar. Mr. Carboni, the Oscar Carboni.
Yes.
He's here with us. That Oscar Carboni is here with us right now?
You
I
know,
don't think he really
in
wrote
one of
much
his bios,
introduction.
Go ahead, go for it.
Oh, yeah. Ladies and gentlemen, may I present to you the one, the only, the force of nature, the darling of Wall Street, except I think he's CBOE, Mr. Oscar Carboni.
We love Oscar. Oscar does such a great job. You know, in one of his bios, I can't hear you, Oscar, though.
I was whispering.
Now I can. You know, I was looking at one of your old bios the other day, and I think it's in there. I'm not sure this is in your current bio, but it said the chart whisperer. And I thought that was kind of a little bit ironic. Not that you can't read charts, but I've never heard you actually whisper.
Just now you did.
All right, Oscar, let's go ahead and get your screen share. You look great.
Well, thank you. The thing about a resume is I've never actually applied for a job in my entire life. I don't have a resume. Not once, not ever.
And I apologize, Oscar. Did I say, were you on the floor in Chicago or New York?
City.
New York. I beg your pardon. Of course, New York City. Okay, I'll just get out of here.
All right. Right now, I've got these 3 screens in front of me. What do I just move them out of the way? Do you guys see them?
We can't see those screens, but you can get.
There's just big pictures of me and you, which we don't need. All right.
I'm gonna make your picture.
I need that picture of you, but we don't need one of me.
All right.
So
it's all you. I'm gonna get out of the way.
Let me start with this. MetaStock, incredible what you guys do here to put all of these fantastic educators together and allow us to learn from you, and you do this so often. This is why I've been with MetaStock since I'm an 18-year-old kid. I kid you not. Since the 80s, I've been using MetaStock, and for reasons like this, and you know, their back end is just fantastic. Their customer service is the best in the business. So MetaStock, love you guys. Thank you for inviting me. Good morning, good afternoon, and good evening, traders from across the globe. I am Oscar Carboni. Some of you may know me, some of you may not. I am here to explain something that I've been teaching the Wall Street industry since the 1980s, that there is nothing better for calling future market movement and pricing than the daily or than charts using technical analysis. And boy, have I been able to prove this so many times. And I think today we're going to go on a little journey together, and I'm going to be able to prove to you that don't worry about systems. Don't worry about listening to other people on the phone. Keep the fundamentals off to the side. If you can read a chart properly, between you and that chart is all you will ever need to come up with fantastic trades. Ask any of the thousands of Omniacs that hang around me. I've got Omniacs all over this planet. They trade with me 24 hours a day. Ask them what the Omni produces. Nothing magical. In fact, it's all about simplicity, traders. We want to keep things simple. There's a reason why I keep simplicity in my system at all times. Trading is a very complicated business. It's a complicated industry. And then you become a scientist and you tinker and you come up with a very complicated program and bring it into a very complicated industry. And guess what you've done? You've overcomplicated things. It happens to so many. I promise you, you will see simplicity is the best way to figure out what's going on in a very noisy, complicated environment. So if you don't know who I am, I'll show you something very quickly. I usually do a YouTube video just about every evening. In that video, I basically explain what is going to happen tomorrow. And we do one just about every night. And then we trade that informational data next day. And the next night we come out with another video. They look very much like this. Well, good morning, good afternoon, and God. Well, we're not going to go any further. You don't need to hear that crazy guy right now. So I do a video like that just about every evening. And in that video, I put some charts out and I tell everybody what's going to happen the next day. And then in my live website, we literally enact or take these trades throughout the system every single day. So if you're with me, you'll end up in a live trading room where I am right now. In fact, I'm live. I'm always live there. That's me waving to you. This is absolutely free. It costs $0 to come join me. If you like what you see in this presentation, come join me in my free trading room. It doesn't even require credit cards, kids, nothing. Just go to livewithoscar.com if you like this presentation, and you join me. Not even a credit card will come out of your pocket, so it's great. Now let's go see what's going on out there. Because I told you I film a video just about every night, on Sunday, April 6th, I started filming a series of videos. Now, if anyone remembers what was happening in the first week of April, we were going to have Black Monday. Does everyone remember this? Black Monday, big Black Swan Day. Here it comes. Why? Because Trump mentioned tariffs on Friday, and that's it. It's the end of the world. We had Morgan types, Goldman types, the CEOs. We had the news and media. We had Kramer come out. They were all screaming a big crash on Monday and then a recession to set in. Does everyone remember that? I don't think so. I used technical analysis, not the fundamentals. That evening, Sunday evening, before the markets ever opened for the big crash Monday, I released a video before 6 p.m. to make sure everyone got that video. I released it about 5 p.m. The markets would open at 6 on Sunday, the night that we're supposed to have the tremendous crash, or the next morning. And the title of that video was, "Do not bail out of the stock market. Wall Street support is on the way." And what that looks like is this. I have a series of videos that I started on the day that we were supposed to crash. And it says, let's just show you the titles of these. It was an amazing moment in our time. We're down here. So we said, do not bail out of the stock market. Panic. Do not panic out of the stock market. Wall Street support is on the way. The video was released April 6th. We didn't crack till April 7th. The next video that came out was part 2, don't panic. Don't get out of stocks. Wall Street support is on the way. The next video the next day, don't panic. Don't get out. Wall Street support's on the way. The next video, 4th, don't panic. Don't get out. While the street is losing their minds and bailing out of funds, I'm putting out videos stating, don't dare listen, just follow the charts. So let's go see why. In those videos, I was using the exact same charts that I'm going to go over with you right now. So the title of that video series was, do not bail out of the stock market. Wall Street support is on its way. I grew up on Wall Street. I know what they look for. I started as an analyst on Wall Street as a kid, 18 years old, with graph paper and the pencil, and you kept X's and O's because the computers weren't available and they didn't do charting when I started. I've been part of technical analysis that long on Wall Street. I promise you I know what they look for. Watch what happens in this video. So the other thing is, as soon as the tariffs were announced, I have a live trading room, as you've seen. I have likened these tariffs, and I've said this many times to my Omniacs in my trading rooms. I've said, the USA decided to raise its rents on ports of entry and its docks. How the hell is that going to wreck the US economy? And I kept saying it over and over again. It's a stupid reaction. How could raising the rent on pulling up on our docks, or sending stuff to this country, how could that wreck the US economy? You know what I'm saying? Overreaction? Yeah, I can see that. Could it wreck the economy? How does that make sense? So this has been my take since he started. Since Liberation Day, my take has been, there's just no way raising rent to do business in this country is going to wreck the economy. Doesn't make sense fundamentally. Well, The charts did not agree with that either. They still do not agree now. There's no way raising rent to do business with the US is going to wreck the US economy. Made no sense. So this segment is going to be called Interest Rates, Tariffs, and Talking Heads versus Charts and the Omni. And let me show you what that means. So now that we've discussed April 6th, people were losing their minds, expecting April 7th to be the biggest crash day leading into a recession. And when you get CEOs of Morgan and Goldman coming out saying things like that, I mean, that's supposed to be real, right? Well, the same time that they were doing that, Oscar was informing his Omniacs of things like this. Let's go through the anatomy of what happened. Traders, here's what's interesting. When this drop started, I informed all of my Omniacs, did series of videos, and I told them it's because we're dropping because Powell stopped lowering interest rates. When you stop lowering interest rates, it's the same thing as turning off the music at a party or calling last call at a bar. Once you turn off the music, the party usually empties out. Well, when you stop lowering interest rates, you've given the market no more reason to move higher and the party empties out a little. So it started with Jerome Powell saying no longer are we going to lower interest rates, and that sort of started to empty out our little party that was going on. And look, the party was fantastic. It just kept going. It literally went right up until Powell made his announcement, and then we started to go down. As we started to break and we got down to somewhere around here, I started to do calculations. If we continue to go lower, I know where we will go and I can map it out for you. Well, as it turns out, Trump decided to announce tariffs on that Friday and the markets started to go towards the projection. And let me show you the power of technical analysis. None of this has happened yet. Tariffs are not announced. We're only down a few days, literally, or a few weeks from the Powell not raising rates anymore or not lowering rates anymore. And I mentioned that we could literally drop to between 47.95 and 47.75. If this starts to go, that's where we'll drop to using technical analysis, not the street, not the news, not the craziness. And I also said, do not get out, buy when we get down there. I'll give you the levels. When we get there, buy when we get there. Don't be afraid. This is what happened on Monday, and that's what happened on Tuesday. So what does that show you? It went down to 48.32, which is right between 49.75 and 47.75. Stopped cold. The next series of videos that came out were these. Now we're going to have something called the holiday reversal. This is a holiday week. So we're not going to go up this week. We're going to have something called holiday reversals. But as soon as those reversals are over, the chart says we go higher. Okay, so leading into the holiday, we did go down exactly what Omni expected. And then what happens next? We head right back up. And here we are today. Now, what does that show you? That shows you that we were able to tell you what was going to happen before it happened, where you should go long, and Wall Street would come in and support it when the pros on Wall Street, the ones that have your money, Goldman, Morgan, were screaming, end of the world. Some of them were actually getting out of their long-term positions, and the chart showed nothing more than we would hit support. Now, I went as far as on this chart going all the way back and saying, kids, you want to see something insane? I did the same thing for COVID. Ask anybody. Go back and watch my videos. Not only did I call the COVID lows, several people around me in my circle got very wealthy after that because I helped them position themselves in the market. Same exact analysis I pulled when I said we would drop down and hold here. How about that for analysis, kids? There's nothing stronger than technical analysis. Now, we have literally had a 909-point rally off this low so far, and that brings us to 57.41. Imagine that. So when the world said this is it, it's the end of the world, the Omni said, no, 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 before it even happens, don't listen to that when it comes. The charts tell us otherwise. Okay, so that is the weekly E-mini S&P. Let's go see what else is out there. I got a bunch of charts to look at today. We're gonna have some fun together. Let's see, chart 5 should be pretty, so now we take this to a daily. How well do charts work? Well, I just showed you we were able to make a call before it happened. where it would drop to, where you should hold, and that you should get long for the upside, right? Well, you know what else we did 2 days ago? We used the technique. All right, so it says I call bullshit, but you know, sometimes I got to get people's attention. We had the market drop for 2 days. We were leading up, 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 and now it's Monday and Tuesday before a Fed meeting. What? Wall Street has a 2-day drop on Monday and Tuesday before a Fed meeting? Once again, I grew up on Wall Street. I know when they're setting something up. I can't tell you exactly where it's going to set up or when, but when it gets there, you know, I mean, come on, it's Wall Street stuff. So I went, did a video and said, listen, traders, don't get nervous. I literally call bullshit on this move. It's them getting ready to get long for the Fed meeting. I've been on Wall Street for 44 years. I promise you that's what they're going to do. And this is what happened. It was total bullshit. It went right down. Where did it get to? The bingo spot, just where I knew they were going to come in. Watch this. They came in right here at the 50-bar moving average, which Wall Street watches like a hawk, and the bottom of the channel. It's exactly where they were supposed to come in. It was a bingo spot. It's simple technical analysis, but it worked so well. And I promise you that the 7,500 target is still valid, even the S&P for the end of the year. Then you'll see why by the time we're done with this presentation. But as you can see, the charts are much better than reading the papers, listening to the lunatics on television, reading through the internet. Oh my God, you're going to get nothing but insanity. And believe it or not, even the tops of some of these major companies, they don't know how to do analysis like we do. You know, no one knows how to do analysis like we do. They don't see it sometimes, and the fundamentals cloud their judgment. Now, a lot of traders or a lot of banks were telling their people to bail out when we were dropping, and I thought, wow, who would give that advice? I mean, I actually waited for this drop right here. You want to see something insane? I waited 3 months for this drop so I could post my year-end targets as we crashed, because my year-end target is 75.12. It's actually 75.12, just like my badge. Believe this? Watch this. It's actually 75.12. And the odd thing about that is I've been wearing this badge since I'm like since I'm 21 years old and I became a broker. And somehow my year-end target came out to 75.12 this year. And I went, oh, that's amazing. But it is what it is. The two things did not come together. That target was completely separate from this badge, but there it is. So the charts work really well, and we're going to find out a lot about that. Let's look at another one. By the way, another thing that you may recall if you were watching my nightly videos is the gap was filled visually. If a gap's filled visually, it's filled. Let me show you what that means. It wasn't actually filled 1,000%. It was just a teeny little bit unfilled. But this is a fine art technical analysis, not an exact science. So you don't need exact math to call something filled. So I came out and immediately explained, listen, this is filled. Don't get nervous. The gap is done. Let's just now start getting long. So the gap was filled visually, plus the Dow Jones Industrial Average filled it 100%, meaning the gap in indices was filled that day. And away we went. Once again, if you were watching TV, reading papers, or listening to the internet, those gaps had to get filled again, and all kinds of stuff that people who just don't understand charts just don't get how this works. They're so much simpler than trying to decipher through a fire hose of information coming at us from every direction. You know what I mean? It's how do you disseminate that stuff? The chart disseminates it really, really well. Let's go look at something else. NASDAQ, what happened with Mr. NASDAQ? Same sort of thing, left a gap, but because the gap was filled in the Dow and basically visually filled in the ES, you have to consider NASDAQ filled, because NASDAQ's not always known for filling its gaps. ES is, so if ES filled its gap, NASDAQ's considered filled. So the Dow and ES renders this gap filled. Higher we go. What does Wall Street do? They came right in on, as soon as we got above the 50-bar average. Simple stuff, right? Just simple stuff. And of course, right after the gap was made, away we went. Now we're in a very smart channel, moving higher above the 50. There's no more downside coming, kids. Downside's done. It was done the day the tariffs were announced. But we'll keep moving. So what else is out there? Watch this guy. When I'm done, you'll be convinced that we're okay. We're on good footing in the markets now. Russell 2000. Once again, a gap doesn't have to be exactly filled. Look at that teeny little space in between the gap or the line and where there should be a gap, but that's visually filled. And remember, fine art, not science. Visually filled gap tells us now we can move higher. Look what's happened since. Wall Street's playing with this 50-ball moving average. They're loving it. And now we've broken out over this little apex here, right? Now we're outside of this. Omni's bullish. You got to love what we're seeing. This bottom is bottom. Now, news can come out. Some crazy war could break out somewhere. Something completely out of left field could change the picture. But the picture we see right now, snapshot, is good, not bad. No market goes straight up. You get a couple of pullback days every now and then, but we're on good footing. The bottom has been put in, and these markets look great. But we have a long way to go in this presentation. We're not done yet. Dow Jones Industrial, the market. What did that do? Completely 100% filled its gap, did not leave a teeny bit. Filled its gap 100%. On the same day, ES went this close, NASDAQ, you know, everything got filled on that day. Since then, we've been moving higher. The Omni's been putting out buy signal after buy signal. We've been going higher and higher, and look at it now. Look at how it failed a little bit at that 50-ball moving average because Wall Street loves it. Same thing up here. But once you start to get above, they also love that too. And we're starting to hold above in all of our indices and above this apex. And by the way, this goes back. This is major resistance, kids. 1, 2, 3, 4, 5. Took a bunch of tries to get above it. That was a major resistance line, which you are above. You've also got a line that comes up from the lows, creating an apex. You're above that, above the 50. I'm not seeing bearishness. I don't care what the street thinks. This is what I think. Now, traders, if you like what you see, remember, you can come join me and be with me in this free live trading room. Let me just explain one thing about that. If you go to livewithoscar.com and go to that free live trading room, you'll hit register. And when you hit register, you're going to get an email and it's going to go to spam. Sorry about that, kids. When you go to Live with Oscar and you register for the first time, you'll get an email that'll go to spam. Unspam the email, shoot it back, and in minutes, you can be in that live trading room with me. And if I could bring it back up, I'll show it to you. You could be here with me in just moments. It's really simple. You would go here, Live with Oscar. Over here, you would register if you weren't logged in, so it looks like this when you're not logged in. And you would just click register. As soon as you click that, you'll fill out a couple of little pieces of information. That will go to spam, shoot it back from spam. No credit cards are required, no nonsense at all whatsoever, kids. So make sure you come join me. All right, so that's all at livewithoscar.com. All right, so now we've seen a couple of charts that are certainly showing us that the market is moving higher and maybe wants to continue that way. Nothing goes straight up, but so far so good. Let's go look at another one here, and lots of my Omniacs have been interested in this. Bitcoin. Bitcoin has just worked wonderfully. Wall Street has adopted this average right here and just have, I mean, the trades that you can make off this average have been phenomenal. As you can see, every time it tried to get above here, it would fail, right? It couldn't get above, failure, failure, failure. And then finally it gets above here and we make two calls, 94.2 and 102. The market rallies from here, hits 94.2. Yesterday hit my 102 target. This is all pure technical analysis, kids. The next target ultimately now is 121 and 126 above that. Nothing goes straight up. Like you can see, it went up and then back down and then up. So nothing goes straight up, but these two targets were hit. Why wouldn't that get hit? And again, I'm not using fundamentals. I'm free, I'm clean, I'm clear. My brain's not clogged. I'm only using the analysis. And I'll tell you right now, a chart is merely a visual look at all the information, all the government reports that have been released, the ones that are going to be released, all of the quarterly report earnings, every trader's reaction to all that stuff is all built right here in the chart. What the chart doesn't have, it doesn't have child support payments. It doesn't have a reputation. It doesn't have a mortgage to pay. It doesn't have bills. It doesn't have anything. It's quiet. And it follows the market. And if you're good at following these charts, I promise you, you are the best market caller on the planet. let's continue. So we just looked at Bitcoin. Now, let's go here. Dow Jones Transportation Average. During that week that I was putting out the series of videos saying, do not get out of the stock market, don't listen to Wall Street, support is on the way, don't listen to the news, Wall Street support's on the way. I also pulled out a technique. I had to dust it off because it's 40 years old, you know what I mean? I broke out this technique, dusted it off, but it was something I learned back in the 80s, which every now and then needs to be brought forward. And it's called the Gann four-legged bottom. And back in the old days, the men called it, the old traders called it the Gann four-legged bottom, legged. The Gann four-legged bottom. And I showed this in that same series of videos. You can go back and look. And I said, listen, not only have we reached the spot that the market said, the chart said we would get to, and it held, but you got a Gann four-leg bottom in there. That's it. And since the Gann four-leg bottom, take a look at how well this average works, by the way. Want to see a crazy average? Look at this average. Look at it here. Look at it here. I mean, that's picture perfect. Look at it here and look at it here. And what are we doing now? We got above, we tested it, and away we go inside of an upward channel. Has any of this looked bearish to you yet? Does any of this look like the end of the world in the stock market? Doesn't this make you feel more comfortable? It sure made me feel more comfortable when I went over these charts getting ready to do this webinar. But boy, we're not done yet. We have a long way to go. So I told Jeff I might not use my whole hour. I might go over, Jeff. I'm sorry. Who knew? Let's go to the next one. So the transportation average looks good. How about we look at this? Is Microsoft not a huge component to the stock market? Well, let's look at Microsoft. It is above major resistance, which I'll show you right here. It is above major resistance. It not only got above, it had a breakaway gap, broke away, got above resistance, and is now in one of those things we'd like to call this Oscarism we know as an F flag, which sits right about here. So we've got something like that happening. Let's just drop a line on the top of it so it looks normal. So you've got an F flag building. There is, here's the strange thing about it, there is no, we can't put a, I can't really put a flagpole on it. Why? Well, because there's no market movement there. So we'll have to put a pretend flagpole. So let's do this. Let's just make that a little thicker so you can see exactly what I'm getting at. And we will get rid of the extension. All right, so here's the flagpole, even though there were no trades on that breakaway gap. And then this would be your Oscarism known as an F flag. And you're in that F flag right now, which is bullish. So let me make that a little thicker so everybody can see it. This thing is called an F flag. Right here we have something called an F flag. Flagpole. Flag. Now, usually there's bars in the flagpole, but there was a breakaway gap, so it is what it is. Now, that looks great, doesn't it? Even if it pulled back to here or here, nothing wrong with that because it's called resistance till you get above it. Then it's called support when you get back to it. So it's all right, even if it goes there, but it looks great. Another component to the stock market that does not look scary. It doesn't tell me to tell you, watch out for the downside. That's not what I see when I look at these charts, but I never even seen that except for the pullback the day we expected it. Now let's go look at something else in here. I think we have another pretty chart. Yeah, there we go. Look at this guy. Look at Netflix. It is working so well. Netflix acts really, really well in these markets. And one of the things I like about Netflix, the geometry works really, really well here. What do I mean by that? Well, look at the way it stays and respects the inside of channels. And then when it makes a smaller one, look at the way it stays and respects the inside of that channel. And here we are right now, just about getting above major resistance, one strong up day, and that's exactly what would happen. On the other side of that, because analysis works so well, this may turn out to be a resistance spot that then Netflix can be sold from. Right, so if we don't get above this line, you can expect Netflix to come down. If we get above this area, you expect Netflix to continue inside the green channel. Very good spot to show Netflix right here because there is a trade. Wait and see. Gets above the line, you're long. Gets below the line, you might get a nice pullback maybe to the average, because that average seems to be the spot everything pulls back to. Boom. See what I'm saying about simple analysis? If you just keep it simple, it really, really works well. Now, the Omni itself, Oscar's Market Navigational Indicator, gets a little more complicated because it shows you exactly where to buy and sell and where to place your stops. So you're going to find a little more complication. I shouldn't say complication, never. You're going to find it a little more sophisticated than what I'm showing you here, but not by much. It's very simple. We keep it simple on purpose, never complicated. So the Omni, Oscar's Market Navigational Indicator, of course, I'm not going to present here. I only present the Omni in 5-day courses that happen here in Las Vegas, and I only invite 3 to 5 people ever. That's called Omni Camp. The only way anyone ever learns the Omni is you come out to Vegas, to my home office. And I'll tell you right now, when you invite people to your home office, one thing you can't do is you can't make stuff up. You know what I mean? It's as real as it gets. They know where you live. So I invite 3 to 5 of you to my home office. We get together on a Thursday. We get together Friday, Saturday, Sunday, and Monday, and I teach you how to do the Omni exactly the way we do it. So if you want to join me, you'll get some information on that. It's a long 4-day weekend. It is really, really worth it. I promise you, the Omni actually take my course, changes their lives. But let's move forward. You'll see. We got a lot more to go. What else is out there? Let's look at this crazy guy. Look at NVIDIA. NVIDIA, a huge component to the stock market, since the tariff low, has done nothing more than the same thing the stock market's done. Put its lows in and recovered. Now, what I really like about this is look at the channel that you were in. Check this out. In NVIDIA, you were in this blue channel and it was working really, really well. Right? I'm going to darken it in for you. Look at this blue channel. Look at how well it was working. Well, we're out of the blue channel. We're now in a new channel, the green channel, and we're above Wall Street's darling 50-bar moving average. You gotta love this, kids. This is pure, looks wonderful, and you've got great reasoning to think that even if it came down to the bottom and hit the green line, that's where it should likely hold anyway and continue back up. So now we're going to talk about, okay, so the markets are starting to look strong. Wouldn't inflation be the big problem then, Oscar? Obviously, the charts aren't the big problem. Must be inflation, because watch TV. Oh, it's the end of the world. It's the end of the U.S. economy, the U.S. dollar. I don't think so. Anyway, let's make some sense out of it instead of getting nervous. 140.55 was the height of this indicator during COVID. Supply chains went out the window, couldn't get anything, boom, our indicator for inflation went through the roof. I call this the measurement of deflation, not inflation. If you ask me, it's the Bloomberg Commodity Index. Now, since the height of COVID, we have dropped dramatically, put a little baby head and shoulders in, dropped even further. Then we had a little bit of a rally, went right to the top of a trend line and has been cooling off ever since. This should be going in the other direction if we had a big problem right now. If we were having a big problem, my trend lines would be pointing up, right? Like that one. If I draw trend lines right now, they're going to be pointing down, right? So this isn't really where the big problem lies. So, okay, we're not seeing it in the inflation indicator. Now, I'm not saying when you go to a doctor or you get your car done or car insurance, that's got nothing to do with what we're doing, right? Yeah, I can't tell a doctor to lower his prices when you go see him. I can't tell him charge only $300 for the needle, not $5,000. But I can tell you if there's inflation in commodities, in the markets, if our market's going to go up and down, and nothing to do with goods, or I should say nothing to do with services. These are goods. All right. So goods and some services, but not when you walk into a doctor, dentist, lawyer type stuff. That I can't make the price go down. Forget about insurance. That I can't do anything with. I can't help you with these charts though. So Bloomberg Commodity Index showing that we are going down. Well, then what would that mean? Let's go look around. Now I'm starting to wonder, why is everyone so afraid of these markets dropping? Because rent was raised on people who want to do business on our docks? That's not a reason. So let's go look around and see what else is out there. All right, crude oil. Traders, the power of technical analysis. When crude was right here in this red circle, you know, we called it the Trump trade to give it a funny name. It had nothing to do with Trump, pure technical analysis. But we called it the Trump trade because, hey, it grabs attention, right? So forget about that. We called for 55, then ultimately down to 47.50 when the market was right here. Now, if you watch what's going on, simple technical analysis, trend line starts, trend line's there, failure, 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 and at this point, failure at the average as well. My Omni flips and I post targets. We're at 77 to 78. My targets are 55, then ultimately 47.50. We were here. Nothing here existed yet. The market, based on pure technical analysis, dropped all the way down to 55.12 so far. 47.50 is coming next. This is based on analysis, not what the crazies think about what might happen in Saudi Arabia. Stop. That's fundamental. We use charts. That's technical. All the fundamentals have happened already. They come out here. Those are what makes sense, not the fundamentals. So crude oil is dropping. You know that crude dropping is a worldwide instant stimulus in the pockets of companies, people, you name it. A country could give a stimulus package, right? But it could take years for that stimulus package or months for that stimulus package to make it to the people. When you lower the price of crude, immediate at the gas station, immediate for transportation, immediate stimulus. Crude's been stimulating for quite some time now. All right, so you've got that on our side as well. Now, there's all been a lot of talk about this market too, and people say, Oscar, if this one's going up, that means we're going to have hyperinflation. It's out of control. Gold is out of control. And here's what I've got to say about that. First of all, I started in the gold and silver pits as an 18-year-old kid. By the time I was 21, I was a broker in those pits. I carry silver and gold coins in my pocket my entire life. I've carried these. That's how close I am to this stuff. Here's what I'm going to tell you about it. Since 1971 and President Nixon, gold is like Bitcoin of today. Gold is nothing more than a store of value. It is not tied to our economic health, barring how much the USA owns. So when gold goes up, the USA's balance sheet goes up a little. When it goes down, the USA's balance sheet goes down a little. Gold is not tied to our dollar. It's not tied to anybody's dollar. It is not tied to your economic health, unless, of course, you have a small country and most of your holdings is in gold. Different story. Gold today is nothing more than a store of value, just like Bitcoin. Gold can continue going higher and higher. That does not mean we're in a hyperinflationary period anymore. It did used to mean that. In fact, even when they took us off the gold standard through the 80s into the 90s, it still seemed tied to the economy mentally, not actually physically. At this point, it's not even mentally or physically tied to the economy anymore. I promise you, it is a store of value. It doesn't matter where gold goes. Let it go up, let it go down, let it go wherever the hell it wants. It doesn't matter as far as the stock market's concerned. Now, I will tell you this, gold has been very geometrical as well. I mean, wow. Let's take a look and see what I'm talking about. Look at how gold is holding its chart geometry really well. Make that circle a little brighter so we can see what it is I'm pointing out. All right, so here we go. Look at how it respects these trend lines. I mean, this is insane the way it just holds trend lines. Now you think that's cool. Look at these trend lines. Let me make them a little darker for you. Check this out. Gold has been really, it's been working really well with technical analysis. Let me just say that. Look at this. Stayed inside this channel, tried to get out a little bit, came back down, hit the bottom of it, got back to the top of it, and then what's it do? It stays above. Now it's using it for support. I mean, wow, right? These channels have been fantastic in gold. Look what else you can look at in gold. Look at the monthly in gold. Monthly's sick. And once again, as with the daily or the weekly, it's really holding technical analysis really well, just sticking inside of these channels. Just insane the way it's working. Simple analysis, simple channels, very, very powerful stuff. So here we are. According to this, you can go much higher. I think, did I leave a target here? Hold on, I think I left a target on one of these. Let's see, did I leave a target on any of this? Oh, I thought I left the target. 3,600 is what I came up with yesterday. If we start to go higher, near-term target will be 3,600 in gold, near-term target. If we start to move higher again, that's my near-term target. So that would be gold. And again, don't worry about gold and it's moving up and that means we're in a hyperinflationary period. Yeah, that would be true if Nixon was president. we were a little bit past those days now, right? All right, so let's see what else we have out there. Inflationary. Are we seeing inflation? Why would these markets get scared down? Well, I don't know. Let's look at gasoline since 2022. Deflationary, if you ask me. Look at this thing. That's not inflationary. All right, so that's gasoline. What else is out there? Soybeans. You know, we use soybeans in everything from rubber tires to food and everything in between. Soybeans, soy meal, bean oil, the crush. Well, this doesn't look inflationary to me. This is a weekly chart that's been going since 2022. What the hell is Wall Street? What are these talking heads talking about? What were they looking at when they called for a recession and a crash? Not the charts I'm looking at. All right, what else is out there? So soybeans, not a chance. Let's see if anybody else looks like that. Oh, look at wheat. Now, we use wheat in foodstuffs all over this planet, all the dough that's being made, most of it, and some people have allergies. I get that, gluten, and they're not using it, but most people are using wheat, right? And does that look inflationary? I mean, look at this. This looks like it's going to fall off a cliff soon. What else do we have out there? Ah, this is an interesting one. Look at corn. Now, corn is not only used for energy, ethanol, it's used for human food and livestock feed. Well, how come that's not exploding through the roof if we're in this hyperinflationary period that's going to crash the markets and cause a recession? Well, where's the proof? If someone could show me the proof, please put it in front of my eyes. I haven't found it yet. All right, but I'll keep looking. I mean, I'm looking for the proof, kids. You're coming on this. You're coming on the hunt with me. What else do we have? Look at sugar. All right, so I don't know. Do you drink coffee? Do you drink tea? Do you drink anything with sugar in it at all? Do you eat anything with sugar in it? Well, how come that's not going through the roof in this hyperinflationary period that we're having? I don't see it going through the roof. I think Powell was right on the money for not lowering interest rates, but you've heard me say this since the tariffs started. So what else is out there? All right, so I got it, Oscar. Certainly cotton, the stuff we make clothes out of, that's got to be going through the roof, right? Well, let's go find it. Cotton, look at that since 2022. Is cotton going through the roof? I don't think so. Traders, omnibootcamp.com. That is how you get to me. If you want to spend a long 4-day weekend with me, let me see if I can find the link. If not, I won't bother putting it in. But if you want to spend the 4-day weekend with me in my home office, you go to omnibootcamp.com. Literally just click, I want to get started, fill out your application, and I will absolutely call you back. You should spend 4 days with me here, I promise you. It will help you be such a great analyst. All right, let's move forward. So what else are we looking at? So we just did cotton. We looked at many inflationary and deflationary markets, and they don't look inflationary to me. So that basically brings me back here to say to you, let's go look at this guy. This brings me back to say to you, traders, I'm sorry, 75.12 is remaining valid. I don't care what the street says. I don't care what anyone says. Unless these charts change direction and something different happens, my 75.12 call for ES at year end is valid. Me calling bottom remains valid as well. And if you look at this, looks fantastic. And then we go back to something like this. How could you expect this to scare people? This remains valid. You know what I'm saying? This remains valid. This looks fantastic. It should just keep moving higher. Now, being that we are day traders and the Omni puts out day trades constantly, if the market changes complexion and I need to say, please get nervous and bail out of stocks, all right, I'll do that. But the odds of me saying that with this formation in front of us are pretty much nil. Traders, that is my presentation. That is what I wanted to show you today. I didn't want to send you in any other area. I didn't want to try to put a system in front of you. I just want you to see what's going on out there and how clean and clear it actually is. I hope this helps you. Please come to livewithoscar.com and join me in my free trading room. I'm there at all times. Not even a credit card is required. The next OmniCamp will be in Europe. I've done one in Europe already. If you'd like to meet me in Europe, I've got an OmniCamp right at the end of this month, by the way, happening right here in Las Vegas. Then a few months from now, we're going to do one in Europe. If you'd like to join me in Europe, once again, you would simply go to omnibootcamp.com and click the application to get started. I always contact my OmniX back. With that, Jeff, I would like to give you back whatever time I have left. I thank you so much for inviting me. And remember, this is a very risky endeavor. This is a very risky business. Never trade without stops. Put your stops in first, and you'll live a lot longer in this business. Stops are in, emotions are out. Jeff, thank you so much for allowing me to present.
Oscar, it's good to have you. Do you have time to look at one? I know you had a hard exit and you need to leave right away. Do you have time to look at one ticker for Aladar?
What do you got?
PLTR.
PLTR.
And then we have a few questions that are rapid fire type.
Oh, that's probably a .o, huh? Let me do that again.
Yeah, I believe it is PLTR.
.o.
.o.
Yep, that'll do it. So one of the things about this I can tell you right off the bat was that double top we were discussing last week, which actually happened, right? See this double top here? You had a double top reaction. Let me just point it out to you, but it's interesting because we went over this in my chat room last week, and too bad I don't have that chart in front of your eyes because I would be able to show you, but there's a double top right there, right? And you had your reaction. Now, this is a very, very strong stock. I mean, it's been doing really well for quite some time. So the only thing I didn't like, you know, we do a lot of technical analysis here. I didn't like when it fell out of this spot right here. See how that just, you know, I mean, you could put a parallel trend line here and you can kind of say, all right, so we were in this sort of action. We were inside of a channel. I can make that tighter, but that's just, I don't like the fact that we're out of the channel. Until we get back inside that channel, or we create another channel, I'm a little bit, you know, I wouldn't be long the stock, but at the same time, this is a very, very strong company. So fundamentally, if you're going to look at fundamentals, you got a strong company. Technically, you know, we've had a double top and we dropped out of a channel. I wouldn't be buying it right now. Just my opinion. I just figured I'd share that with you.
Good. Raymond says, greetings, Oscar. I tune into you every day. Steve says, I live in Vegas. Do you know Bubba Horowitz?
Do I know who? Bubba?
Bubba Horowitz. I know him.
I think so.
Okay.
If it's a guy that's in a show on the strip, I think I know exactly who he's talking about.
He wants to know where OmniCamp is in Vegas.
OmniCamp is in 2 locations. I own an OmniCamp little mini mansion, two traffic lights from this office. You'll be staying there at night, and you'll be in this office, this location in Las Vegas during the day with me. So OmniCamp actually happens right here. And you know, I kid you not, if you're going to show somebody a system, it better work if you invite them to your home. You know what I'm saying? It better work if you invite them to your home. Let me just bring this back to the chart I had, because you know, one of the things about MetaStock, Jeff, if you haven't noticed, if you put a stock over another stock, it automatically saves itself.
Mm-hmm.
So I think I just blew up the chart I had, but that's okay.
Let's see. George wants to know, Steve says, thank you. Jack says, thank you for looking at Palantir for him. And he also said, do you see a double top on Palantir? Which he did. So yes, very good.
Absolutely. Top. That was something that we discussed right before it got there, wondering, will it stop for the double top, which it did. So, you know, it's under a little pressure right now. But this market itself, as I've shown you, is not. I mean, applaud these markets. They look great compared to the rhetoric that we hear out there.
One other comment from Tracy. Appreciate you, Oscar. I follow you and the Omni, Tracy.
Well, thank you so much. And if any of you want to come out to OmniCamp, this would be your moment. It's the 29th of this month. We've got, the end of this month. We've got plenty of time to get you in, but there's a lot of preparation on my end for OmniCampers, and there's only 3 to 5 of you ever invited. So,
Oscar, I think you do it a disservice when you talk about OmniCamp and don't talk about the food.
Jeff, you help me out here, Jeff.
I've been to Omni Boot Camp. The location is amazing. Oscar's such a great host. His family is so nice. But I will say that learning the analysis is great, but it doesn't compare to the food that is prepared by Oscar's wife.
I can second that emotion.
So if you're gonna come out to camp, make sure you're hungry. You don't need an appetite for knowledge, just food. It'll be fun.
Oscar, a big, huge thank you for everything over the years. We appreciate you, and it's always good to have you.
We love you guys. Thank you so much. Remember, come join me at Live with Oscar. We'd love to have you guys. It's really simple to get there. And barring that, stops are in, emotions are out. Thank you, everybody. Good luck trading. Jeff, I'll be there next time. Thank you so much.
Thank you, sir. All right, let me go ahead and do this. And we'll just go ahead and kind of move over real quick. Make me the presenter. We'll show my screen. And this isn't exactly where I wanted to be. We did, one of the things, if you like Oscar, we did sit down and do a premium class with him. This is available instantly if you want it. It's inexpensive. I believe we did 2 sessions. And in those 2 sessions, we meaning Oscar, Oscar showed how to properly mark up a chart. He spent lots of time actually going through kind of exactly where to find trend lines, the support and resistance levels. Absolutely phenomenal class. Normally it's $4.99, but as part of the conference special, you can get permanent access to that for $3.49. To do that, you can go to metastock.com/conf promo. You can call us at 800-882-3040, or you can go to metastock.com/sales-chat. Steve wants to know the link to Oscar, so I'm going to put that right here for you. It is livewithoscar.com, or you can say live with Oscar. It's spelled the same way. He's always in there, so you are actually, if you go there, you miss it. You are with him, right? He lives in that room. So livewithoscar.com is the link for that. Steve says, Oscar, great to find a Vegas fellow chartist here in Vegas. Look forward to meeting you, sir. Okay. All right, I kind of do this, and I'm sorry I missed the silver quote. Sorry about that. Anyway, let's go ahead and kind of move on, I guess. Anyway, 800-882-3040. If you want to go to that masterclass on technical analysis and formations, the conference price is $349. It's $150 off. And it's instant access, so you can start watching it as soon as you're done this afternoon. So in any case, as we kind of move into the next presentation, I want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has published 17,000 articles over the years. They've been publishing since 1982. You can find out more about them at www.traders.com. And while I'm at it, I also, I'm going to go ahead and unskip a slide right here. As you know, I move things on the fly. I do want to talk a little bit about the Traders Forum because I'm going to be talking about it in my upcoming session. So the Traders Forum is a project that we've kind of been involved with for a little bit now. It's a really, really cool place where you can kind of come, hang out, talk about the markets, chat with other traders, learn about technical analysis. We do some really cool sessions up there where we talk about different technical indicators, and it's been a lot of fun. We're growing the community. It's up to about almost 950 users. My goal is to get it to 1,000 first. But you can find out at more. You can join for free at www.thetradersforum.com, and lots of really good stuff up there. I invite you to join us there. We're always in there sharing our ideas, doing stuff like that. It's technically a partner company to MetaStock, technically a partner of MetaStock, www.thetradersforum.com. So We are MetaStock, and Greg, by the look of this, you know what's up. We're going to do a prize real quick, and it's going to be a special prize. So, but what I want to say real quick is if you're watching, if you're watching us on the YouTube, like and subscribe. It helps a great deal. MetaStock has been rated the best software program in its price category. It's been rated that way for 32 years straight. We talked about scanning, market scans, testing trading ideas, the patented forecaster. There's a reason it's been rated #1 in its price category for 32 years in a row. There's a reason we have so many customers that have been with us for decades. I wouldn't be able to trade without it. I love scanning. I do it every day, sometimes twice, sometimes more than that. But if you want to get started with this, I'd recommend it, obviously. Pricing on it starts at about $75 per month. That includes a delayed chart. You can scan during the day. You can see what the charts are doing. We don't do end of day only anymore. Metastock.com/conf promo, metastock.com/sales chat, or you can give us a call at 800-882-3040. So,
Steve, I approve of that message.
Steve says, Steve in the chat says a message that I approve of, and it's going to be kind of topical for what we're talking about. But Steve says, Steve Bigelow, my Philadelphia friend, I miss you, buddy. And I usually talk a lot about Steve, and we're going to kind of talk.
I thought you were asking me into the. Did you
yes, no, we're going to do a prize.
Go away. Should I just go
we're
away?
We're going to give away these.
Kind of watching over you in a weird way. Okay.
Yeah. I just want to, because we're going to talk a little bit about the patterns that Steve created and the stuff that he's done and that kind of stuff. So I'm kind of going to talk a little bit about Steve for a second.
All right. Well, please do. I just didn't want to be, looming around when I wasn't.
I think we can both agree on a few things. So Steve was very funny.
Yes.
A great technician. A great partner. MetaStock are still to this day our most biggestly viewed video on YouTube is actually Steve talking about his patterns and that kind of stuff. Huge patterns. He's always say, people use rice. People have been using candlestick patterns since the Japanese rice traders, and they weren't successful at trading. They were insanely successful at trading, and really was the things that he taught about the candle patterns really give a good insight into the psychology of trading. With that in mind, for the next prize, I'm going to give away both of Steve's books and a mouse pad. So we've got the Candlestick Profits Eliminating Emotions by Steve Bigelow. We've got the High Profit Candlestick Patterns. I'm going to give that away. And he's got a mouse pad here. You can kind of see this one. This one is this one's actually brand new and fresh, but it has all of his major patterns on it. So we're going to give that away as well. And we're going to give it away to a lucky winner. Now, Greg, why don't you tell people how they can be entered to win these fabulous prizes we're giving away?
Oh, that's easy. If you're on YouTube right now, well, first of all, if you're watching us with GoToWebinar, you don't need to do this. You've already registered, and you don't need to do it more than once. So you can just register once, and you're good to go for the whole week. If you're watching on YouTube and you haven't yet registered, all you need to do is go to the link which I've pinned at the top of the chat, or just go over to metastock.com, click on the banner at the top, and go to our landing page and register there, where you can also see the schedule for our entire 6-day event. That's it.
It sounds like you've practiced that. Have you practiced that over the week?
I have not. That's right from the hip. I got great hips.
All right.
Oh, hey, we should mention Bubba Horowitz came up. He is not an entertainer on the strip. He's in fact a fellow technician, and I don't think he's presenting this week, but he often does with us. So.
Yeah. We've had him in before. He's a really nice guy. Very, very colorful. When he's in here.
You're saying he could be an entertainer on the strip.
I agree with that. I think you're right. Okay, so what I need from you, Greg, is I just need a number. That number with the header can be anywhere. Oh man, it's giving me a weird sum here. Anywhere between 1 and 6,559, or 2 and 6,559.
Okay. According to Google Random Number Generator, that is 2505. 2505.
Oh, I did it wrong. Okay, B2505. Frank T. I almost said his whole name. I did not, Kelly. Frank T. in the USA.
Congratulations, Craig.
I'm sure we have a few Franks on here, and probably a few Frank T's with as many people as we've got. But if I send you an email next week and I say, hey, congratulations, you won a book. I need to make sure your address is correct. I need to get your address. It's legitimate. It's funny, a lot of the books that we give away don't get claimed. Just because
What?
they're like, oh, sure, I won something on the internet.
That's crazy, Doc.
Whatever. Let's see.
Hey, fun fact, talk about people from Las Vegas. Yeah, I know that Oscar's there now, not from there. Bubba's there, and that's actually where I grew up. So there's a lot of Las Vegas going on today.
What part of Vegas, though?
Out in the southern now, it used to be out in the middle of the desert on like Nellis and Sahara for anybody that knows, but now it's a completely developed area.
You know, I have your attention, Greg, and we kind of have a little bit of time. And I need to kind of get started because we don't have a lot of extra time, but
I'm here for you.
That joke at all.
Oh,
so
I don't have one. I don't have one loaded up and ready to go.
I have one.
You have one in the chamber?
Yeah. I told this one to Edward today and he giggled, so I'm going to try and get the same reaction from you.
Okay.
What did the janitor say when he jumped out of the closet?
That could go in so many directions. Hey, I don't know.
Supplies. I'm gay. I hit you with the double whammy right there.
That was good, yeah.
All right. Thank you, Greg. Appreciate the assist.
You're welcome. I'm here for you.
Okay. I'm going to go ahead and get started. So as we were kind of talking a little bit about, I want to talk a little bit about, we talked a lot about Steve. Steve was a great friend of mine. I absolutely miss him. And probably one of the people that had kind of the most influence on, well, professionally had a great influence on us. Obviously, he was one of our more popular presenters. But one of the projects that we worked with him over the years is one of the projects I am absolutely most proud of. So I'm going to kind of talk a little bit about the patterns, kind of how you can kind of still get a lot of his training, all of that kind of stuff. So let's kind of get into it. I do need to, there's a picture of Steve. I did remember that I forgot to insert a little bit of legal disclaimer here, but I've always got one somewhere in here. So let me grab this real quick. We'll put it in here. And if you've ever seen any of my presentations, oh, that's not really what I meant to do. Let's just go here. And then we'll jump back in. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation. Sorry, I'm laughing at my own joke now. To buy or sell, but rather guidelines to interpreting using specific indicators or features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees do not shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. So let me kind of go back into where I'm supposed to be in this thing, and we'll just kind of jump here. Here, we've talked a lot about Steve. We've talked honestly about Steve. I want to talk a little bit about kind of the product we built with him. The product that we built with him was one of the most popular add-ons that we've created for MetaStock. We created 3 different versions of it. What we went to go in and do with it was we went to go in and create all of the patterns that he liked on the charts. And I think in total, I've got it later in the slide deck, I think in total, the CPS add-on, which stands for Steve Bigelow's Candle Profit System add-on, has about 4 on a chart. It'll annotate those on a chart. It'll give you kind of all of the readings on a chart. And it's a really, really cool because it looks for those patterns and tries to kind of help you understand the psychology of those patterns. And in fact, I wasn't going to initially do this, but my webcam's not on? Oh no, I think it is.
Now you're on. It went off for a second, and Jeff, it's just not the same if I can't see while you're presenting.
Okay. Steve says his favorite is of the fry pan bottom, which I think I will talk about today. So I want to show this on a chart real quick just to kind of give you a flavor for what it is. I've got an open chart of the Dow Industrial Average. And you'll see a few things on the chart. Here's one of the fry pans, which Steve, you say is your favorite. But let me kind of go in here. We'll just kind of take a look at what they are. Any of these patterns that we've developed right here on the Dow so far today. Obviously, we're not through the day, but on the Dow we have an engulfing. That just means that today we have a bar that wholly engulfs the previous bar. And since it's bearish, it would be a bearish engulfing pattern. If it was a bullish engulfing, it would be the other one. Here, right here, this is a T-line crunch. Here you've got an advanced block, an engulfing pattern. This one was a doji sandwich that didn't confirm. Here you've got a doji. This is a doji at the top. So you kind of see there's tons of patterns that are kind of being drawn on the chart here. And these are all the patterns that kind of Steve gave us as the ones that we should do. Here you had a huge bullish engulfing. Here you had kind of a little bullish engulfing. But all of those are getting labeled and they're getting identified. And they're scannable, of course, because we can scan for MetaStock. The other thing that we kind of put into the software is a lot of information to kind of help you with it. So for example, like if I don't know what the T-line crunch is, I can go to the view, I can open up the commentary, and I can click on this T-line crunch, and it's going to kind of give me a little bit of a definition on here. With all of the patterns we had, we kind of ran it into a software limit. So we have a very abbreviated version of what the pattern actually is, but we have a full definition with enhancements and that kind of stuff in the manual. Actually, all of the stuff in the manual is stuff Steve put together to kind of explain his patterns and that kind of stuff. So if I want to know what a doji sandwich is, I can kind of come back here and it'll tell you what a doji sandwich is. So that's really kind of in the nutshell what the actual product looks like. What I want to point out here real quickly is some of these patterns look different than the others, and I think that's fairly obvious. Here you've got an engulfing, and that's abbreviated. It's a little bit of a black up arrow to show that it's a bullish engulfing. But you'll notice with this doji sandwich, it's a different color. It's red in this case because it's a bearish doji sandwich, and it's bigger. It's designed to kind of stand out on the chart. And likewise, this kicker right here, this kicker with the trend is bigger than some of the other patterns. This fry pan, which is Steven's favorite signal, as he later just said, Steve Y, not Steve Bigelow, but Steve Y's favorite pattern is bigger because it's one of Steve's favorite patterns. So kind of the idea behind the 5 favorite patterns. I'm not going to have time to talk about all 18 of them today, but I want to kind of go through a few of them. But the idea behind the 18 favorite patterns is we're kind of talking, and this was a few years back, but Steve and I were talking about ways we could improve CPS. Obviously, we had done the second version of CPS, candle profit systems, and it was really good. We spent a lot of time not making any improvements because we didn't know what we could make better about it. But he had some more patterns that he wanted to include, and we kind of got to a point where I'm like, hey, Steve, we've got a lot of patterns that are in here being identified. What I think would be helpful for people, myself included, is if we identify your top ranked patterns, okay? The ones that you shouldn't ignore. And that's where these top 18 patterns come from. These are basically the ones that Steve ranked as his favorites out of all of the patterns that he looks for, okay? So there's bullish versions and there's bearish ones. But what we did is we set these top ranked patterns, the ones that Steve liked a little more. We made them bigger so they stand out on the chart. We made them kind of illustrative of what happens and that kind of stuff. So I thought that was a very, very good change. And ironically, or maybe not ironically, actually, I don't think it's ironic at all. It actually changed the way the way I actually use Steve's patterns, because on a daily basis, when I'm looking for the patterns, I look for the ones that Steve liked the very best. So there you go. Wow, there's a lot of comments coming in. Blue Diamond and Rainbow is here out in Vegas. Good timing to get out of the small closet. Okay, palm tree's missing. I do not trade with Rob Hoffman. Steve, thanks for asking. Steve says he's short. He also sees a muffin top on the S&P. And okay, all right. Let's kind of talk a little bit about the patterns. So what I've done, Steve always talked about his patterns much easier than I did. He did a really good job. But what I want to do is just kind of give you an idea of kind of the mentality of some of the patterns that he uses, and then kind of just walk you through how you can use this. As I said, it's one of my favorite add-ons. I think it's very, very demonstrative of how MetaStock can be helpful. It can help you find the patterns, it points them out on the screen. You can scan for them. We'll run a scan as long as I don't get too long-winded. But it also can kind of help you identify them on the chart and kind of understand what they're doing, and so many good things that are in there. So I think it's very, very indicative of. It works really well in MetaStock, and I think it's one of our best works that we've done. So in any case, we sat down with Steve. He had 18 of his top ranked patterns. I'm going to go through a couple of them. One time I was traveling around with Steve, and I believe we were actually in Philadelphia, Steve, or we might have been like on the road. And we might, I remember there's a couple of times we went up to Philadelphia and then we'd drive somewhere, we'd do another kind of conference the next day. But we were at a conference with Steve in person, and somebody asked him, they raised their hand and they said, Steve, what is your favorite pattern? And Doji Best Friend was actually the actual pattern that he said that was his absolute favorite pattern. So let me talk a little bit about what the Doji Best Friend is. Obviously, we talked a little bit about a doji. With the doji, what you have is a very small body candle. Okay, the wicks can be a lot bigger. There's a couple of variations of doji, but generally what you're looking for is very little decision on whether that bar is bullish or bearish. Okay, Steve would always talk a little bit about this, and it's actually on the next slide, but we don't ever want to trade that indecision. What we want to trade is the decisiveness of the market. So if the market's indecisive and you have dojis or a series of dojis, you're never going to really want to jump in because the market doesn't know where it's going. We want to trade the decisiveness, okay? So this doji would be the first part of this two-bar pattern. The second part is when it gaps up above the trading range of the doji. Okay, so you see a little bit of a gap. By the range, you want it to gap above the high. Okay, so you have a doji, which is your indecisive move. We don't want to trade that indecisive. That gap up that we're going to see is represents a decision, and this is a pattern that we would want to trade. One of what Steve would call his favorite 18 patterns. Okay, we want to trade the decision. We don't want to trade the indecision when we're trading. Steve loved the doji, yes. There's a couple of things that he talked about in terms of the way that he would trade this. He'd call them enhancements, and we kind of point them out in the software as well. But the further the doji is away from the T line or the EMA, the higher the probability of reversal. So if you can imagine this, the T line is an indicator that he'd use, and I can actually go through the indicators that he used on the chart, kind of the mentality or the thought process. I think I have time. But the T line was the 8 exponential moving average. And if you're looking at a bullish doji best friend, if you kind of have your T line up here and your doji best friend happens here, the further it is away from that T line, the more likely you're looking at a mean reversion play right here. Okay, so that was one of the enhancements. The other one is if you're down below, let's say your doji is down below the T line. Let's say you've got your doji right here, you've got your T line that comes through here, and it gaps up above that T line. That would be, or even closes above that T line, that would be another enhancement. That would make that a more powerful signal. Okay. I have some examples that we've got, and we'll run a scan and see what we have here. Here on Royal Caribbean, this is when I was taking this chart last year. You had a doji followed by a gap up that gave you that doji best friend. One of the stop losses Steve always talks about, that I feel like I should always talk about because stops are important. Obviously, this is a great trade. It kept going up and up and up. One of the stop losses that I always use is one that I learned from Steve. You take this 8-period exponential moving average. If it ever closes down below that 8th exponential moving average, that's a signal that you can get out. Now, I love the way that Steve would always talk about stops. There's a couple things that always stand out in my head. One is like you would never want to, when you're trading, eat like a butterfly and poop like an elephant. You want to be able to kind of manage those stops while you're in there. The other thing that he always said, and every time I sell a stock on a stop loss, which is most of the time, you can always buy back in if you're wrong. So if you get out of the market and you're wrong about the direction of where it's going and you want to get back in, they'll let you buy back in. There's no kind of ever a restriction on this. So he had a lot of advice about stops, but the 8 exponential T line, if we just use that one, Here we had our doji best friend. You can see that it has that enhancement. We had our doji here. It gapped up above that 8 exponential moving average, the T line, and you see where it kind of can't, it didn't even close down below it until right here. Nice little move on RCL. Here you had a little bit of a fry pan breakout, which didn't confirm until it kind of moved back up above that T line. So that's the doji best friend. Doji best friend is exactly the opposite, which means I'm going to go a little faster. You have a doji, your indecisive bar, you have a gap down. That would be a doji bear friend. Fun fact, we were kind of discussing names for it, and I actually proposed maybe we call it the doji bear frenemy, but we decided not to. So it's just the doji best friend. Again, that indecisiveness, what we want to look for is the decisiveness. The doji represents the indecision. The gap down represents the indecision. We don't want to trade the indecision. Very, very simple pattern. Okay. The enhancements are the same. If you've got your gap followed by your decision way up here and your T lines down, the more likely it's going to be like a mean reversion play, or if it gaps below or closes below the T line. That's another enhancement. It's not a gap. It's not a mean reversion enhancement, but it is an enhancement when it happens. So there you go. Maverick says his favorite 3 patterns, and I knew this about Maverick. Maverick's Maverick, I want to say thank you publicly to everything you do in the chat room, but his favorite patterns are the kicker with large candles, the best friend, and the morning star. And we'll talk a little bit about kickers as well. Anyway, in fact, here's one. Here's the bullish kicker. What you're looking for, and the bigger the candle, you're looking for candles that are above average range. It's a 2-day pattern again. What you're looking for is a day where the bears are in charge. You want a large bearish candle, a large to moderate candle. I don't like this example, and I might replace it in a future one because the less wick there is down here, the better. The less wick up here there is, the better. Okay, so keep that in mind. But you want a large bearish candle. Okay, the bears are in charge. The next day, price gaps up to open above, or the previous day opening continues in the upward direction. So what you have is you have a bit of a downtrend. The bears are in charge. The bulls take charge. They gap the price up above where the trading range is, and they drive it up all day long. When I'm looking at kickers, I'll typically look at kickers during the day. And one of the things that I want to see, in order for me to buy a kicker, is I want to see the close to be as close to the top of the range as possible. So here you've got a down day. As the bigger this candle, the better the kicker. The bigger this candle, the bigger the kicker. What you're looking for is a rejection or a reversal of the bearishness. Okay. Here's what Steve had to say about it, and I'll do my best to read it. The bullish kicker presents consistent trading opportunities for long positions. The signal is even more powerful when it forms at a major support level. The larger the dark candle at the bottom is, the more powerful the reversal. Your exit strategy should be swift upon trading below the open of the previous candle's body. Okay, so he has a built-in stop loss for this pattern. And when we have that built-in stop loss, it actually kind of annotates it when you look at that commentary. But what he's saying is, okay, you can buy this. If it ever comes down below this open, you want to get in. Okay. Likewise, you want to use the close below the T line. That's another easy exit. Again, we want to be able to, as traders, look for these types of patterns. We're not going to be right all the time. We want to be able to exit our trading if we're wrong, right? We can always buy back in again. The enhancements for the kickers are the kicker signal. If it forms at a major support level, the signal is more powerful. The bigger the dark candle at the bottom, the more powerful the reversal. Okay. All right. Now I want to talk a little bit about support levels because it took me a while to kind of understand what Steve was teaching when he talked about support levels, particularly when it comes to the moving averages and that kind of stuff. So I'm going to switch into the MetaStock charts here. And I just want to talk a little bit about the indicators that are on the chart. Okay, so right now, well, always, and I'm just looking at the Dow right now. Yeah, the first indicator we've already talked about is the 8 exponential moving average. Okay, that's the black line on the chart. It's right here. Okay, we've talked about what he used it for. But basically, it's a good stop loss. It's he called it the T line. Okay, the T line was actually developed he started using it with Rick Sadler, one of Steve's students. Okay, here's the 3T line. Typically, if a stock moves vertical, you could use the 3T line, just like the 8T line, or the 8 exponential moving average. You could use it as a stop loss. Okay, if the stock starts going really, really fast and it gets really far away from the T line, the 3T line you can use a little bit closer. Okay, the other moving average that we have on the charts are the 20 period simple moving average, the 50 period simple moving average, and the 200 period moving average. Okay, he also, on the chart, we have a 12-3-3. Steve, in his training, talks about how he uses a 12-3-3, but if you want to be shorter term, you can adjust the length of that. If you want to be longer term, you can adjust the length of it. And he does give some examples. I don't remember what they are off of the top of my head, but he did use stochastics. Stochastics is a confirmation. Okay. Now, the reason I wanted to kind of go into the indicators that he's talking about is particularly to talk about the 50 and the 200 period moving averages. With the 50 and the 200 period moving averages, Steve would always have those on all of his charts. And the reason he would have them on his charts is he would say it this way: every single institution out there, hedge fund, broker, trader, all of those guys are looking at the 50 and the 200. If they're looking at it, I want to look at it as well. When he talks about, and a lot of his patterns talks about, this is better if it happens at a major support level or a major resistance level. When he talked about that, what he was talking about is not what you would expect as a major support and resistance level, like where the stock has reversed before. It could be a key Fibonacci level, but it also, and a lot of times, is what is happening around the 50 and the 200. So when I see a kicker that happens right through the 200 right here, as we did, that would give it more powerful. That's an enhancement for him. That's a bearish kicker with trend, but you get the idea. Okay. All right. So here we've got, I'll just have some examples here. Here you have a bullish trend kicker. Okay. Kind of continues to move up. You have this big engulfing bar. Even if you held through that big engulfing bar, here is where you closed out below that. Okay. Here's another kicker. You have a kicker followed by a sandwich. I think I'm going to talk about the sandwich today. I have charts for it. and then if we held on, we would end up getting out right here. These are usually stocks that I actually traded and examples that we had. Okay. The bearish kicker is exactly the opposite, so I'll go a little bit quicker. You're looking for a moderate to large candle that forms at the end of an uptrend. You're looking for a gap down below that trading activity. You're looking for the bulls to be in charge, and then you're going to look for a rejection of that bullishness. Okay. I won't read this. It's the opposite of what we talked about, and it's an excellent shorting opportunity. The enhancements are kind of similar. You're looking for the same thing. Okay. Fry pans. I like the fry pan. It's actually one of my favorite patterns as well, Steve. And let's kind of talk a little bit about what the pattern is and kind of how you can find it on the chart. Okay. So with a fry pan bottom is what it's called. It's the opposite of a dumpling top. Okay. The pattern's simple. It looks for the psychology of the trader. Okay. If you see right here, if we just kind of look at the formation of the fry pan, the bears are in charge, the bears are in charge, the bears are in charge. Indecisive trading happens. And then gradually, the bulls take charge and push it up above the level where the fry pan began. That's called a fry pan bottom. It can also be called a fry pan in an uptrend. Okay. That's really what you're looking for. You're looking for a gradual change from the bears being in charge to the bulls being in charge. That's the fry pan bottom. Here's the way Steve defined the pattern requirements. And this is one of the patterns that took us a while to code just because it's a very visual pattern. But we want, for this one, there's two fry pans really. There's a fry pan in an uptrend and there's a fry pan bottom. And the only difference is where it happens in a trend. So it's the same pattern whether it's in an uptrend or a downtrend. The only difference is if it's a fry pan in an uptrend, it's going to say that prices are in an uptrend. Everything else is the same. What you're looking for is a slow rounding retracement that forms consisting of indecisive trading. Okay. As the end of the pattern approaches, price approaches the same levels as when the pattern started. Watch out for a breakout signal. Okay, that breakout signal could be a gap up, a bullish candle, a candlestick combination, a bell hold, that kind of stuff. That's what you're looking for in terms of a fry pan. It's one of the patterns that you can scan for. One of my favorite patterns. The visual bullish trading pattern captures the psychology behind the price movement. You're looking for that slow rounding pullback, which illustrates indecisive movement. As the pattern approaches the same level where it began, you're looking for that breakout trade. What you're going to want to do with the exit on this one is any trading that closes below the trajectory of the pullback formation. Just looking for questions. Don't have any. Okay. And in a sideways trend, the only difference is you're looking for it to not be in an uptrend. Okay. Actually, there is a reason that we added the flyer pan in an uptrend. We had kind of developed, this was when version 2 came out. We developed the version 2. I sent it over to Barbara Starr, who was doing a review for us with Stocks and Commodities magazine. Story time. And she was looking kind of through the material. She's a big fan of Steve Bigelow. I'm a big fan of both of them. Barbara's awesome. She's really cool to work with. But she kind of came up with a question, and she said, in the requirements that you have for the fry pan, it says that it requires a downtrend. And I keep seeing these fry pans that happen at the top. Are those still legitimate fry pans? And so I didn't know. I'm still kind of just working with this, and Steve's obviously the expert. I get Steve on the phone. I'm like, hey, Steve, how you doing? Barbara Starr's looking at this. She's going to do a review for you in Stocks and Commodities magazine. Here's the question that she had. Can a fry pan happen in an uptrend? She's like, and Steve's just like, yeah, it's called a fry pan in an uptrend. So we broke that out and we call it a fry pan in an uptrend, but it's pretty much the same pattern. By the way, she loved Steve. She loved Steve's work. And she really, really, really gave a glowing review of the add-on. Barbara, if you see this, thanks for that. I really appreciate all the stuff that you do for us and for MetaStock. Anyway, same pattern. long way of saying the same pattern. The bullish trading pattern, this is kind of the same language too. It's the same pattern. Here's where it happened on NVIDIA. This is before the microchips just went crazy. Had a little bit of a fry pan right up nestled on the T-line. And again, if you're looking for this, if you're just looking at a way to kind of get out of the market, look at how well this T-lines works. You take a big advantage of this move up. It closes below the T-line. You could exit the position. If you get a J hook to get you back into that trade, or you see another fry pan bottom and you want to buy back in, you can always buy back in. But I love that as a T-line, because a lot of traders, that's where they kind of struggle, right? They come in, they want to understand, hey, this looks like it's getting more bullish. The market's more volatile as ever. You need to pay attention to where your stops are. This T-line is a great stop. I'd recommend you kind of play with it and look at it, but just look at how well it kind of got you out here. Now, NVIDIA kept going up. It was wrong in this particular case. It bounced off this 20 and just kept going, right? And we can always buy back in, okay? But we should always know where our stops are. Steve says the SPY will be at 561 on Monday. Okay, we heard it from Steve first. He also says he loves the failed J hook. Dumpling top is the opposite pattern. I think we might play a little bit. Oh, we're doing okay on time. So with the dumpling top, you're looking for kind of a rounded top pattern. Okay, the bulls are in charge. You're looking for that indecisive trading. You're looking for the bears to take charge. Somebody's calling me on WhatsApp. Let's go ahead and send that to voice on. I'm a little busy now. All right, sorry. All right. So this is the opposite of the fry pan bottom. The pattern consists of slow rounding top with indecisive trading. You watch for hard selling as the pattern approaches the same levels where it began. I'm just going to go on do not disturb real quick. Okay. Breakout indicators include a gap down, a big bearish candle, a candlestick sell signal combination, or bearish belt hold. Okay. We're going to go to the next one, doji sandwich. This is another one of my favorite patterns. I always remember when we did all those sessions with Steve, when we start talking about this doji sandwich and the McMuffin and the those types of patterns, always would make me hungry. But let's talk a little bit about the doji sandwich. Basically, with the doji sandwich, what you were looking for, it's a 3-bar pattern. On bar 1, you want a very bullish day. Okay. On bar 2, you want a very indecisive or a doji day. On bar 3, you want a resumption of that bullish trend. Okay, so here you've got a bullishness, you've got an indecisive day. What do we want to do after an indecisive day? We want to trade the decisiveness. When it kind of brings this up and moves it up during the day, that's when the stock is decisive. Again, none of this is very complicated. What we're looking at is a very simple way to look at the psychology behind trading. Bar 1, we're looking for a large candlestick formation, usually indicating the confirmation of a reversal. We're looking for a positive open near the previous day's close, resulting in a doji candle. So you want this doji to be kind of near the close. Bar 3, you want a positive open with a bullish candle of a similar magnitude as bar 1. All of these definitions are the way that Steve Bigelow wrote them out. Okay. The doji sandwich, this is also Steve's language, is a result of a consistent aspect of human nature. It provides an extremely, I'm hungry now, high probability result. The doji sandwich usually occurs after the initial reversal signal has been identified. The doji sandwich indicates a greater potential of upside. Traders looking to take advantage of this should look to target resistance. Okay, here's what you're going to want to happen. If this happens near the bottom of a trend, a major technical level like that 50 or that 200, or a reversal point, a Fibonacci number, etc., it'll be more powerful. And he likes to see the stochastics pointing upward when this happens. Those were the 3 enhancements. I always looked at the enhancements as condiments on your doji sandwich. They're not required. They just make it even better. So here we go. Here, this is just on TRGP. This came out of a scan. You had a doji sandwich that started right at the 50, a bullish day, followed by a doji, followed by a bullish day. And again, if we're just waiting for that close down, this is where you would have gotten out of that trade. Okay. UAL, this is back when the airlines were on fire, back in 2024, doji sandwich. And again, you might have gotten out here. That close is really close to that T line. If that happens, I kind of wait to see if it settles above or below the T line. If I would have waited a day, you'd still be in it. Okay, but if we were still in it, if we did get out, we could always buy back in when we saw it still going up. If we did get out, we would have gotten out there. Pretty good trade. Okay, DAL, again, airlines were going really, really well. I like it when I start to see multiple buy signals in stocks that are in the same industry. Right here, you've got a doji sandwich right on the T line. And then there it went. All right, here's Blackstone. Oh, I don't really need to look at this one. The last one I'm going to cover is the muffin sandwich. And the reason I'm going to cover is Maverick said it was his, well, actually it consists of 2. He didn't say his favorite pattern, but it does talk about the Morningstar, which is Maverick's favorite pattern. The muffin sandwich, I think this will be the last one that we'll talk about. It's the opposite. It's the bullish version of the Dagwood sandwich. It can consist of a 5-bar or a 6-bar pattern, and it's basically 2 patterns jammed together. Okay, the first of that patterns is a Morningstar. Okay, so if you're not familiar with what a Morningstar is a very popular candlestick pattern. What you're looking for is a bearish day, a large filled-in candlestick located in a defined downtrend. You're looking for then a doji, a small-bodied candle that closes below bar 1. Okay, and then you're looking for a large white candle. That white candle needs to open above the middle candle and close near or above the center of bar 1. So that would be your Morningstar pattern. Okay, you want that to be abutted up to a doji sandwich. So the doji sandwich we just talked about, you have the bullish day followed by the doji followed by the bullish. Okay, that particular thing. Now I said this can be a 5 or 6 bar pattern. So here you've got a Morningstar pattern. You've also got a doji sandwich. That would be a 6-bar pattern. This can also be the same bar. So if this bar didn't exist and you just had a doji sandwich right there, that would still be a McMuffin sandwich. Okay. The Morningstar signals an initial reversal signal has been identified. The doji sandwich indicates more potential upside in the reversals. If you're looking to take advantage of this, you should look to trade target resistance, and you should look to immediately exit this trade if it trades below the previous bar lows or if it closes below the T line. Okay. The Dagwood is here's some enhancements. If it occurs at the bottom of the trend, a major technical level, and stochastics are pointed upwards. Those are the enhancements. Okay. The Dagwood is the opposite. I actually don't have that in my charts, and that's okay. But what you're looking for is the evening star, which would be the opposite of this pattern, followed by a bearish doji sandwich. And again, that can be a 5 or a 6 bar pattern. Okay. Steve, let's see. Steve says, so very pleased to have found you, gentlemen. Second 2-hour spy in a doji today. Steve, I'm glad you came in too. It's good to have you, man. You should join our forum. We'd love to have you in there. Love the fell J hook. Same as the muffin top. I'm not sure what that question meant. Oh, the muffin top. I think what you're talking about was let's just go back to the dumpling top. I don't know if that was the same. I don't know. He always called it a dumpling top. I don't know if a muffin top was different. Maverick could probably tell us in the chat. Let's see. Okay. That's part of my Elliott favorite. Okay. Steve says the spy's losing the 30-minute cloud. Big drop coming. Love the Ichimoku cloud. Okay, very cool. Steve, you should definitely join the forum. All right. I want to talk a little bit about how easy this is to scan. We've kind of talked about the patterns, kind of how you look at them, how you use them, and that kind of stuff. I love this thing. It does such a great job in terms of kind of helping you identify patterns. And if you, I run the scans once or twice a day. This is how I found the stocks that I'm interested in. So let me kind of come in here and show you just how the scan works. I'm going to go ahead and open up MetaStock. I'm going to go to our power console right here. And what I'm going to do is I'm going to come in here to our scanner, which if you've been here for a while, you know we call our scanner the Explorer. Somebody asked me, why do you call it the Explorer? I don't know why they called it the Explorer, to be honest with you. I think maybe Steve Akalis, the founder of MetaStock, maybe he was a fan of Indiana Jones. Not sure, but we call it the Explorer. I love our Explorer because I can come in here and I can scan all kinds of stuff. I can scan any stock market I want. I can look at options. I can look at ETFs. I can look at futures. I can look at optionable stocks, Bitcoin, whatever I want, I can scan against. And the fact that we get our data from London Stock Exchange Group means that you can use this anywhere in the world. If you're trading this in India and you want to look at Indian stocks, we have that data. If you're in Australia, we have a ton of Australian customers and clients, and you can scan those markets. I mean, with the data that we get from LSEG, which used to be Reuters, well, Reuters sold that part off to Blackstone, and then Blackstone sold it to LSEG. But it's one of the best data feeds in the world. And the advantage to you is you can use this on just about anything you want to. Almost any tradable market. I think right now we cover about 95% of the global market cap. So, and it's not good quality data because it's the same thing that the institutions, the hedge funds are paying for. It's the same type of data. Okay. So what I'm going to do, I think it'll be better if I go to the next slide first so I can kind of talk to you about how we organize this. I talked about how we identify the patterns on the chart and stuff like that. We have these categories right here. These are the categories that we came up with, Steve. You've got all of your top trend patterns. I put those all the way to the left because if they're ones that Steve didn't want you to ignore, they're the ones I'm usually going to scan. Those are the ones that I scan for on a daily basis. But he had other patterns that were all built around the doji, like doji at the top, the left-right bullish and bearish combo, and those we call the doji dynamite patterns. You've got like your scoop, your J hook, your bearish J hook. Those are all kind of price patterns. We put them in there. We added a whole bunch for 3.0. I know some of you, if you haven't gotten 3 yet and you're using 1 or 2, we do offer upgrades and you should get it because I think it's such a good version of it. But here in terms of new patterns, you've got 3 stars in the south, 3-way soldiers. These are all of the patterns that we will identify on a chart for you. They're also all the ones that you can scan for. To kind of show you just how the scanning works, I'm going to do the bullish top trend patterns over here. Okay, so let's kind of jump in here. If I come down here, I've got my top trend bullish patterns. I've got that selected. You can run as many of these as you want. They just run consecutively, but I'm just going to run my top trend bullish patterns. Okay. These other scans will look for different things. If I hover over a different thing, it'll tell me a different exploration, it'll tell me what that one's going to look for as well. So I don't have to consult a table or something. I can just kind of look for the pattern that I want. In this case, I'm going to look at the bullish top rank patterns. So that's going to look for our doji best friend, our flutter kicker, our trend kicker, our kicker. The bobble we didn't talk about, that's another really good pattern that I like. The fry pan in an uptrend, the fry pan in the bottom, the doji sandwich in the muffin. So those are the patterns we're going to run with this exploration. Anything that doesn't have that pattern is going to be filtered out. Okay. What I'm going to do, I'm going to go ahead and ignore this right now. Well, actually, I'm going to leave that on there. What I'm going to do is I'm going to run this against the Dow Jones Industrial Constituents, the NASDAQ 100, and the S&P 500. Okay. On my own scans, I've added, as a result of kind of some of the work we've done with John and Jack Hasbury, I've added all of the multiple country EWP, EWS, all the ETFs that invest in other countries, because those have been kind of outperforming lately. I want to look at them. I've also added stocks that we consider that are in a trend, and we call that railroad tracks, but I don't want to kind of get lost in that concept right now. Railroad tracks is really cool. We'll talk, I have scans that you can do to find railroad tracks, but so there's a number of different lists, but this is primarily the scan I run every day. I'm going to go ahead and start it. We're going to run it right now. We're going to run it on a daily basis, okay? And what's really cool is in January, we actually did a huge upgrade to our MetaStock DC platform. If you haven't done the upgrade yet, it's a free update. You should do it. But it doesn't matter the version of MetaStock, whether it's DC or RT right now. You can get intraday updates on either one. So I can run this scan right before market close and see if there's stocks that I want to buy. I don't have to wait till the end of the day or the market's been closed for a few hours. I can get those. It's a huge update, because before with end of day, it was just end of day. If you wanted to do that scan during the day, you needed real time. And now it's just like you can do it anytime during the day. Very, very huge update. But again, if you haven't done it yet, you should do it. Anyway, out of those, and I talk about, that's the reason I love MetaStock so much is it allows me to ignore noise. When we're getting these conferences ready or we're emceeing something, or generally most of the time I'm pretty busy at work, and I try and just spend a little bit of time looking at my stocks in the morning and a little time in the afternoon looking at my stocks, because I have a lot of stuff that they kind of want me to do around here, right? So the ability for me to go through, like, let's say 604 stocks and narrow it down to 11 that I'm interested in and just look at those 11 stocks, for me, that's invaluable. Just the amount of time that saves me, okay? So that's how many we got. We got 11. Here are the columns. We had Doji Best Friend. You'll see that these are all zeros. So there was no Doji Best Friends on our scan today, okay? Here's your flutter kickers. There's 0 of those. There's no kickers with trend, but there are a few kickers, okay? We have a few bobbles. We have a fry pan in an uptrend. We've got like 3 of them. We've got a fry pan bot. We don't have any fry pan bottoms. Doji sandwiches, muffins. And this in track, I actually added just it's a measurement of the railroad tracks, which is a concept I'm going to avoid right now. Right here, we've got the fry, just because I don't want to go too far into my own time, and I want to kind of talk about some of the other stuff we've been doing here. So if I just want to look at fry pans, or out of those 600 stocks, there's 3 that have identified. General Motors, there's Diamond, there's APA. I'm very quickly going to open these up and just kind of take a look at them. We should be able to visually see the fry pans. Whether we like them or not, that's another story, right? But here, these should be fry pans, okay? And the reasons I don't like them, it may be like we're right below the 200. Here, you've got a nice little fry pan. We got to the top of that fry pan. I'm going to say that it's right here. It started to sell off again, so it's technically hasn't broken through the fry pan. But I don't like it either because we're right down below that 200. And that 200, as we talked about, is to use a major resistance level. Okay, so that would be one that I passed on or would pass on. Here's another one with fake. It's right below the 50, but you can kind of see the pattern here. Okay, it's back into a doji. It's backed off. I wouldn't be interested in this. I don't want to buy something that's right below resistance. APA. Let's see if that one's a little bit better. No, same thing. We're down below the 50, we're down below the 200. So out of the 3 fry pans, I'm not going to actually trade those. The reason is pretty specific, but I will end up kind of taking a look at usually about 11 or 12 and finding one or two that I really, really like. Okay. And there you go. It's how easy it is. That's how easy the process is to go in and find those patterns. Kim says, just curious, who has the best data feed in the world? Kim, I like that question. Let's go ahead and just, I'm not gonna really kind of compare our data feeds to other data feeds, but I will say our data feed was, if you're interested in market news or market, and I appreciate this question because it sets me up to kind of talk a little bit about the data for a minute. If you talk about like institutional quality feeds, there's no question that kind of the two front runners are going to be right now Bloomberg, okay, very, very famous product. I think it's $1,900 a month. And then what used to be Reuters, Reuters sold their data news to Blackstone, and Blackstone sold it to London Stock Exchange Group. So I found London Stock Exchange Group. Okay. There's no real, I think those are kind of the two heavyweights. I don't think that's a controversial statement when you talk about institutional quality news and data. Okay. We get our data from the LSNG feed, the LSEG feed. Okay. It's the same data that you'd get if you're subscribed to the LSEG feed. Okay, we don't get as many research reports and stuff like that. We have a retail version of their feed. It's white labeled, but it's just to kind of give you some ideas. 95% of the global market cap. If you're interested in market research, they have market research for like 30,000 globally listed companies. I think it is. Like I don't have the numbers right in front of me. It's supported by the Reuters news infrastructure, which is like 3,000 reporters, and I might get 2,000 reporters in 200 different news bureaus. One of the spent about $1 billion designing out the infrastructure, getting it available. So I won't call it the best news feed in the world, but I'll say that it's really good. LSEG right now. So Reuters was always a competitor. They were making news feeds since they were sending news around via carrier pigeons. Like, I'm not kidding. That's like how old they actually rank back. They've always been a really, really strong news feed. And a big part of their news feed was also the data they sold to institutions. And they're very big in Europe. Actually, they're a very big global company, and their biggest competitor is Bloomberg. So we'll say that LSEG has Europe. LSEG is headquartered in, well, it's London Stock Exchange Group, right? So that's where they're headquartered. Reuters also started in England as well, as a totally pointless fact. And then Bloomberg obviously was started in the US. They both have full market coverage for everything. Kim, you sent me down a rabbit hole with that question, but I think I appreciate it. Steve says, I love the 150% mornings. I'm glad you're having a good day. All right. Let me kind of, okay. Let me just kind of go back and kind of talk about what this was. So here are all the patterns. I think this is one of the best products that we have. It has expert advisors, it has templates. I showed you how to run the exploration. It's really, really cool in terms of what's included, okay? In terms of the stuff that we added in in the last version, we added the new patterns. 7 of those were top rank patterns. We added 20 new patterns. Do I have a list of how many patterns this actually has? Now, I think it's on the next slide. With the top rank, we spent a lot of time on look and feel once you start putting that many patterns on the chart. I just wanted to retain the cleanliness of the chart and make sure that the ones that were top ranked stood out. I think we did a good job with it. I remember when we were kind of designing it, I was sitting right next to my buddy Edward, and I kept going, Edward, does this look better or does this look better? Like, I was an optometrist, like visual A or visual B? And then I tweak it a little bit, A or B? And so we spent a lot of time on just the look and feel it. I think we did a good job with that. The documentation, all of the patterns that I talked about today, which was only like 4 patterns, but all of the rest of the patterns are also documented in the manual as well. Usually when I kind of try and kind of do Steve's patterns a little bit of justice, he was so much better about talking about his patterns because they were his patterns. But when I tried to do them justice and talk about how valuable they've been to me, I was trying to use his words as much as possible. The words that I used, the enhancements, all of that kind of stuff, comes directly from the manual. Okay. In total, it's 58 unique patterns. They're labeled on your charts. You can scan to find your favorites, and they include full definitions. The price point on this is normally $6.97. So we've talked a lot about the Traders Forum. You can join the Traders Forum for free. You can come and chat with us. We've got a lot of guides on his patterns. And if you do nothing else, come join the forum. It's thetradersforum.com. As part of kind of keeping Steve's stuff alive, we do have a membership area. With that, we're up to about 53 training classes that he's developed over the years. Let's see, I think I was ready to show this. Let me kind of go here. I just want to, let me make sure I know what I'm showing. Okay, this is fine. I don't want to show anybody's personal information or anything like this. So we have 35 lessons. I said 53. That's my dyslexia. But we've so far put up his gaps courses. One of the things that I found really interesting is we have 3 gaps in a row on the major index. I might show this to you. But 3. Oh yeah. I'll just jump into it. So this is on the Qs. It also happened on a lot of the other major indexes. One of the things that he talks about in his gaps course, let's just go right here. This is, of course, when everybody had there's a lot of, might have remembered this, there was a little bit of chaos in the market. We had a gap down, we had a gap down, we had basically 3 gaps down in a row. Okay. One of the things that he teaches in that gaps course is when you have 3 gaps in a row, that's usually going to take your stochastics into a way oversold area. And it's going to usually mean that you're down, you're at least going to have a little bit of a retracement. So when I was watching the 3 gaps in a row, we got hard down for 3 days. I had a good feeling that that might have been the bottom. And that's just something that I learned from Steve and from going through his courses. So, and that's just the first course, the gap course. Where was I? Where am I here? Okay, we got here. Here's what we were talking about. So we've got his gaps course. We've got boot camp that talks about all of his patterns. We go through his major signals. All of these are courses that where he goes into a lot of detail. You've got a breakout course right here. We're working on the options course and the futures course right now. There's a couple more videos that we're getting ready to publish. But so far, what I want to do is kind of keep all of Steve's videos available. Steve he's had such a key role in me being a better trader. And one of the things that we kind of talked about when we were I want to make this available to you. So the course membership, there's about 35 actual courses there. Just the gaps course and the Candlestick boot course was $1,100. We've added, since I made this slide, we've added all those other classes that I talked about. This membership's cheap. It's like $47 a month. It helps support the Traders Forum. There's tons of really good information in there. And it's only like I said, $47 a month. So in terms of the offer here, we've got $697 is the normal cost on the Candle Profit Systems. You've got the Forum membership, which is only $47 a month. If you want to try both of these, I'm going to let you do it. It would cost like $744. I'm going to give it to you for $397. Okay, that'd be Steve's add-on. It'll also be 3 months of membership to the Traders Forum. You'll be able to, so for 3 months, you'll be able to go through all of the courses of Steve's that you want. You'll have access to them. They're available. It's a value. You can give us a call to do that, 800-882-3040, or you can go to metastock.com/saleschat. And if you don't do anything else, join the forum. The forum, Steve had a big chat room of people that came and talked about his patterns and stuff like that. The roots of that are literally the Traders Forum. So we love Steve's patterns. We talk about his forum. Join the Traders Forum. And I would really recommend you get this. If you get this and you don't like it and you decide you don't want it, you can cancel. We'll give you a refund. We'll give you a trial to MetaStock if you need it. 800-882-3040 or metastock.com/saleschat. You can also do it at metastock.com/conf promo. So there you go. Whew. All right. I want to say thank you to Stocks and Commodities Magazine for supporting the event that we did. You can find their information at www.traders.com. And of course, we're MetaStock. And this means, Greg, I ended a little bit earlier. I did not anticipate that, but not too early. We have time for prizes. So all the offers that we talk about, MetaStock itself has been rated #1 for 32 years in a row. You can get that add-on that we just developed with Steve. All the training that's available from Steve, all that stuff's available. You can do it at metastock.com/conf promo. You can do metastock.com/sales chat or 800-882-3040. Mr. Lewis, are you with me? Are you ready to give away a prize?
My mic was on. Did you just turn it on, or has it been on during your entire presentation? I just been a little church mouse.
I didn't hear you. So I don't know if it was on. I didn't turn it on, no. Let's see what's on the prize list next. Okay, May prize list. We just gave away a Larry McMillan one, right?
Yes.
Yes, okay. Thank you for keeping me straight. The next one we're going to give away is Theta Trader. Theta Trader is a proprietary algorithm that automatically builds professional style option spreads for you. It also scans and here, let me get it also scans your account and will automatically place orders to close out spread trades whenever it's necessary. It's an algorithm. They're going to come in and talk about it tomorrow. Eric's talking about it tomorrow. They were describing to me, and it sounded like super cool. It's a normal value of $9.97, and we're going to give away that membership to one lucky winner right now.
That is a valuable giveaway.
What I need from you, Greg, is any number between 1 and 6,559.
Okay. According to Google Random Number Generator, that is 2,980, 2980.
And that is Harold C. With a Gmail address in the USA. So
there's probably 9,000 of those.
Probably, yeah. If your name's
but only
Harold,
one or two may be listening right now.
I'm curious. I can tell you exactly how many there are because it's very, very fast and easy to do. This would be let me make a note of the prize first. Theta. Okay. I'm really interested to see what he has to say about it because he was talking about it and I'm like, wow, that sounds really cool. So he'll be here tomorrow to talk about the Theta Trader. And in terms of numbers of Harold, if your name is Harold, I'll just find all right here. There, you have a 1 in 4 chance that you just won.
All right.
All right. Very cool. Greg, thanks for the assist. I appreciate that.
You are welcome.
All right. I see Ken is in the thing. We're going to start in just a little bit early, which is unusual. We usually run behind, not early. Ken's another great friend of MetaStock. He plays a mad tuba. no, what was it? He plays a horn. He does a daytradinguniversity.com. He runs a live trading room. He likes to find stocks that are kind of moving and have a lot of really good momentum. And he has a lot of opinions about what kind of stocks you should trade when you're looking at stocks like this. Great presenter. Let's go ahead and bring you on here, Ken. Hopefully you're ready to start 3 minutes early. Hopefully.
Hello, how you doing, Jeff? Good to see you again.
Good, I can hear you. You sound good.
All right, well, let's see if we can get the video on, even though I'm a little far away from the camera. How do I put on the webcams? Here we go. So how do I turn on the webcam?
Oh, here, I can actually just send a, oh, I don't see your webcams actually connected.
Huh, well.
So it's not detecting the webcam.
Okay, well, never mind. We can do audio only, so
Okay.
It's okay.
Yeah, that's unfortunate. But are you going to play a little instrument for us?
No, not today.
Not today? Okay. I just made you the presenter.
Play tenor saxophone, not tuba. Tenor sax, cool cats.
I knew I was wrong, but I couldn't remember what it was. So I just didn't.
No problem. Hey, so how you been? Great. You do such a good job of running these. It's good to see everyone here, and good to be back.
Well, I can see some very good-looking charts there.
Well, thanks.
I can hear Well, I'll give
As
you
we
that.
did before, if we could, have charts of their choice too. I'll go through my picks here and some explanations, but the real fun comes when traders submit maybe a ticker or two of their choice, and we can pull it up and take a look and see whether or not it's worth trading.
Okay, I'm going to make you an organizer so you can see all the chats as they come through too. So,
Yeah.
but it's all you. I can see you, I can hear you, and I'm going to get out of the way. Your turn.
All right. Well, traders, welcome aboard. I'm Ken Calhoun from daytradinguniversity.com. Been doing this over 25 years. I traded 122 million worth of order flow the year before last, so a lot of experience, mostly day trading, but also swing trading. Now, in today's presentation, I wanted to go over what I love about MetaStock charts for helping us get into successful breakouts versus the false breakouts that are a problem. So we'll look at some of the criteria to use and how to go through them step by step. This first chart let's take a look at is Groupon, and one of the things I always like, my favorite pattern is a gap up that continues up past a whole real number high. So again, whole number is really important. So when using MetaStock charts, there's several criteria. One thing is we need to have sufficient range to trade. Notice that the range here is from 10 to 24. It's a big 14-point trade, or 14-point range. One of the problems that traders have is that they trade charts that have too narrow of a range, only 3 or 4 points, and therefore don't have enough volatility to make your risk reward worthwhile. So number one is make sure it's in a good trend with a big range. Other thing is to make sure we've got a continuous trend, and help you with your candlestick charts. One thing you need to learn is the sequence, and when they start to get smaller and smaller, that's when you tighten up a trail stop. Right? And if they do a false breakout like this, how would you know that's a false breakout? Well, because it didn't move up larger than the previous gap here. So you see this and it comes down, you get another gap up. I never buy the gap day. I always buy the day after or the 2 days after the gap. That's another quick tip. I've traded thousands of real money gap trades, and I've learned the difference. Often if you do a gap trade entry right from the start, it'll do a gap and trap and come back down to support and stop you out. So it's good to wait till the day after a gap. Even if it's a big range day, I'll wait till the day after or two to see if there's a new entry, okay? This is current market in GRPN, okay? And one of the things that you want to look at, do's and don'ts of trades. One of the things that I've learned helps make, when I make successful trades, it's always about high volatility, high volume charts that have good, strong, sustainable patterns. And so when I'm looking at these, take a look here. Oh. So what's an easy way to, well, let's maximize and minimize these guys. One of the things that I find too is that the charts that provide the best money in terms of ROI trades usually between $10 and $40 a share, because your leverage is good, but it's not those junky $2 stocks that fail all the time. You want to find charts that have good range. Here's a good example, ASM. Another good chart with a gap continuation, a pullback, then a new trade. One thing you can look at too is inverse head and shoulders. Does everyone see this? That left shoulder, big head, right shoulder? Never trade the day that you think it's going to be good, trade the day after. So delay your entries and hasten your exits. One of the things that I found to be true in doing quite a lot of trades is good exits almost always feel as though you're exiting early. It's like, really, am I out this soon? And yeah, sure enough, a day or two later, it's crashing back down. So they usually feel like you're exiting too soon, and also feels like you're entering a bit too late. So that helps. The problem, bad trading is when you enter too soon and exit too late. Good trading is enter a bit late to make sure the strength of the trend is there, and then exit at the first sign of trouble. So one of the things too to look at in your charts is not only range and volatility, but some of the strength of the patterns we have. So let's take a look at a momentum gap. I get these. There's an easy way to click and drag these. Right there. So let's say we're expanding the chart and we're going to zoom in on our current range here. One of the things that really helps is, and one thing too, I mean, I used to be a statistician for Ford, so I'm a total numbers guy. And, one thing that I realized is I do not need moving average lines. I do not need hardly any of the, I use pure price action, right? Price action is all I care. We got a resistance here, the gap continues. We don't trade the day of the gap. We may trade the day or two after on a continuation. And again, this range, always check the range. That's one thing that took me many years to learn just how important that is. It's extremely important. Its range here is 30, it's a pretty good chart. But if the range is 34 to 35 on this, I wouldn't take the trade. But the fact that it's 34 to 44, 46 up here, means it's a very good, you know, if you hit a good run, I mean, you can do 2 or 3 point trade for you. Okay, that's in red violet. What else? Yeah, Jeff, feel free to jump in if there's any questions from anybody. I'm happy to answer those. There's a lot of lessons learned in all this that I'm doing. Right. Maximize this. I may just want to full screen these. Let's take a look at this one, AHR. I'm trying to drag it. Anyway, in this chart, you can see we got a nice run up and it's choppy, another run up and it's choppy still. Third one is a charm. And whenever you see something like this, we've got a, let's say, a shooting star here, or you've got a breakout continuation play. It's all in service of volatility, right? And making as much money as we can. And the biggest money real trades I've done is always when you're selling into a strength. So let's say you're in a position here. It runs up here. I would go ahead and trail the stop tighter and tighter the further it runs in your favor. The goal is always to lock in as much profit as you can on these guys. And one of the ways to do that easily is to make sure that you sell soon. And nobody said you can't re-enter the trade. So that's another strategy, is to re-enter if if it starts to fade back. Take a small win, re-enter by a new entry, new whole number. Let's see. One of the things that a lot of traders do, I spent years trying to find bottom fishing, and that usually doesn't work. What's better is breakouts with very specific pattern setups. Key among that is range of the instrument and volatility in terms of the strength of the trend. So let's say I've got a chart here. So this guy's going up, and hey, that looks nice. So let's continue on. A large candle is one that dries up available shares, so it usually pops, but it can often drop. And I use the bottom of that candle as a low, as a stop. Now for good tight trading, and I do this when I do large shares. For me, large shares is anything over one lot, over 1,000 shares. I'm going to use the 2-day low of the candles pattern. So say I buy here in the breakout, the maximum stop would be the previous day's low down there, and so on and so forth. It runs up here, maximum stop is there. It's really important too. It works. So just test it out in your swing trades. You get in on the minor gap continuation, go ahead, that's nice, but put the hard stop right under the previous day's low. Okay, that's really important. You don't look at something stupid like way down there. I mean, no, you're gonna go broke if you buy here and sell there. So the goal is to make more money than you lose. So yeah, the key to success is lots of trades, lots of small stops, lots of shots. Okay, you take lots of shots. One of the things I found differentiated my successful from unsuccessful years is like a colleague says that trade often and trade very small size. You take a lot of shots at the market. You can always scale in position size. Another tip is that you should never see your trade activity in one instrument as a single trade. It's more like a sequence of 3 or 4 trades. Maybe, I don't know, buy what you think is a breakout and you get stopped out. Again, flat, so you just scratch it. The next one, the third one, that's the charm, and that one runs. That's the way trades go. Maybe the fourth one, you buy that and you stop out. The fifth one, and it runs up. So it's a story. It seems like a never-ending story sometimes, but it's not. You really want to look for volatility that continues in your charts. One of the things I also encourage traders to do is look for strength of relative trend over the course of time. Obviously, there's a lot of charts that jump right up and people get in and they go back down. They drop and they buy a pivot and it keeps going down further. Like Tesla, right? It's strong to be in tune with the directional strength of the chart. So another thing is what is hot in terms of the current market trades. In terms of sectors. So for example, metals are strong right now. And let's see if I can find one. This is ASM, okay. Anyway, Jeff, let me see. Does anyone have any charts they'd like me to pull up? I'd like to see what people might have to say. Traders, type in your charts. All I ask is that they be tickers priced somewhere between, say, $10 and $50 a share, maybe 10 and 100. So, tickers out there?
Yeah, put in your tickers. Let's see. We'll start with PLNTR.O.
PLNT.
R. Am I wrong about that ticker? I looked at it a little bit earlier.
It's PLTR.
PL.
Palantir is a strong chart.
Yeah, Palantir is what I was kind of trying to get you to pull up. We had a question about that earlier, which is why I was kind of bringing it up.
Well,
Are you thinking of PLTR, Jeff?
PLTR?
Yeah, PLTR is what has been asked previously.
There you go. Thank you, Greg.
Yeah.
There we go. This one had been a monster earlier, right? We ran into trouble back in February. This one was my #1 stock pick for traders back last year up until the end of the year, at which point it promptly rolled over in December. So there's that. One thing too is don't be overly interested in the chart just because it did a whole lot last year. It's like that song from Janet Jackson, "What have you done for me lately?" And diamonds are a girl's best friend order. So it ran up nicely, but it's sort of chopping around here, so it become less interested to me. I still love it up here over new highs, but the fact that it's running all this trouble is a rough spot. The fact that it did great on the run up earlier is nice, but not as relevant to the current market. So that looks great, but that was then, this is now. So proceed with caution. I still think it's worth a shot, but on very small initial share size, you then scale into. So if you ever have any doubts about a chart, which we all should, right? Be skeptical, start off real small. I might just do 50, 100 shares. Like Martin Gillen might do another 100 if it keeps going up, 4 or 5 points, another 100 after that, then 200, 200, 200. So you scale into maybe 1,000 shares, but only 100 or 200 shares at a time. So that way, if you go in and it craps out, you can break even or small stop. Big trade and then big stop and big trade, big stop. So yeah, good. All right, next chart.
Walter would like to look at KO.
All right, let's see what Coca-Cola's doing. A busy classic. Do we need a KO on this or is KO okay?
KO, yeah, just KO.
A knockout, I mean, Coca-Cola. All right, there we go. Last I checked. So what do we think about this chart? I like the fact that it's at new highs over here. What I don't like is the chop. And you tell me, how successfully would you guys trade this? I would say not at all, because that's a horrible chart. And if you're an investor, fine, up at new highs. But for a trader, this is too choppy of a chart. We want trades, things that go in smooth and clean, up like the Palantir did all year last year. But this is too choppy. So my odds of successfully navigating that are really low, right? Always look at the charts from an odds. Make sure, imagine, for example, I've done a whole lot of trading webinars at MGM Grand in Vegas, and I know the president of Bellagio, and I'm a Vegas guy, I know a lot of people there. Let's say you're an odds maker, you're behind the scenes trying to set odds for a table game for the players. Well, this thing, you wouldn't want to give away too much because there's not much of a chance to doing successfully there. The fact that it's just too choppy. Okay, next chart.
CAR.O, Caro. Davis, I think is that was. Yeah.
Okay. Zoom in over here. Yeah, that's a great chart. That even though the previous range was, remember, we're running into overhead resistance up here. So, I'll pull the MetaStock. Okay, so I really like this pattern. This is really strong. One thing I always like to look for is what I call signal candles. You have large signal candles versus a lot of noise, which is small candles. So large whole row bodies, and going after that. So we got a tail here, so we got a shooting star. So this is resistance right here. The shooting star confirms earlier resistance here, right? You're going long nowhere sooner than up here. It should be about over here. So you don't want to go in too soon because you're right under resistance, and that's terrible. And it's got a shooting star upper tail, so that's also bad. It'd be a good short here, okay? I'd fade it here, go short. I wouldn't go long until it breaks and holds for at least a day or two of the prior resistance. And that's the correct way to trade that. So I like it though, it's valid. It's been a good strong uptrend, and it's at resistance, so it's a good place to take profit if you're in, and go for the next chapter too if it breaks new highs and holds for at least 2 days up here. So yeah, good chart.
All right, Blue Dash in YouTube wants to look at REGN.O.
All right. Oh, that's a good chart to buy if you want to go broke. I mean, that's a terrible chart. It's good for shorting though. I mean, down here under 500. This is like 497 with a 500 cover stop, and then a target would be down in the low for like 430. If you don't want to buy a pivot, I would not buy a pivot until it breaks and holds with the shooting star resistance near 600. So 604, 610, that would be the earliest I'd buy it. But this looks like a good short under 500. Yeah. All right, next.
GLD.
Doing great, like all the gold miners, like GDX and others. Gold's been a great haven for against a hedge against market drop. I like it if it does continue up here. Let's see. It's back here. It's forward here. I really like this new feature you guys got. It's cool, a little bar at the bottom. I like that. That's good.
Yeah, me too, actually.
Yeah.
You're on Genpack though. You're not on gold.
I'm sorry.
Yeah. No worries. Just start typing GLD, and we should be able to switch over there. There you go.
There we go.
Perfect.
Hey, that looks even better. Okay, even better. It's a better chart. Now it's lower volume, but I like the fact that it's got a good continuous trend up. if we go here and zoom over. And we'll compress that back a bit. I like the fact that it's trended up. I don't like all this chip chop here, but if it does take out a new high over there, it should be worth a shot. What I like about it is it's sustainable. I always look at the story of the instrument. Is it a story of mixed up and down uncertainty? Is it a story of consistent buy? And that'll tell you where the institutional money's at. So yeah, it would be a good buy up here. The fact that it chopped around here means I'd start small. If I did a clean breakout, I'd start larger, the tighter stop. The fact that it's kind of choppy is, this is important, very important in trade management. I'd start small with a wider stop and then scale in if it continues up. Yeah, good chart. Right,
Andre
next.
would like you, if you're ready.
Sure. Always ready.
ATRO.O. Astronix is what this one is.
ATRO.
Oh, yeah, that's the right one. Oh, yeah, you had an I at the end. That's all.
Okay, there we go. All right. I like the trend overall. I need to do is move. Got the GoToWebinar interface is above the right side of the chart here, so that's not good.
You can throw that anywhere you want to. Like if you
Try,
can drag it.
I know, it actually drag the top over, only over, but not the whole thing.
Oh, okay.
Let's see. Well, how do you drag the bottom part of the chart only over? They go to over. Well, anyway, I like the fact that we've gone up here nicely. It's got a good momentum play, and I like the fact that we got a large whole body candle here. Okay. One thing to look for too, by the way, is the story of large candles that continue. Let me trying to get this. Got the interface, but it's gonna move over. Well.
With any of the, if it's breaking apart, like you can drag any of the yellow box or gray boxes around to get them out of the way a little bit.
Yeah, that's true. That's a good point. Okay, yeah. Good idea, sir.
I have at least one a day.
That's good. I like that. That's good. So interesting chart. Let's see if we get over to the far right here. Yeah, I like it. It's got a good breakout. It's got a little perky, a nice big candle pulled back down at right support, bounced off that. And always look at here's another quick tip. Always look at the price level of the high dollar before the gap. Use that as a key support resistance moving forward, which did found support and moved on up. Now, going up here and another gap, large green candle, another large green candle. The story is a good long one if we get up over the high. So that's a good chart. That'd play.
All right, next one is HIMS, HIMS.K.
Okay. Looks good. Let's show you. All right, we're all set. Hey, that's good. Okay, now everything's on screen. All right, yeah, I like the fact that it's recovering. I don't like the fact that it's kind of late in the bounce after the first run up that failed. But we do have a large green candle as a signal candle. So if we do go large up here, we go in here, we put a hard stop down here, and then we put a re-entry or second entry up above the high. So I don't like it as much as some of the others, but it's still tradable. So it's good because the range is good. You notice 20 to 70 is a pretty big range. Yeah, good chart. All right, next.
All right. Feel free to put in symbols, anybody. The next one we have is DB, Deutsche Bank.
DB.
D David, B boy.
Okay.
Deutsche Bank.
Okay, yeah, Deutsche Bank. That's a great chart. That's a strong buy up there. Yeah, no problem with that at all. They're going from 14 to 24. It's a nice, reasonably safe, but yet volatile enough money to make it worth its while into the range. And it's a good chart. So it's strength. I buy it on strength. One thing you might want to do is a volume confirmation. And with those, we're looking, there's a lot of stuff to teach about this. Volume confirmation means you should enter on a trade on the day or the day after a volume bar that's at least, say, twice the height of the average volume. So if you ever see a nice spike day, they'll always happen on a gap, but other than gap days, if you see volume of at least twice and 1.5 up to twice as the average volume, that tells you got a good strong buying day that's worth buying either that day or the day after. So that's good. Yeah, good chart. I like that one.
All right, how about the next one being Boeing? In the news yesterday, BA?
Yeah. I used to work for them back in the day. That's a horrible chart. No, up and down.
This one is a B. Type in BA.
Oh, I'm sorry, this is
Very
the A.
fine.
Okay. Mm-mm. What am I doing here? That's BA. BA. That's a little bit. No, what's the ticker? Boeing's not good. This one's not good either because it's too choppy. The overall story of this thing is too choppy. There's too much self-pressure and people want to take profit in any breakout, so that's not good now. Next,
Blue Dash would like to look at MRK.
Merck. Macy's, I said Merck, MRK, MRK. That's a horrible chart. That's a short under 74, so that's perfectly terrible chart. Good to short though, down under support. Next,
Kent would like to look at NTR, Nancy Thomas Radar.
okay, November Tango Romeo. That's
Yep.
a horrible chart. That's a good chart to trade if you want to go broke. Next, well, if it gets back over 1, okay, 110 with a 90.90 stop, yeah, and double in. So if it gets over the 1, that'll do it. But yeah, I'm in resistance at the whole number. Let me use that as a, let me interject here with a quick tip. One thing, guys, you always want to trade above, right above whole numbers. Never buy a 0.9, 0.9, 0.9, 0.9. Always trade above a whole number, like 30.2 or 3. You sell the 30.8 or 9. You don't buy the 30.9 because they'll stop out. You're chopping in the 40, right? Or the 4 in this case. Okay, next.
Let's I think we keep looking at the wrong symbol. Let's do NTR again. But I think what's happened is you've been entering a little. Nancy,
what's the,
November Tango Romeo.
that'll work, okay.
There you go. Yeah.
Yeah, that's a terrible chart because the range is not good. Well, the range is okay. Again, look at this chart. I mean, how many of you guys could trade this successfully? I couldn't. This thing is choppy. I mean, it's better to trade things like Palantir, right? Things that go up continuously. The greater the width of the trading channels, the tougher it is to trade. The narrower it is, the easier. If it's a nice straight line up, that's great. Chop over this, man, that's great. Next.
Brad wants to look at H Hotel S Sierra Y Yankee.
Got it? Oh, that's Hershey. No, that's a horrible chart. Not only is the range not very good, but the direction is, that's it. Folks, the best charts are ones that go like Palantir. You got a nice straight channel that goes relatively up with a nice, like this, but on the up like this. And that, for the whole chart, it looks something like that. That's too choppy though.
Let's see.
It took me like 25 years to learn this, so for what it's worth. Yeah.
You see, Mike Gibby wants to look at TDUP.O.
What's in for next?
Thomas Tango Delta Uniform Papa.O.
There you go.
Got it.
Okay. You got it right. Okay. Alpha Bravo Charlie Delta Echo Fox. Okay.
It's been a while since I was in the military, so I had to think a little bit.
If you didn't get them in quick, they'd say drop and give me 10, right? So 10 push-ups. So what's in the end?
TDUP. UP.
One more time.
Tango Delta Uniform Papa. Oh, we missed it. Wrong one.
That one looks pretty good though. That looks better than, that looks better than most of the ones you guys have mentioned. So
Yeah.
for trading penny stocks, large candles are good. Buy after the candle. They'll supplement, but yeah, that one's good. They went 8 cents to 22. So of course you got a tweezer top there, so and a bearish engulfing, almost a bearish engulfing. It'd be good over say the 22, but that one's actually a good chart. Okay. So one more time, it's Tango.
TDUP. Tango Delta Uniform Papa.
Right. That's the right. Oh.
There you go. You got it.
Okay, good. Yeah, that's a great chart. That's a really good chart. That's good. Good job. Whoever picked that one. And gap, and again, like I said, the day after a gap, you usually get a fade. I created the world's first gap courses back in like 1999. I've been doing this for a long, long time, and it was my best-selling. I also advanced the chart patterns and all that. A gap continuation, you usually don't want to buy the day of the gap. You want to only buy on the subsequent day if it breaks out to new highs. This one didn't. It just did a gap. What it's likely to do is a mean reversion pivot. So it'll go up, go back down half, maybe here, and then start to go back up. Still not a good trade, but this is a good chart. And play with it up here, up above there. But yeah, it's a good chart. That's good. That's what I mean. So you guys, when You want charts that go like this. This is what I also call a acceleration ramp. An acceleration ramp is where you have a steady uptrend like this, and then hockey sticks up in a 45-degree angle. That's a good one. You almost always want to buy the gap up after that. So yeah, good pattern. That one's a plus. Best one I've seen so far for you guys. Thanks.
Neil wants to look at Uber, UBER.K.
Taken it many times. That's a horrible chart because it's too choppy. I mean, look at it. People, remember, you want to trade charts that go up, not charts that go up and down and up and down. You want charts to go up and up and up. So, okay. Oh no, it's at new high. It's still a terrible chart. I would short it at say 79.80 or something. Cover stop 82 and a target down nearly 76 or so. Next chart.
Jennifer would like to look at BJ.
It's in Bravo.
Bravo Juliet?
So,
I had to dust off those things.
yeah, that's a great chart. Now, CVA, she picked a one. That's good. It's a little wide for my taste. It's still a really good trend. Great breakout pattern. Yeah, that's good. The only thing is you have to be willing to sit through $3 or $4 worth of pullbacks. But yeah, that's a good chart. A nice steady uptrend. You wouldn't guess at it here. Wait until it gets at least $1 or so over the previous high, say 121. One thing I teach often too is that you never buy at the breakout because you almost always get stopped out. So I learned this from a market maker from Solomon Brothers many years ago. Is that you want to get in, back in the day, it was like, was it 3/8 of a stick? Yeah, 3/8 of a point above the whole number. That's back when we had fractions, if anyone remembers that. If you're ancient like me.
I remember fractions, yeah. But it's like, why did they make it harder on purpose?
Yeah, I know. And Daytech, remember Daytech? We've got 60-second guaranteed fills, and it was back in the 90s. But anyway, 3/8 of a stick over 3/8 of a point, about 0.4 above a whole number. That's about high. That you want to filter out the noise and get on a breakout instead of false breakout. Yeah, that's a good chart though. That's a good one. Yeah.
Brad was hoping you could show up a couple of charts that you really like right now.
Well, there's a lot of them out there. One of the things that I like is let's see, favorites. I'm trying to think. Well, those are the ones I picked for the webinar. So the ones that I covered earlier. But yeah, those are good.
Okay. I'm going to throw in a couple just because they've been going up so well lately. What do you think about like EWS?
I haven't traded that one. That one?
I think you're just hitting OK too soon. EWS, Echo Whiskey Sierra.
EWS. Yeah, that's a good one. Yeah, that'll play. One thing I don't like is this. It's the story of some selling, but to cast some doubt in the minds of the buyers. But yeah, it looks good. I like the fact they gapped up. Yeah, it's got sequence of gaps. Yeah, it's a good story. I always look at the story. What's in it? So yeah, 25.4 would be the hard entry. A hard stop would be right under like 23.9. Exit target on 27, and yeah, that's good. I want to play. That's good. Yeah.
EWI. Actually, no. Let's do EWP. I think it's a better one.
Okay.
Echo Whiskey Papa. These are all invested in other country ETFs. P, if I remember right, is Spain. Oh yeah, the E. Let's have you type it in again. EWP. Where it says contains. Go ahead and type in EWP again. I'm just going to have you make a quick change.
Yeah.
Make it start with instead of contains. And then you'll always get what you're looking for best. First.
Okay. Sounds good. Oh, yeah, it's a great chart. Yeah, I like that one. It's got a good range. First thing to do is check, is the trend good? Yeah, it's a great trend. The second thing is, what's the range? Is it tradable? It's enough ROI in the chart. Yeah, 30 to 40, that's a $10 range. Yeah, it's good. Up in new highs. Good chart, yeah.
What do you think of Bitcoin these days? BTC equals.
I like Marathon was great this morning for a Bitcoin play, but MARA. Oh, it's okay. Let's see. Let's see if Marathon's better. MA. Been playing Marathon for a long time. That doesn't look as good. Yours is better. This is an inverse head and shoulders here, right? So it would be a play up over here, but Marathon is good. I'll tell you. What was yours again? The BTC, right?
BTC equals would be the spot price. This is the ETF.
Oh, okay. Yeah, that's a good chart. Reasonably strong. I like the fact that it's taken out a new high. Bitcoin did quite a run, right? It was back at 17 and went up to 60 or something.
Bitcoin.
My next chart.
Let's see. If you guys have charts, throw them in the chat. We have a lot of time for charts. Absolutely.
I think gold
let's
is good.
look at- What's that?
Yeah, gold is good. I mean, the whole sector of gold has been really good for the last few weeks, right? So metals are good.
Yeah.
What else?
Here's one that's always a kind of a favorite in the forum. What do you think about Costco, COST.O?
That's always been a great one. That's one of the best charts in the whole world.
I love trading Costco, but it's kind of been range bound. So we've got, this is a different country version of Costco. .O. There you go.
Yeah, that's one of the best charts ever. A long time. The mighty Costco, right? Bum, bum, bum,
Yeah.
bum. Amazing thing, strong.
It's
I
been
love
a
Costco.
while.
It's a great chart.
It's kind of set a new all-time high, but it's a train.
You have to pull back off here, so I wouldn't touch it till it breaks the 1052 or so, but yeah, it's a good chart. Another one, let's see. I was like Tesla and Amazon and Apple, some of the large cap techs. Look how this is Tesla. It's down. This actually would be not as good as a breakout, but it'd be a good speculative bounce. I was to say the what is that, 60 or so? So maybe 266, maybe 268 or 272, and again over 302. But yeah, I like the fact that it found support here, the previous support range, and speculative long area up here. So that's right.
All right, we have a couple more. Jennifer wants to look at COR.
Okay.
Yeah, you got the AMZN.O if you want to look at it. This is Citigroup.
Yeah, that's a terrible chart because it's all over the map. Again, you want charts that have a consistent, comes a self-fulfilling prophecy. You got a good strong chart like Costco or Palantir that keeps going up. We're pretty confident it'll keep going up. A chart like this, guys like Merriman, and be skeptical if it's going to do much. So I may nibble at it, but first sign of trouble, I'm out. And so that causes these doubt. They're called doubting drops. You get drop, they doubt it, they drop it, they drop it, they sell it, they drop it, goes up, head and shoulders breakdown, they drop it. Goes up, fails, bearish engulfing, it drops. So, and that's not a good chart. Right, next.
COR. I think we're just hitting the enter too fast. Go ahead and type it again. COR. Okay, there we go.
Oh, yeah, it's a great chart. Yeah, see that one goes up. See, we want that. Amazing charts to go up. I like the range. I like the. Yeah, that's good. It's got a nice. This is what I mean. A nice tight chart. This is no good, but up here, break out above the cup and we got a nice narrow channel up. That's easier to trade, right? So that's good.
All right. Andre wants to look at P Papa L Lima M Mary R Romeo. PLMR. I bet it's going to be .O. M.
One more time.
P Papa L Larry. M Motel. I don't remember what M is. R Romeo.
That's it.
.O. Palomar.
Sounds good. That's a great chart. That's the best one I've seen all day. So yeah, whoever picked one. That's the best chart of the day. So whoever get that gets an A-star. The gold star at the chart of the day. Yeah, wonderful chart. Perfect example of the kind of chart you want to trade. Don't live the rest of you see why this would be a good chart and why the other ones kind of suck, because it's easy to throw darts at this thing and make money. The other ones not so much. They get stopped out all the time. Yeah, gap continuation, big candle, bullish cup, another bullish candle, and it'll probably gap up again. So yeah, that's a great chart. What is that one? Palomar Holding.
Palomar, yeah.
I don't know what they are, but it's a great company. It's doubled, right? 80 to 160. Whenever we see a doubler, that's especially good. 80 to 160. So that's that. We always pay attention to that.
Let's see. Claus would like to look at Charlie Foxtrot Lima Tango .O. That's it.
Oh, that's a horrible chart. What was the previous one? That was what was that last one?
PLMR. Palomar was the last.
That's absolutely the best chart you guys have mentioned all day. So that's the kind of chart we want. Okay, that's what I'm talking about. Like it's got an acceleration ramp to an acceleration steady, and then hawk angle, breakout, high volume. Yeah, that's a good chart.
All right. Blue wants to look at DECK, D-E-C-K.
If it doesn't look like that, you guys shouldn't trade it. Just remember, because you can trade this, right?
Yeah. Might as well trade something with momentum.
Yeah.
David, like a home deck, DECK. I think it's going to be .o though.
That's probably possibly the worst chart of the day. So yeah, that one gets the worst chart of the day. It's choppy. There's no range. It's all over the place. It'd be impossible to trade it. So no, it's a terrible chart. Move. Next.
This one's Dominion Energy. I couldn't find a symbol for deck. Let me look here. DECK. DECK.K.
And DECK.
Uh-huh. Yeah, I think you just need to. Okay, yeah, now type it. CK.K. That's it.
Yeah. So if you're tempted to buy this for a bounce, don't. That chart sucks. No, it's too much choppy. Even if it does bounce, it's speculative if you get anything. That's not a good trend. I mean, if you had to play it, make those small size, the $2 or $3 stop and scale in, but that's better charts out there. So no, that one's one you'd lose money in, or at least that one. Next.
George would like to look at VELL, Victor Echo Lima Lima, and I bet it's going to be a .o. Not seeing the symbol though. Let me see.
BE. One more time.
I'm seeing if I can find it because it's not coming up for me.
Okay, well, next then.
Yeah. Klaus would like to look at Charlie Foxtrot Lima Tango. .o.
Oh.
There you go.
That's a horrible chart. No, the chart. No. Do you see the one that whoever mentioned it was a rock star chart that went up? That's what you want to trade. This is a crap chart. This is no. This would be a bad date. You don't color back. It's not a no. That's just a hard no. Okay, next.
Ken would like to look at JCI. Juliet Charlie Indigo.
Well said, sir. JCI. Hey, good hearing your voice again, man. It's been a while.
Yeah. Some of them are like, what's that one again?
Well, let's see. I like the fact that it's nice clean, but it's still a horrible chart because it's trying to play bounce off a low here. Pivot trading doesn't work nearly as good as breakout. Breakouts like this, pivots, some you get, some you don't. So no. Next.
We actually got the wrong one on that one. Let's try it again. Juliet Charlie Indigo, just by itself. That's it.
Yeah, that's even worse. That's a horrible chart. Look at it. I mean, really, I've done so many millions of dollars worth of trades. I wouldn't touch out the 10-foot fall. And I like the fact that it's been a new high, but the story is terrible. I mean, you're going to get stopped out left and right trying to trade that. So no. Remember, look at the behavior of the traders of that instrument. If it's a nice consistent uptrend like that wonderful one was earlier, the PL, whatever it was, that was a great chart. Something like this, you get stopped out and trend. I mean, ask yourself, how would you possibly make money at that? I mean, you got lucky about here, so no. Big X, no. Next.
Let's see. Do you have the ability to go to a 1-minute chart in your MetaStock? Click on that D in the bottom. I don't remember. I don't think actually you have the ability to look at a 1-minute chart. We have a request for a 1-minute chart. Not there. You see where it says D?
Right.
Yeah, okay. Yeah. Unfortunately, Brad, we can't look at Tesla on a 1-minute chart with this one.
We can look at them. Oh yeah, you can trade like a Tesla long instead of the instrument if you want to save some money. ETFTSLL. Must be up top something. Anyway, next chart. What's the next request?
Disney, DIS.
B is in biscuit.
D Delta, India, Sierra, Disney.
Okay. Yeah, that's a perfectly horrible chart. Yeah, you guys, you're gonna lose money. These are like losers charts. Like loser. Occasional win. No wonder they say like 90% of traders lose. If you guys are trading charts like this, why? I mean, if you're an investor, sure, but you're not going to be able to navigate the ups and downs of this chart. It's swing trading very successful at all. I mean, every touch. Ask yourself, how often did you get stopped out? I get stopped out more often than I would win, so I don't trade that. No. Next.
Visa.
Visa, I'm saying. Is that a .o or no?
No, just V. But you want to change it to starts with. I don't know how that got changed for you.
The what?
Where it says contains, change that back to starts with. I don't know why that changed.
Huh. Yeah,
That
yeah,
should
it's-
stay. Anyway, yeah.
And if we take a look at Visa, you can see that, yeah, that's a good chart. It's not great, but I like the fact that at least it's in an uptrend. And if she's relatively wide stops, maybe 8 points or so, that one's pretty good. So another thing too, you guys want to look at is these expensive charts. It's a lot of points of delta of potential risk. So that's why I like charts between like 5, 10, and 15. I say 5, 10 up to $30 or $40 a share. So they got good range. I want to show you
Brett,
something.
go ahead.
I want to get the stocks as ETF. Is that the right way to do it?
Yeah, okay. You got it.
That's it. Okay. And this chart actually I really like because when it runs, just like UVIX and some of the other volatility ones. If you do trade pivots, you want to do charts like this where 16 to 40 is a lot of range. And when it runs, this one's really good for day trading. I love stocks. This is my favorite inverse short bias. So for day trades. For swing trade, not so much, but if it does start to bounce, lots of upside. Okay, next.
APPS. Yep, Dada. First one. Thanks, Klaus. Appreciate the SIB ticker.
And this one's okay. I like it. I don't like the fact that it's mostly this flat story, but the fact that it's a nice clean trading pattern means I could trade this and likely do well. So it's a minor gap, which I love. It's a shooting star, which I don't like, but if it breaks, say, quarter point over that, probably good long for here with an exit target right here and a stop loss right there. So yeah, that would be good. The trade would be in there. So yeah, good chart. Not a great chart, but it's good. It's tradable. Yeah. This one I could probably make money with. Yeah. I was asking, could I make money or would I likely get stopped out? 99% of the charts likely get stopped out. So saving for these good charts. Yeah, that one's good.
Brad wants to know, do you consider yourself a day trader or a swing trader?
I do both, but maybe 80% day and 20% swing. I'll make that 90% day, 2% swing. I'm not noted for my patience, so 8 minutes is a long trade for me, so that's good.
I'm curious as to what, do you make most of your decisions on a daily chart or intraday or weekly?
Oh, it's almost always daily. I usually look at the previous day and current day, and a 2-day high is usually a good breakout pattern. I usually go in like a 10, 20 cents above the high for a pre-market entry, so yeah, good point.
All right, let's see. Jennifer would like you to look at BTI, Bravo Tango India.
Okay. Yeah, that's good. That's tradable. It's not great, but it's tradable. It's got a decent trend. I don't like the depth of the pullbacks here. Means you'd have to, I say, trade small. So it's another good tip. The wider the range is, say, in a channel that you're trading in, the smaller your initial starting size should be. So maybe just 10, 20, 50 shares. I call those starter trades or feeler trades. That at least puts it in your portfolio and you're following it. And then if it does wake up and start to run, then you can start scaling in. So tradable, not great, but it's good. That one's a go. It's like a C minus chart, but it's tradable. Next.
Ray would like to look at CME, Chicago Mercantile Exchange.
That's perfectly terrible chart.
Yeah, no. This CME. We ended up on Macy's.
Oh, what is about Macy's? No, that's not good enough. It's
okay. I think we're hitting okay too fast. Try type in CME and let's just make sure that the right symbol is there. Click on .o.
Okay.
CME.o.
There we go. No, sorry. C.
CME.o.
M.
E. .o.
Yeah.
I don't know what's going on with your mouse. It seems like you're maybe right-clicking on that instead of like it. It should be coming up with that. Okay. Yeah. Okay. Type in E.o. Okay. There you go. Got it.
Yeah, that's it. Yeah, thanks.
Yeah, no problem.
That's a great chart. Yes, that's another chart of the day. So yeah, it's a wonderful chart. That's an ATS chart. That's a rockstar chart. See, compare that chart with all the sucky charts. I should say the not so strong charts that you guys mentioned earlier. Some of the other ones. And this is the kind of chart a trader wants to trade because you could scale in easy. I could throw darts at it pretty much anywhere and make money or do well with it. Okay. You want to trade charts like that where it's easy to make money. You don't want to trade charts that are choppy like some of you guys mentioned. So this one and there's 2 or 3 others are good out of maybe 30. So
I'm kind of curious. Like, I just want to go into a little bit more detail while we're looking at this one.
Yeah.
If you're looking at it now, what would you be looking at in terms of like how to get into this stock? Are you going to look for it to break the highs? What exactly is going to be the trigger for you to get into this if you like it?
Well, that's a good question. I look for one thing to look at is really important for pattern swing trading too is how long does it run before it stops running? How long? So it's about yay tall, right? It's about the same length. This height, that height, that height. So that's one thing. The price project up here. So looking at the current range here. So
All right.
found them nicely, and so this one is the first time it's gone beyond the average run from earlier. So it makes for a good chart. I also look for a good pattern is to have a small followed by a large horizontal body candle. Not this, but the opposite way. Let's see. I'm scaling here. That's a great chart though. So you get a couple of good charts. If you see a hammer, those aren't hammers, but hammer time, where's it? That's a hammer. Pull back, there's a hammer. I look for a hammer. If I do play a pivot, I like to see a hammer or bullish engulfing support before going long. So here, that's a great chart. Now, let's start this. 280, this would be a good place to sell right here. If you're in, trailer stop there. Scaling would say 284, 286. Next to target would be near 300. So that's a good chart.
Okay, let's see. Roadblocks. Radio, Bravo, Lima, X-ray, dot K. You have a a comment in there. RBLX.
RBLX.
Yeah, we have two R's at the front of it though.
Oh yeah.
Okay, there you go.
Very cool. That's a good chart. It's nice, wonderful new highs. You get relatively good strength and good volume. Yeah, that one's good up above here though, right? It's a little higher than here and good large candles. So yeah, north of 70. 5 should be good, like 75.40 or something would be the entry. Yeah, good chart. Yeah, that's good.
Steve wants to know: are you using Fibonacci candles or regular candlesticks?
Well, just regular candles.
Thank you for the question, Steve.
Yeah.
Brad wants to look at spot.k, S-P-O-T. .k. T is it? Yeah, there you go. You got it. .k. Spotify.
Okay. That's a great chart. That's a good one for investing or trading. Yeah, it's got a good. I don't like the drops here, but they start here and end up there. That's good. If it starts here and end up, that's not good. Top down, that's not good. Yeah, that's good. Yeah, good chart up. Yeah. All right. Well, what else? See some other quick tips.
I think we've run out of symbols, but I'm waiting for some. Do you like any of the index ETFs right now, like Spider, Diamond, Qs? Do you like any of those?
Yeah, I like Soxes. I follow the spiders every day. I like to trade Soxes and Soxl. I do pair trading. So, for example, yeah. This is Soxl, right? So this is the long semiconductor ETF. So I like trading the sectors within, so not the indices themselves like the spiders, the diamonds, or Qs, but sector ETFs like the leverage, especially leverage ones. So, right. Yeah.
Pretty cool. Jennifer says thank you.
Sure, yeah. A big part of the success is getting the right charts in the first place. A lot of times traders trade charts that don't have the significance of the breakout as they should. All right, next chart.
Let's see. Let's look at Morgan Stanley, MS.
Sure. I know it's too choppy, right? That's no good. We should start here and go up here. Next.
Let's look at Meta, META.O.
Sure. This is the good one. This is the gold miners, right? GDX. I like to trade ones that are less expensive than this. They must have split it. Anyway, it's the GDX is good. Gold is strong. Let's see, what's Meta again?
Meta, META.O. And I'll remind everybody that MetaStock is the original Meta.
But they've got 3D glasses. So. Pretty cool.
Actually, Do you own an Oculus?
Of course, it's fun. You can watch all kinds of stuff.
Yeah, me too. They're actually pretty good.
They are, yeah, they're great. Yeah, I love it. It's fun. Waste too much time watching all kinds of stuff. I like the trend up here, not so much there. So no, it's kind of, it was good. That was then. This is now. No good.
It's a little bit out of favor right now. So yeah, we're kind of running up to the point. If you have more stock symbols, send them in, Ken. But I wanted you to talk a little bit about what you do in terms of like your room and kind of how people can find out about you, that kind of stuff.
Oh, sure.
Kind of give yourself a little commercial.
Okay, thanks. Well, I've run day trading. I've run day trading university since '99. There's a lot of copycat universities, but I was the first. And because I was teaching college courses as an instructor at University of Phoenix and consulting in Hawaii, and that's back when the .com era was in the late '90s. So anyway, I started day trading university with a screensaver notes of top 10 day trading patterns, and it's grown into quite a few thousand customers over the years and millions in sales. And it's been very successful. I run a live trading room and I have different courses and coaching and counseling. But yes, it's been great. The room is fun, and we have really good traders there too. So live real-time picks, but yeah, and I also will be publishing in Stocks and Commodities again starting this next month. So look for my column called Trading on Momentum to continue. You can look at back over 100 articles in Stocks and Commodities, and let's see, and that's about it. And I play saxophone and have a good time. So yeah.
What's the best website to get to you? Is it Day Trading University right now? Yeah,
right. .com. Now watch the AI version. So I got daytradinguniversity.ai and trademastery.ai coming. Get started with those. Chat. I don't know if anyone uses Chat MDT or whatever it is. A great resource for information. But yeah, it's daytradinguniversity.com.
Let's see.
George, sorry guys, I don't have any like 5-second special if you buy it. No, I don't do that. So.
Yeah. I think that's what we've got right now in terms of, so you can find daytradinguniversity.com. You run a regular room too, or am I wrong?
Yeah, I run Trading the Open, for 20 odd years. Okay. Took a year off last year. What's that?
Okay. And everybody can find out more about that at daytradinguniversity.com.
Yeah, correct. And I'm resuming my Saturday trading week ahead, free events every single Saturday around noon Eastern for about 15-20 minutes. So you feel to pop in and see what we're looking at and see you there. So, and thanks, Jeff, for having me here. I really appreciate it, man. It's good to be back.
Yeah, it's always good to have you. I appreciate your coming in and just looking at stocks. I could do that all day.
Yeah, thanks. Yeah, me too. Bearish engulfing. The candles work. Anyway. Well, take care, man. And see you guys later. Good luck with your trades, everyone.
Thank you very much, Ken. Good to talk to you.
Take care, man. Yeah, you too. Take care.
All right. Cool. Let's go ahead and do this. And let me make me the presenter as well. Let's go ahead and do this. And share my, okay. Now I think we're all good. We're ready to go. Big thanks to Ken, as well as all of the other presenters that have been here. As we kind of move on to our final speaker today, I want to just spend a second and thank Stocks and Commodities Magazine for sponsoring the event today. They've been sponsoring us since we started doing our multiple speaker events, which was been like 13, 14, maybe 15 years now. They've been a great partner. Much appreciated. You can find out more about Stocks and Commodities Magazine. They've been publishing magazines since 1982. They've got 17,000 articles that are available, and www.traders.com. Of course, we are MetaStock, and we're going to do a prize drawing. If I can get Mr. Lewis to give me a hand, we're going to go ahead and kind of talk a little bit about the last prize. It's the last prize of the day. Do you know what that means, Greg?
Yeah, that means it's the big, awesome MetaStock giveaway.
Cool. Yeah, that's exactly what it means. So we're going to give away basically a subscription to MetaStock, MetaStock real-time to be specific, the real-time version. That's going to be, the software has been rated, the MetaStock software has been rated #1 in its price category for 32 years in a row. It's been rated that by the readers of Stocks and Commodities. We've talked ad nauseum this whole week about how you can scan and identify better trades, how you can use the expert advisor to find out what you're doing on a market, whether it's just like kind of getting some advice about what the pattern is that you're looking at, or that kind of stuff. How you can use this, get alerts, the definitions, and kind of like a lot of times if I'm just kind of curious about an indicator, I'll go attach an expert advisor and just read what the expert has to say about it, because it'll tell you usually about the indicator that you're looking at, or the expert that you're looking at. It'll tell you how to read the indicator and tell you what it's doing. It does a really, really good job of that. So also has the ability to test trading ideas. I think our tester is like one of the best out there. You can take any of the ideas that you've got. There's a few hundred built in. You can make your own. You can test trading ideas. You can kind of see how those work about a single stock or a group of stocks or a bunch of stocks, whatever you want. And so all of that's available in MetaStock. Again, MetaStock, it's either $75 a month if you do the DC version, or the real-time version starts at about $210 a month. So we're also going to give away the MetaStock Zenith service. We've talked a little bit about MetaStock Zenith. MetaStock Zenith was developed by, well, it used to be Reuters. They spent over $1 billion designing it, getting it out there. One of the best news and information and data platforms out there on the planet. They have reporters, 2,000 reporters in 200 different news bureaus. They cover 95% of the global market cap. Really, in institutional quality like feed is kind of what we're using to power MetaStock. And if you're interested in news or information or good data kind of into the software, that's definitely the data that we're looking at. And we're going to give away 3 months of that, just that news service as well. In addition to that, we're going to give you Unleash the Power of MetaStock. That'll help you kind of get started. We're going to sit down with you with one of our reps. They're going to kind of walk you through the software, show you how to run everything. And Greg, have you ever heard of a company called Learn MetaStock?
Learn MetaStock, you say? Learn? Yeah, I think I've heard of that.
.com. Yeah.
Yeah, something like that. LearnMetaStock.com. I know I've heard of that. Yeah.
Yeah.
By the way, yeah, I should tell you. You said you spoke ad nauseum of MetaStock. Never once have you nauseated me speaking of MetaStock. And that is a great deal we're fixing to give away here. And I guess you're going to include a subscription to Learn MetaStock. Yeah.
Yeah, when I bring on a new sales guy, we have him go through Learn MetaStock. There's hundreds of videos up there. Kevin does 3 live classes a week. He's going to talk a little bit more about this because he's coming right up, but he'll do 3 live classes a week. There's hundreds of videos. There's really a lot of information that you can get. So we're going to give away that package. I should have figured out an actual value for it, but it's a very big MetaStock package.
Oh, a whole lot of money is the value.
Yes. Oh,
that really is a great. I mean, that's a lot.
It's invaluable.
Just for registering for. I mean, that's a lot.
Yeah. All right. So what we need from you, Mr. Lewis, let me go ahead and go over here. And we'll go to the sign-up sheet again. If you haven't registered, this will be the last prize of the day, but we're going to give away prizes all day tomorrow too. So if you haven't registered for the conference and you're watching on YouTube, there's a pinned link. It's metastock.com/tradersconference. You can just click on the pinned link. It'll take you there. You fill out a little registration page, and you too could win. So
you only need to register once, and you're good to go.
You don't have to re-register. If you're watching this in GoToWebinar, you don't have to worry about it. You're already registered. The number range right now is any number between 2 and 6,559.
Okay, the Google random number generator once again pulled right from the middle, 3,083, 3083.
Oh, I did something wrong. And that is Faith R with a Yahoo address. Congratulations. Now, if you win a prize, because we've given away a lot of prizes, I wonder exactly what number of prizes we've given away. I could count it. I'm not
it's almost on every hour.
Yeah. I've very rarely have forgotten. Sometimes we've been a little bit behind, but there's always usually time for prizes. Yeah. If you won a prize, what's going to happen is I'm going to come in on Monday, and we're going to sweep up. I know this conference has left a lot of confetti around. That's what we're gonna on Monday. If you want a prize from us, I'm gonna email you to contact you just to kind of make sure we have good details. And once you confirm your details, I'll send you the book or to set up the service for you or whatever it might be. If you won like Larry McMillan's prize or one of the prizes from one of our participating companies, I'll email your information directly to them, and they will email you with your information. So all this will happen early next week. So. And congratulations, Faith, you won.
Yeah, congratulations. Jeff, unless you need me, I'm out.
All right, thank you for the assist. And again,
And
all of
knock
the,
them dead, Kevin.
all right, sounds good. All of the prizes that we have, or not, like all of the stuff that we're talking about, the add-ons, the Learn MetaStock service, the award-winning MetaStock service itself, the new service that I kind of alluded to a little bit earlier, all of those specials are available as part of the conference. And you can do that, you can set up for that at metastock.com/conf promo. If you have questions, if you want to learn more details, you can give us a call, 800-882-3040. You can also get in touch with us at metastock.com/saleschat. I just want to say one thing, just because I'm not just because I'm feeling time, but I think this is important. You know, MetaStock has been rated the #1 product in this price category, and it's been rated that for 32 years in a row. So many of the customers we deal with on a day-by-day basis have been just working with us for decades. And for those of you that have been using MetaStock for a number of years, thank you. We appreciate that. I don't think it would be rated the best software as many times if it wasn't helpful. I don't think we'd have as many customers that have been using this for just decades and decades and decades if it wasn't useful. At $75 a month, our new version of our DC version of the program will give you the ability to look at stocks during the day now. It'll allow you to scan during the day, and it's all $75 a month. And so for 3 months, if you kind of just do the math, it's $25 a month. If you try it for 3 months, you'll be running, let's say you call and you set it up right now, you'll be running until August 9th. Okay, that seems like so far away right now, right? August 9th. In that time period, you'll have a chance to kind of go through a bunch of training, get familiar with the software, get really interested in the software. If it's helpful, you're going to keep it. At $75 a month, you don't have to really find that many good trades to do it. I wouldn't trade without it. I would encourage you to go ahead and try it. Metastock.com/conf promo, metastock.com/saleschat, 800-882-3040. Our next guest is Kevin Nelson. Kevin is a good friend of MetaStock. He's the guy that hired me. So for a number of years, Kevin was the sales manager here at MetaStock. I harassed him until he gave me a job. And that's actually literally true. He'll probably back that up. But for the last several years, he's been running LearnMetaStock.com. We talked a little bit about Learn MetaStock just a second ago. But when we do start a new sales and a new support rep, we actually get them set up for LearnMetaStock.com because it's a very, very effective way for us to bring somebody up to speed in MetaStock. Okay. MetaStock is a tool we just talked about that we've been developing and designing for 4 decades now. There's a ton of stuff in there. And like any other toolbox, the better you understand how to use it, the better it's going to work for you. And that's all Kevin does. He teaches people how to use MetaStock and to do technical analysis and all kinds of stuff. So let's go ahead and get you started, Kevin.
Thanks, Jeff. I appreciate that.
Yeah.
I also do want to confirm that you did hassle me about giving you a job, and I did relent, and you have continued to hassle me for how many years now? So.
Yeah, I mean, I don't know if you regret that decision or not, but like, thanks for the job, man.
It was a good hire. That's all I can say.
I can see your screen. I can hear you. I'm gonna get out of the way. It's your turn.
All right, perfect. Thank you very much, Jeff. I appreciate it. As Jeff said, I've worked with MetaStock for years and years. I started with them back in 1993, which is pretty crazy. And I started this other company, LearnMetaStock.com, in 2008. And Greg, if you need help with the spelling of that, let me know, because you sound like you weren't quite familiar with it, but just in case.
Yeah.
Thanks, Greg.
Leern. Got it.
Yeah, there you go. Good. Yeah, make a note. All right. But anyway, what we do as Jeff was saying, I mean, what we do at Learn MetaStock is we just try to help you with your MetaStock program in whatever shape means that we can. We've been doing this for a long time. We've got a lot of experience with it. And what I'll do is I'll give you a quick overview of our site and some of the different things that we can do to help you at the end of today's presentation. But I want to go ahead and just jump right into it. So our presentation today is I'm going to be talking about an indicator, which is called the VWAP indicator. The VWAP indicator is actually an abbreviation for the volume weighted average price. And this particular indicator is a very, very popular indicator with real-time traders. This was created years and years ago. It was originally created for institutional traders. And a lot of people, when they first see it, they'll say, well, gosh, you know, it really kind of looks like a moving average. But what was interesting about this indicator in particular is that this indicator is available on a number of different platforms out there, trading platforms and so forth, but it wasn't available inside of MetaStock. And in Learn MetaStock, what I do is I get a lot of requests from our customers. In fact, a lot of the classes that I've created over the years are based strictly off of customer requests. And so I'm always looking to get feedback on how people are, you know, using the program or how they want to use the program. And this is exactly what came out of a recent customer request, is to possibly create an indicator, or the VWAP indicator, that we can be used in MetaStock. And so that's exactly what we did. Is we created the VWAP indicator, and it's now available for anybody who has the real-time version of MetaStock version 19, and they want to use it on real-time charts. And if you are a Learn MetaStock subscriber, you just get this as part of your subscription. So as you can see, the VWAP indicator, it looks a lot like a moving average. And that's where a lot of people kind of look at it and say, well, you know, what is the difference of that? The one thing you'll notice is that over here on the left-hand side of our chart here, you'll see that the indicator itself actually starts on this bar. We're looking at a 5-minute chart, and the way that the VWAP indicator is created, it's designed to start on the very first bar of the trading period that you want to apply it to. So to understand really how it works, though, we do have to dive into it just a little bit. And one thing that I like to do is I like to just clarify the differences between this and a moving average. If you're looking at a moving average, and let's just say that you want to create maybe like a 20-period simple moving average, very, very quickly, if you want to do that, and all you literally have to do is take, for example, like the closing price of the last 20 bars, you would add up those 20 bars, those the closing price, and then divide it by 20 to get an average. That's it. That would be a simple moving average, and that would be plotted, of course, on your chart. The VWAP indicator is actually a little bit more complicated. And I don't want to make this a math class here today or anything, but I do want to explain a little bit about how it is actually calculated, just so you have a basic understanding. But the price itself is the average of the high, low, and close of the one bar. Let's say we're just doing this for one bar. It takes that one bar and it multiplies it times the volume for that one bar, and then it keeps a running total of that, or a sum of that. And that's divided by a running total of the volume for that trading period. So with that being said, the point being is that the VWAP indicator, even though it looks like a moving average, the big distinguishing feature of this is that it incorporates volume, not only for that bar, but for the bars leading up to that point. So volume has a very big impact on how this indicator is actually created. So to really understand how the VWAP indicator actually works and so forth, is that when you plot it on these different charts, it's going to have a lot of different formations depending on what the prices are doing. But if you go out and look for a definition of the VWAP indicator, for example, like here's one that I grabbed directly from Investopedia. And it just says that institutional buyers, including mutual funds, they use the VWAP to help move in and out of stocks with as small of a market impact as possible. Therefore, when they can, institutions will try to buy below the VWAP or sell above it. This way, their actions push the price back towards the average instead of away from it. So if we look back again on this chart here, you'll notice how the prices, or the VWAP, is actually kind of dissecting the prices here. The prices are pretty flat during this section here of the market. But you can imagine that the institutional traders, what they're attempting to do in a market like this is they're attempting to purchase when the prices are below the VWAP, and they're attempting to sell when the prices are above the VWAP. And a lot of times, from what I understand from the information that I gather, is a lot of institutions are actually rated on when they purchase or make a sale of what the prices are doing in relation to the VWAP to see, or basically verify, if they got it at a good price. And this is one way that they verify it. All right, so let me jump over here to a chart. Let me, if I can get that, there we go. And there we go. Okay. All right. So what I'd like to do here for today's presentation, what I did is I want to get a number of different examples here that I thought would actually demonstrate pretty well on a real-time basis. And so looking through this last week of trading days, I came up with on Monday, May 5th, actually I found a number of good examples just inside the Dow, for example. So to set up our charts, what I'm going to do here is to open up the charts, I'm going to tell it to display 100 records. And then underneath the data request range, what I'm going to do is I want to tell it to grab data up through May 5th, and I'll just basically set the close at say 4:30. So I want it well past the actual close of the market. Then all the charts that I want to open up, I'm going to open them up on a 5-minute time frame. So up here at the top, I'll go ahead and put in my first symbol. I'm just going to put in the symbol of the SPY, hit my enter key, and this will launch our first chart here. All right. So we're looking at a chart of May 5th, which is Monday of this week. And you can see kind of what happened during the day. Now, what's interesting to note is that if you're an end of day trader only looking at end of day data, what you would know is that the close on the 2nd or on Friday, it closed at 566.62. On the close of Monday, the 5th, it closed at 563. Now this close was higher than the open, so I know that we would have a green candle for the day, but it would actually be lower or close lower than the previous day. So let's go ahead and jump out to a daily chart real quick. So down here at the bottom, I'll go ahead and click on daily. And let's take a look at that just to kind of verify it, but I'll just kind of zoom in here. So here's the bar, for example, on May 5th. You can see that it closed lower than the previous day, but it is a green candle because it closed higher than the previous day. So if you're an end of day trader, this is all you see. But if you're a real-time trader, say, for example, go back to a 5-minute chart, we get a much different view, don't we, right? We've got a lot of different price action that happened during the day. So to help analyze this, what I've created is I've created 2 different versions of the VWAP indicator. So when you download them inside your MetaStock program, what you'll do is you'll go to your indicator quick list, and then what you'll do is you'll do a search, for example, on VWAP, and you'll find 2 different indicators. We'll have a VWAP indicator and a Learn MetaStock VWAP with time. So the first one I want to show you is this one, just the LMS VWAP. We'll drag it directly on top of the price bars. And the way that this works is that you choose the starting day of where you want the VWAP indicator to begin its calculation. So I want to start on May 5th. So I'll put the month as 5 and put the day as 5, and then we'll click on OK. And now this is asking how we're going to display the indicator. What's really important is that you want to merge it with the scale of your price chart. Hold on for 1 sec. Now, it's important to scale it with the price of the chart. And in this case, for example, my prices are over here on the right-hand side. So I'm going to make sure and merge it with the scale on the right, and we'll click on OK. All right. So this is our VWAP indicator here. And what this is, again, doing, this is basically calculating the average of the prices, incorporating the volume. And what a lot of people really like about this indicator is they feel that this is the true average of the securities prices during these different periods of time. And the way that a lot of people will look at this is they'll look at this to identify areas of support and or resistance. Now, as I was saying before, the institutional traders are typically trying to sell when the prices are above the VWAP, and they're trying to buy when the prices are below the VWAP. But what you'll see is that if you go out and do some research on this indicator, individual traders will use this to identify generally what the prices are doing, whether they're generally moving up, moving down, and they'll try to buy and sell into those overall directions. Now, just like any other indicator, there's countless ways that you could possibly do that, but this is hands down the most common, most popular way to use this. So for example, as you can see, we had a big gap down here on Monday, right? The prices actually moved pretty much sideways up until about 10 o'clock here. Then they traded above the VWAP and they pulled back to the VWAP here at approximately about 1040. And we had this big green candle here. This is the type of situation that a lot of people are looking for. They're looking for the prices to trade up, pull back to the VWAP, and then if you're going to be long, we're looking for a green candle to go long at that point. If you miss that, Then what we're looking for is another type of pullback. So for example, then the prices move back down, they come back close to the VWAP, they move back up, they retrace again, they move up. And then at the end of the day, as you can see, they came back close to the VWAP and actually traded lower, closed lower than the VWAP at the end of the market. But this pattern is the one that is hands down the most common type of pattern that people use with this indicator. So what I want to do is I just want to show you a number of different charts here on Monday. So let's go ahead. Oops, let me go ahead. We'll go ahead and open up Honeywell, for example. And with Honeywell, as you can see here, again, we had a gap down. The prices are pretty much just right in the middle, just kind of all kind of clustered together. And the prices broke out of that. They pulled back to the VWAP. It broke out again, and then they pulled back. In fact, actually even traded lower than the VWAP here. It looks like about 130 or so before they moved up again and then traded off one more time. Now, the other thing to think about with this VWAP indicator is that if you want to identify or use this as an area of support and resistance for your charts, think about it more of as an area rather than a particular line. So in other words, what I mean by that is don't get too hung up if the price bar doesn't touch the VWAP, or if the prices trade a little bit below the VWAP, for example. Think of it as a range. So if the prices are in that area, again, it can meet the criteria that you're possibly looking for. As you probably know, if you've been trading for a while and you're always looking for that perfect setup, a lot of times that perfect setup just doesn't happen. And what we have to do is we have to be somewhat flexible. And this is a good example. The prices moved up, they actually retraced, they traded a little bit below it, and then they took off again. And again, this would be a valid type of pattern to possibly look for. All right, let's take a look at another chart. I've got another chart here of, let's take a look at McDonald's. Go ahead and open that one up. And with McDonald's, this is an interesting one because right out of the gates, McDonald's traded lower up until about 10 o'clock. And if you were looking at McDonald's up until 10 at the morning, for example, on Monday, you'd have noticed that it was trading off sharply. And if that's where you were at that point, you might be thinking, wow, this is, McDonald's is really going to sell off here today. It's not looking good at all for McDonald's. But as you can see, it reversed, traded above the VWAP, it pulled back to it, and then it was off to the races and took off. You can see it then retraced and then pretty much was flat for the rest of the day and closed again very, very close to the VWAP at the end of the day. So that was McDonald's. Let's take a look at Microsoft. Jump over there. And with Microsoft, we had a big bullish candle right out of the gate here. The prices trade above, they pulled back the VWAP, they actually moved up, had another retracement, moved up. And then what was interesting about Microsoft, you'll see that in this case, for example, around 1 o'clock or so, the prices kind of topped out, and you'll see that retrace kind of came up a little bit, but they didn't come back. It was almost like it hit an area of resistance right up here where the prices traded lower. And then we started making lower lows throughout the day for Microsoft here. So in a minute here, I'll show you some ways to possibly trade to the short side here as well using this indicator. Let's keep moving forward. We'll take a look at a couple more bullish examples here. I'm going to jump over here to United Health. And with United Health, you can see right off the bat, prices took off. They retraced back to the VWAP around 10:30. Again, moved up, had a small retracement of this area, moved up again, small retracement, another retracement. And this is another one where it ran into this area of resistance before it traded off for the rest of the day. And then I want to take a look, one more chart here of Travelers. Go ahead and open this one up. And this one's a lot like McDonald's on Monday. You can see that it traded off right out of the beginning. And up until probably about 10 o'clock, you can see it was well below its averages or well below the VWAP, for example. And it immediately turned around right around 10 o'clock, like a lot of these other ones did, traded above the VWAP. And with this one, it just immediately took off again. We didn't get a retracement at all during this little section. We got a small retracement right here where it traded up, and then we got another retracement. And again, it kind of hit this area of resistance before trading off for the rest of the day. Let's take a look at some bearish charts on the same day. So I'm going to jump over here to Procter & Gamble. So let me kind of scroll down through my list of symbols here. And I'm going to grab Procter & Gamble. We'll open up this chart. Procter & Gamble, this is a good example of a bearish chart exact on May 5th, Monday, but this was obviously acting in a completely different way. We had an immediate bearish signal here, a bearish candle right out of the gate, and the prices moved down before they retraced back up to the VWAP indicator. They traced off. We had another retracement right here, traded off when we had another retracement and so forth, and then pretty flat after that point. But again, if you're a bearish trader looking at Procter & Gamble, there was actually a couple pretty good opportunities there to go short on that one. Let me jump over to another one. Let's take another bearish chart that I saw on Monday was Intel. And Intel, you can see that right out of the gate here, it was actually pretty flat, kind of moving sideways. And this is the kind of thing that you'll see in a lot of these charts. And, you know, as you're kind of going through this, I mean, the charts, of course, are going to be all over the board. And what you're going to, of course, have to do is go through and find the types of charts that look like they're fitting or meeting the type of requirements of what you're looking for. But when the prices, for example, are just sideways like this, and you don't see a lot of movement like that, that's an area where I'd probably just move on. I'd just go look for something else. But later on, what did happen with Intel, as you can see, it just slowly kind of sold off here, kept moving down. It did come back up to this area of the VWAP and again traded off here. So again, it did show a really good area for resistance there. It looks like about what is that, the 10 to 3 or so, excuse me. So let's take a look at a couple other charts that were also pretty flat here. So I'm going to jump over here to Amazon and take a look at this one. Oops, didn't type that one in. Let me try that again. AMZN.O, let's try that. See if that works a little bit better. There we go. And now you can see with Amazon, we had a big gap down here, as you can see here. And the prices, in this case, for example, they retraced below the VWAP, they went up above it, and at this point, they retraced back to the VWAP here. Now, if we're at this point right here at 10:40 to say 10:30 in the morning, and we see this kind of forming right here, this actually looks like a pretty good setup, right? We have the prices move up, they retrace back to the VWAP, we have a very bullish candle, we're like, uh-oh, here we go. We're off to the races. I'm interested in buying Amazon at this point. But what happened? What happened is that not a lot happened. The prices moved up a little bit, and then they came back to the VWAP. They stayed in this area, pretty much just kind of moving sideways and moved up, came back to it. Not a lot happened, right? So in this kind of situation, this actually looked to me like if I was following this one in real time, this does look like it would be a pretty good buy signal. But with that being said, remember that whenever we want to buy or sell, we always have to think where we're going to be getting out, right? So if you were to purchase or basically buy Amazon at this point, for example, where are you going to place your stop? Are you going to place it underneath this pivot right here? Underneath this pivot down here? Are you going to place it underneath your VWAP? I mean, there's a lot of different choices here, right? And so this is what we have to kind of think about before we ever enter into a trade. But no matter wherever you decided to place your stop here in this situation, the prices really pretty much just move sideways for almost the entire trading period. So even if you had a low stop, you could have easily have moved it up anytime during the day and closed out very close to maybe for a small loss there, you know, to get out of this particular trade because it just never really happened. So another one, for example, was Salesforce on Monday, and let's take a look at that one. And Salesforce, as you can see here, the prices broke above the VWAP, they came back down to it, and then we're like, okay, well maybe, you know, it's after 10, maybe they're going to move up again. They did, they came back up, but what happened? They broke down through it again, they went back up. I mean, nothing was really happening the way that any of these patterns, the types of patterns that I would be looking for. And again, in a situation like this is what's going to happen. You're going to open up a number of different charts, and if they're not basically behaving the way that you want or you need them to do according to these patterns, just move on. There's a lot of other choices out there, to say the least. So in addition to that, let me jump over to JP Morgan, and I'm going to open up this chart here, JP Morgan. And in addition to the standard VWAP indicator, what I've been showing you so far, I created a second VWAP indicator, which is more commonly known as what's called an anchored VWAP. So if you go out to the internet, read books, whatever, you're going to see this term over and over again called an anchored VWAP. And what an anchored VWAP allows you to do is, rather than having the VWAP indicator start on the very first bar of your trading period, it allows you to anchor it or place it or have it start on any bar that you choose on your chart. Now, this is actually a really helpful concept depending on how and what you're trading. A gentleman that's very popular out on the internet right now that has written quite a bit, and he's put out a lot of videos and training and so forth on this particular strategy called the anchored VWAP. His name is Brian Shannon. And if this is of interest to you, go take a look at it. You know, take a look at some of his videos. I think they're very well done. I think he's extremely knowledgeable, and he lives and breathes this anchored VWAP, to say the least. But anyway, so to use the anchored VWAP, the reason why you'd want to use it is possibly use it to have the VWAP start at a particular peak or a valley, or a lot of times, for example, like with a stocks, for example, maybe like an earnings report, split announcement, maybe a Fed announcement, whatever the case may be. But in addition to that, like in this chart here of JP Morgan, you can see how the prices moved up. And again, around the same time, like a lot of the other charts we've seen so far, is that they hit like this area of resistance where it was very bullish. If you missed this move early in the morning, they kind of like just stopped at this point. So one idea here is to take a look at this other VWAP indicator that I've made. It's called the Learn MetaStock VWAP, but I just called it with time rather than anchored. Just hopefully this is a little bit more descriptive. So with time, take this indicator, drag it on top of your chart, and what I'm going to do is I'm going to put it right on this one, the highest candle right here. The only difference in this dialog here is it still asks you for the starting day. So we want to do May 5th, but it also gives you a capability to enter the time there as well. So in this situation, I want to go ahead and put in an hour of 11. So I'm going to go ahead, oops, if I can do that, I'll go ahead and click on 11, and I'm going to set the minutes to 50, and we'll click on OK. And like the previous one, it's going to ask how you actually want to scale it. And it's very, again, important that you scale it with, that you merge it with a scale. So we'll click on OK, and this will plot our indicator. So here's our indicator. Now, as you can see here, during this flat area, the VWAP is pretty much dissecting the prices here right through the middle of them. But then when the prices start to move, you can see how it then starts to act as an area of resistance in this case. So if you were following JP Morgan, for example, and you see the prices topping out, really not doing a lot with it, maybe take this version of my anchored VWAP and place it right on the, on the peak of a chart and see how the prices reacted to it at that point. This is a kind of thing that a lot of real-time traders are watching, on a minute-to-minute basis. And the other real advantage to this is that you can use this on any time frame that you want. So say, for example, we're looking at a 5-minute chart right now, but I'm going to go down here to the bottom. And what you'll see is that you've got choices of 1, 5, 10, 30, whatever the case may be, if you've got the real-time version. You can also make custom selections here as well. So the 2-minute, for example, I'm going to go ahead and click on this 2-minute version. And so now each bar is representing 2 minutes of time. And I'll kind of zoom out here. And so these are the same indicators, but now we're looking at a 2-minute chart rather than a 5-minute chart. And you can see exactly how that plays out as well. And the nice thing with the real-time version is that you can do as many different time frames as you want, and you can also create as many different custom time frames as well. And this can be extremely helpful to have you, really find different trading opportunities based on, some of the different things that maybe you just want to try yourself. So I'll go ahead and remove that indicator. Again, that's called my anchored, or I call it the VWAP with time, but it's the same thing as what's called the anchored VWAP. All right. So I'm going to go back here to a 5-minute. Now, in addition to that, the other thing that I found when doing research for this particular indicator and trading ideas and so forth was actually using it with other indicators as well. And one of the most common combination that I found using the VWAP indicator was using it with different combinations of moving averages, just to help verify that you're bullish at the correct time, or maybe using it as a possible exit area and so forth. But let's say, for example, I want to put a moving average on here as well as the VWAP indicator. I'll go up here to my indicator quick list. I'll start typing my moving average indicator. I'll grab this and I'll drag it on top of the price bars. And I'll just go ahead and use, for example, like a 9-period simple moving average, but you can create whatever type of moving average that you want, but I'll click on OK. And that'll place that on our chart there as well. So one of the other strategies that you will see if you do a little bit of research on this is using different indicators in combination with the VWAP indicator, and looking for possible crossing points of the indicators with the VWAP and so forth. So for example, like here, the moving average is carried over from the previous day and then crosses up above the VWAP, and it looks like it crossed up approximately, what is this, about a little after 10 again at that point. So yeah, and as you might imagine, with moving averages, we can use any length combination, whatever the case may be, so extremely versatile. Some other types of indicators that I also found that a lot of people like to use, for example, one that I saw was, for example, like an RSI, like plotting an RSI on there, and also maybe looking for patterns of the RSI in relation to the prices as well. That's an idea. But one that I think actually looks pretty good that I didn't see anyone talking about, but I just kind of was goofing around and finding it myself, but just looking at the MACD in relation to the in relation to it as well. So I'm gonna go ahead and just plot the MACD up here at the top. And what you'll notice here on United Health is that the MACD actually became bullish on Friday the 2nd. And then with the prices then opening up on Monday the 5th, you'll see that the MACD is still bullish at this point. So if you want to use the MACD, for example, as a confirmation type of signal, this actually could be a pretty good combination. And as you can see, the MACD remained bullish all the way up until either like this point or approximately about here, which is about 11:30 in the morning that day. So that would be United Health. Another one that I thought also looked like it could be a pretty good combination was on McDonald's. And you can see that here on McDonald's that the MACD actually became positive here at around 10 in the morning. Again, this is the time that all these different securities, for example, were trading off, then crossed up above the VWAP. And at that point, the prices on McDonald's came back to the VWAP before they took off. And if we were looking for a combination and using something like the MACD, we actually could have been bullish during this section. And if we also wanted to use this as a possible exit as well, the MACD actually would have gotten you out somewhere around 12:30, which had been very, very close to the peak of this move here on McDonald's on Monday. So I think the really neat thing about this is that there's a lot of different ways that that people can use this to help to come up with some different ideas that could possibly work for you as well. So nice thing is there is a lot of information on the internet, for example, on the using this indicator. So I'm going to give you a couple more examples here as well. So in this chart here of Honeywell, you can see that we've got some really nice patterns here where the prices are moving up, they retrace back to the VWAP, they move up. Again, these traded a little bit lower, moved up, and then traded off again. Another style of analysis that every MetaStock user has is that if you double click directly on your candles, you've got 12 different styles of charting here that you can work with. And one that I like that actually is, I think, super clean is this one, which is called the Heikinashi. If you select this, click on OK. The nice thing that I like about this is, in my opinion, this almost makes the patterns jump out at you. So the thing about Heikinashi charts that everyone has to understand if you're interested in looking at these charts is that, first of all, there's never a gap in a Heikin Ashi chart. How it works is that they average the prices of the price bars. And why that's so important is because you can't trade specifically off this price, for example. This is not the actual price. This is an average calculated price using the Heikin Ashi method. But the advantage of this is it makes the trends so much clearer and so much easier to see. So, for example, like if I wanted to use this type of analysis, and I also want to see maybe a candlestick chart side by side, one thing I would probably do myself is I'd create a multiple chart template so I could very quickly open this style up and then swap through my different charts, for example. But just if you would just want to see a second chart next to the one that we currently have open, a quick way to do that is go up here to Window, click on New Window. So that's Window, New Window. Your screen will flash for just a sec because it just opened up a duplicate. And then what we can do is we can then select one of those price bars, change this back to a candlestick, click on OK. And then up here at the top, if I click on this button right here, which is a column button, this will allow me to see my two charts here side by side. So in other words, as I was saying, I'll kind of zoom in here just a little bit. So here's our Heikin Ashi chart. And if I look at the closing price here on the 5th, you'll see the close is 214.26. Now, if I go over here to an actual candlestick chart and I look at the closing price, you'll see the price is 214.13. So it's very close, but it's not exact. So that's why you have to be careful, is that if you decide to buy or sell based off of a Heikin Ashi chart, it's obviously extremely important that you know what the actual prices are. So pull up just a regular chart and that'll tell you exactly what that is. So another thing, and one last thing that I just want to show you just real quick that I've seen a number of people do as well is I'm going to open up another chart here of Goldman Sachs. Let me jump down here to, if I can find that, there we go. Let me open up Goldman Sachs here. Is that for whatever reason, there's a number of traders out there that like to use the Heikin Ashi indicator, but in addition to placing the Heikin Ashi on the current prices, they also like to see the the VWAP indicator plotted on a previous time period as well. So for example, again, our VWAP indicator is starting on the opening bar here on May 5th. But what I want to do is I also want to plot a second VWAP indicator starting maybe on the 2nd, which should have been Friday. So again, I'll go up here to my indicator quick list. I'll type in VWAP and I'll grab the VWAP indicator, drag it on my chart. And this time I'm going to go to May 2nd. Oops, May 2nd. And I'll also change the color of it just so we can tell which one is which. And we'll click on OK. All right. So here's the VWAP indicator that started its calculation back on Friday, May 2nd. So this is the calculation of the VWAP during that time. And here you can see it's carried over through the current bar on May 5th. And here you can see that the previous values of the VWAP, in this case, for example, actually acted as a really nice level of resistance here for this chart, along with our current VWAP, which actually acted as a very good support level on this chart of Goldman Sachs there. All right. So that's what I've got here for you. I hope that that's helpful. I know that that's a lot of information, and what I would like to do now, and I just want to give you a quick overview of the services that we offer at Learn MetaStock. If you're not familiar with Learn MetaStock, I just want to talk a little bit about our services so I can help you out there. But at Learn MetaStock, again, our game plan is just to help you out with your program in whatever way that we can. We do it a lot of different ways, but when you go up to the Learn MetaStock website, you'll be able to actually see some of the different categories that we have here. So for example, one thing that we do is underneath this live classes section is we do 3 live classes per week. And these classes, of course, rotate every week, but you'll go up here and find out your schedule. And then, of course, then you can always join our live classes when they occur. And the nice thing about the live classes is that you can always come in, you can ask your questions, and it's just a really good way to get your questions answered very quickly. Where people spend the majority of their time, though, is inside of this tab right here, which is called the video library. And inside the video library, we have well over 100 training videos and so forth that that you can use in any way, shape, or form that you want. But kind of just getting started with it, one area that I highly recommend everybody do get started with our training is to start here with this getting started section. Whether you're new to MetaStock or you've had MetaStock for years, whatever the case may be, I get a lot of customers who've had MetaStock, you know, for a long, long time, but they had no idea, or they were only using a very small fraction of it, and they wanted to learn more about it. And that's the kind of stuff that I can really help you with, to say the least. But the area that I recommend everybody go to, you know, whether you've had MetaStock before or not, is to start off with the introduction to MetaStock Part 1, go to the Part 2, go to the next step into MetaStock, and then if you're ready, then of course you can take a look at the MetaStock Advanced. And what's nice with a lot of our training videos, our bigger training videos, is that when you actually select the video, for example, and you go through it and you watch the video, a lot of our training videos will also have quizzes. And if you click on the quiz, this will give you, or basically help reinforce what you learned inside the video there. But let me go ahead and go back here. But in this section here of the getting started, once you've kind of gone through the basics here and you get a pretty good feel for, you know, in general how it works, and you need some quick refreshers, just scroll down the page here a little bit and you'll see that we've got a number of just short videos just on that one particular subject, whether it's, you know, working with your symbol lists, you know, different styles of charts, working with trend lines, whatever the case may be. And if you ever have a question about something, at the very top here, you can always do a search looking for the different items that might be of interest to you. Now, if you can't make our live classes that we do on Tuesday, Wednesdays, and Thursdays, we always record our classes and we put them up under we put up the previous week's classes underneath this section called the live class recording. So you can always see them that way. But as you can see, we've got a lot of different categories depending on what you want to learn. So, you know, one area, for example, like if you want to backtest trading ideas, there's a fair amount to learn about backtesting. And of course, we can help you with that. One of my favorite tools inside the program, though, is the Explorer. The Explorer is an extremely powerful feature of the program. And I know a lot of people buy the program specifically for the Explorer just because of its versatility. And I can walk you through all the different tips and tricks and hopefully get you up to speed with that extremely fast there as well. And if you want to get more into formula writing, we have a number of classes just on formula writing, but probably one of the most popular sections that we have here is this trading strategies. And what we do here is we'll take a trading strategy from a book, a magazine, whatever the case may be, and then we'll actually show you specifically how to use that strategy inside of MetaStock. And what's really helpful for a lot of people is that we also create formulas for these as well that you can download directly into your MetaStock program. So for example, like if you want to see our class on the super trend indicator, you go to the video and then right down at the bottom of this window, you can click on this link right here, and this will install all the formulas that we have for this particular trading strategy. And with a lot of our trading strategies, you know, we'll create a system test, an exploration, expert advisor, custom formulas, all kinds of things. So, I mean, if nothing else, we can save you a massive amount of time and effort, you know, through our training there. So that's what I've got here for you today. I hope that that's helpful. Again, I know it's a lot of information, so I'm gonna go ahead and turn that back over to Jeff. And just one quick note before I do, and that is, if anybody wants to see any symbols or whatever, you know, plotted right now, I'd be happy to take some. Looks like there was a lot of requests for Ken there in that last webinar, so I'm happy to take any requests for some symbols there. And also, of course, if you have any types of questions, make sure and let me know. Just send me a message in the chat window. I'll be happy to help you that way as well.
Steve says he likes Hikinashi. It smooths out the charts. Smiley face.
It really does. I mean, as I was showing you, for example, on that last chart of Honeywell, for example, that, you know, some of these moves, I mean, when you plot them in a Hikinashi type of format, for example, I mean, it just really kind of can jump out at you, almost like what those trends are, for example. And depending on how you're using it, I think it can be really, really beneficial, to say the least. And of course, everybody has access to that.
Very good. I don't see any symbols coming through. Maybe Ken got them all.
Yeah, I know there was a ton through Ken, that's for sure, but that's okay. You know, one of the nice things too, though, is that if you want to give this a try, then you can apply this to any time frame, any symbol, and it's pretty straightforward about how it works. There's really only a few things to learn about it, but you can create just about any type of combination that you can imagine.
Brad says, thanks for your efforts in bringing VWAP to MetaStock, Kevin.
You're more than welcome, Brad. Thank you. In fact, if this is the Brad I'm thinking of, I think Brad is the one who made the suggestion for me, so I would thank him for the suggestion.
Cool. Well, I'll thank both of you then. All right. Let me. I think. Oh, Mike wants to look at HWM.
All right. Let's take a look. Oh, first of all, let's go ahead. I need to close down this chart. And we'll go to our power console and we'll put in our symbol of HWM. Is that right? HWM?
HWM, yes.
All right, let's take a look, see if that comes up. And let's go ahead and place the VWAP indicator on here. We'll drag that on here and we'll put that on for May 5th and take a look at that. And we want to merge it. Oops. Oh, I'm sorry, not May 5th. Today is the 9th, isn't it? Let's try the 9th. There we go. That might work a little bit better. So this is actually a pretty good example of where, again, the prices actually traded off right from the beginning. They retraced back to our VWAP, and it looks like we're going to have a bearish day, but they traded above it. Then it acted as a level of support. You know, and this is what we see over and over again, where these different indicators will at one time will act as an area of resistance, and then when the prices flip around, they'll act as an area of support. But the nice thing about this indicator, this is a dynamic indicator, so this is going to be changing, you know, as more and more data is coming in.
Murray wants to know if Netflix looks like a good short setup.
Let's take a look. There we go. Yeah, actually, this is another situation like kind of what I was talking about before. We had, again, a sell-off. We had a pullback to it. It traded off, and then it went up. And here's that section right here where things are really just moving sideways. Not a lot happening, but it definitely looks like Netflix is selling off here at the end.
Oscar wants to know what would be the main benefit of having two VWAPs on the same chart?
Well, it depends. What I've seen, again, is like I say, a lot of people, what they like to do is they like to see the VWAP start from an earlier time period. So for example, so we've got this one on the 9th. Let's go ahead and add a second one. We'll go ahead and grab it and we'll put it here on our chart. And let's make this for May 8th, for example. And let's change the color. And let's do maybe like something like that. We'll merge it. So a lot of times, well, what I've seen is that a lot of times what the reason why they like to do that is because sometimes the previous VWAP will act or help support or show another level of either support and or resistance. But my question, I have the same type of question. The point being is that the VWAP is designed to work off the very first bar of that trading period. And anything after that, you know, for example, when you go to the next trading period, for example, you've got a lot of other information that's being calculated into that indicator, and that indicator is just going to get slower and slower and slower. So all I can really say is that I've seen a number of different people, and they will place numerous versions of the VWAP indicator, you know, on the chart covering different periods. And again, I guess my guess would be that they're just using it to see if it's possibly showing another level of, again, support and or resistance that maybe you're not seeing with the initial one.
Mike B wants to look at Pony.
Okay, what's the symbol on that?
Pony, Pony, like a horse, like a little horse. There's a
Pony.
dad joke that I'm trying to remember. That's the punchline. Or a dad joke. I'm trying to remember.
Pony, Pony. I don't have a symbol for that. Is there PON? Is that the name of the company, or is it Pony?
It might be. I don't see a symbol for it either.
I don't see a name.
Yeah. I think we move on because if you have a symbol, might be, let us know. Chris
Yeah.
would like to look at LZMH.
LZMH.O. Okay, that's it. There we go. All right. Well, this one's, as you can see, pretty flat. Let's kind of zoom out here for a second. So we obviously had a big sell-off here at the end of the market yesterday, but this is one, if we're looking, for example, like at today's, let me go ahead and remove this previous one. We'll just kind of zoom in on this one. You can see that this one is one of those that's pretty flat. This one, me personally, I'd probably steer clear of this one myself. You know, when I see something just kind of moving sideways like that, you know, what we like to see, for example, like the patterns, I mean, the more common patterns, like for example, like if it sells off like this and it moves up, we're looking for a retracement back to here and then a move up, or vice versa, a move down and then a retrace back up and then a move back down. But again, I don't see a lot of movement in this chart at all myself. But
I remembered the joke. Why did the pony ask for a glass of water?
Why did the pony ask for a glass of water? Okay, got me.
He was a little horse.
Jeff, you're killing me.
Oscar says thank you.
Oh man. That's good.
I think that's it for the. Let me look at YouTube again real quick. We don't have any thing there. George says thank you. God bless you. So.
Oh, well, thank you.
I want to talk a little bit about the offer, and I think we'll wrap up for the day, Kevin. Thank you so much for finishing us up today.
Yeah, thank you. Thank you very much for having me. I appreciate it.
All right. Very cool. I'm going to go ahead and kind of make myself the presenter. We'll go ahead and show this. And again, if you are looking for something that's going to be, again, MetaStock's a huge tool. We've been working on it for decades, you know. Power Drill is going to be as good as you know how to use it. And learn MetaStock is such a good way to actually learn about it. So with it, just some of the things that are on there. We've got 21 basic MetaStock videos. There's videos on the expert advisor, the system testers, videos on stops. You can get a hold of the volume weighted average price, but that's not it all. There's like 21 complete systems, 9 different templates, 62 different indicators. And the reason I kind of like the way that Kevin does it, not kind of, that seems like it's diminutive. The reason I like the way Kevin does it is he actually talks about, like, here's a system, here's kind of like the ideas behind it, here's some of the pros, here's some of the cons. It's a very objective way of kind of presenting them, and then he gives you all the systems, the formulas, and the templates, and it's all just included. So you get 21 complete systems that you can download. You got videos and training for them, all that kind of stuff. Normally it's $99 per month if you're a new customer of Learn MetaStock, or even a new customer of MetaStock. This is a great thing to pair with your extended trial. If you buy a month, we'll give you the second and third month for free, just like we will with MetaStock. You can do this at metastock.com/learnmetastock. You can also call us at 800-882-3040, or you can go to metastock.com/saleschat. So very, very good. Again, when we train our employees on MetaStock, we use Learn MetaStock. I think that's a pretty good testimonial. So metastock.com/learnmetastock 341 will get you there. As we close, I want to actually, and I don't have them all here, so we're going to go ahead and also just talk about all of the sponsors. I do want to say thank you to the CMT Association, cmtassociation.org, for sponsoring the events. They do a great job. They're going to come in, and tomorrow we have another great day. I hope you can join us on Saturday. We have some really good speakers again tomorrow, but we have somebody from the CMT. They're going to talk about how having a CMT can help you if you want to get a job with a bank, if you already work for a bank, you want more assets under management, if you want more responsibilities. And it's I guess it's kind of expected because they are technical analysis, but they have a lot of numbers that are fairly impressive about how much that'll help with that endeavor. So cmtassociation.org, thank you for the support. Also want to say again, thank you to Stocks and Commodities Magazine, a great partner of ours, a great magazine, www.traders.com. I'm not even going to try again. If you haven't yet joined the community for the Traders Forum, come on in. You can chat with other traders. You can learn about the markets. It's a community of traders designed to help traders. I'm looking to very soon get to that 1,000 mark. Help me get there. www.thetradersforum.com. Any of the specials, including Learn MetaStock, including any of the other add-ons that we've talked about this week, you can get at our website, metastock.com/conf promo. Want to encourage you, if you have any questions, our sales reps are very, very good. They're very knowledgeable about the software. They're very helpful. You can call them at 800-882-3040. You can go to metastock.com/sales chat or metastock.com/conf promo. We have another full day, but I want to say thank you to all of the speakers that we've had in this week. I'm losing the ability to talk, which isn't uncommon towards the end of these 44-hour things. We'll do our best tomorrow. I want to thank all of you guys for being here. I hope it's been helpful. I hope you've learned some good stuff, because that's really the main goal with these conferences. And I would encourage you to try MetaStock. So with that being said, thank you for being here. Stay healthy, stay well. I'll see you in the morning, okay? Murray, yes, you are registered for tomorrow as well.